knuckleheads. Happy Thursday to you both.
Hello.
Woo. Hola.
You could have matched us in all the blue.
I knew I forgot something.
See, I don't know.
Knew it.
I'm missing my tasty.
Oh, yeah? What is it? What happened?
I don't know. Somewhere.
You got off somewhere you weren't supposed to be?
I got lost in the move.
No, I left one at the lake house at Lucas's bachelor
the lake
party.
house.
Oh, it's your
did
lake
you? Oh, I had
estate, your
no
country
idea.
estate.
At the lake
lake
house.
At Lucas's bachelor party.
Oh, yes. Then it'll still be there, of course. The lake house.
Oh my god.
I mean, you did set yourself up.
Yeah, that was pretty easy. Pretty easy.
Wow.
How are you, Bats? How are you guys doing?
Not good.
Oh,
Not good.
no. What happened, girl?
There's nothing worse than going to a 9 p.m. start hockey game to watch them lose 6-2.
That's your own fault.
Yeah. In bed by 11:45. It was a rough one.
That's
And I had to be
brutal.
security. Gets a little rough up there.
You had to be security?
Yeah, they give you a yellow jacket. They make, 3 people in the stands have to be security. It was my
So they make the oldest dad be security?
Savage.
That is so savage. That was so rude.
Did they
I don't
give
know
you-
if I'm a father or
Did they
maybe
give
a
you a
grandpa.
Grandpa, yeah.
Actually, maybe a young grandpa.
Did they give you a whistle and they're like, you're helping?
What are you security for?
They just, in the stands, they just put people up there. There's never any problem.
For the families?
Yeah.
See,
Some of the families get a little rough sometimes, you know what I mean? So they have to call some voice of reason.
yeah. You're like Glenn, like our.
I'm like Glenn.
Yeah,
I'm
yeah.
like Glenn.
You're
That's
like
correct.
the honorary
Fire
security
Marshal
guard.
Glenn.
Yeah, you're the
security bat.
Yeah.
You ever a hall monitor?
No, but I was a street
Crossing guard?
crossing guard.
Yep, speak
Yeah.
boomer.
Yes.
You were a street walker? What?
So you can get out 15 minutes early from the class. I had to put on the white sash, go out there,
That's
post.
nice.
Yeah. Yeah, that was that guy. Yeah. Remember, I wanted to be a
Do you have like your little knee socks on and your little loafers? Like a little bit. I've seen your baby pictures. They're really cute.
Did you have me mistaken for somebody else? No.
You didn't have like little knee socks? You didn't have like
Yes,
little...
of course. Everybody did
See?
at that age. But now I was in junior high. White tube socks by then.
Okay. Vinny Barbarino.
And now your brother's new thing is he's jockeying. He doesn't get his license until the end of January for his birthday. But he's now jockeying that he wants to go skiing up to Wilmot and stuff like that, which is like a 30, 40-minute, 50-minute ride, depending on how traffic is and stuff like that. I've watched him.
Highway traffic, is that okay?
No, he's probably going to have to take the streets all the way there, which will be a problem. And we have Life 360 and all those other things, so we can watch him, kind of thing. So that'll be a problem for him. But even more than that, this genius says he's going to sleep in his car so he can get there real early the next day.
First
Yeah.
chair.
Yeah. So you did it. I go, you didn't sleep in a 32-foot RV. Like you wouldn't do with heat and air. How are you gonna do it?
He's too soft. I can tell you.
No,
right
so
now.
this Friday, I said, you know what? Here's what I'll do to you. I go, you can sleep in my car outside on the driveway Friday night. You make it through the night and do whatever the hell you want. I go, and it's not even going to be like freezing out. Like I go, how are you going to keep yourself warm? Because I'm not going to let you have the keys.
I could help him. Like I have the tools and the abilities, but he's too soft.
Yeah, he's way too soft. Way too soft. Gonna sleep in the car.
I don't think that'll work, but
I see a $500 sleeping bag charge in your future.
yeah.
I see a $2,500 REI trip in your future.
A triple A call for a dead battery in your future.
Oh man, I see him. I see him running the car in the garage with the door closed.
I don't have to worry about it. The other parents won't even let them drive up there, so I don't even have to worry about it. But I would like to see him sleep in the car for a night. See how
I mean, it's not a good way to get there. Like Nikki said, if he's got to take the highway, like that's stop and go. Like it's not for the faint of heart.
Yeah,
like,
yeah.
I told you the RV situation. You were too early.
Yeah, I know.
Because I tried to explain that to you.
I know. I don't.
What do you mean too early?
Because like Vinny was too young. I tried to explain to my dad that in about 6 to 8 months, Vinny isn't going to want to hang out with you anymore.
Oh, don't say this anymore.
What
is this? You ruined my day.
His thesis was, I'm going to get this RV. Me and Vinny are going to take weekend trips to go, fishing and camping, and it's going to be amazing. I was like, Dad, in about 6 months, Vinny's not going to want to spend a minute with you. So he's not going to be the one.
He's close to that now. You were just
would do that, though. I would do that. Smoke a cigar.
He's crying out for
have
love.
a nice visit. Yeah, I was like, luckily you do have a son that would love a fishing trip. Maybe go snowmobiling. Yeah,
crack open a cold one with the boys.
Yeah,
Ice fishing.
smoke a cigar, ice fishing. It'd be beautiful. But that wasn't.
It wasn't in the cards.
That wasn't in the cards. But I tried to explain that. I was like, he's about to be. He's gonna be getting his license. He's not going on fishing trips, Daddy. He's going to be taking the car with, hottie girlfriend to Wilmot and sleeping in the car. He's not going to be with Daddy, but it's okay.
Wow.
Yeah.
You're like looking at Christmas future.
I know. I tried.
Good.
That's all right. Yeah, I never got that invite.
Cats in the cradle and the silver spoon.
Little boy blue and a man in the moon. When you coming home, son, I don't know when. We'll get together then.
We'll have a good time then. Yeah.
Ding, 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 ding.
Oh, my God. It's too early. Oh, man.
It's good times. Get in. Yes. Well, it was a late night for you, so you need a Celsius. What'd you get up to last night?
I'm good. I got my whole carafe.
Carafe.
Yeah, I'm
go old school.
Number 2 over here.
Yeah. Old school.
Yeah.
Only boomers drink hot coffee.
Well, I tapped the keg here this morning. Not that kind of keg. The
nitro cold brew.
Cold brew, yeah. We got 1 cup out of it. It's tough morning.
Yeah.
Tough morning.
What'd you get up to last night?
Nothing much. Made some soup.
Ooh,
yeah,
it's soup season.
You made that? Should be sent the picture of it. He's very I
want to see.
Stewart,
what kind of soup?
So it was like
Julia Childs, I should say. Sorry.
No, Martha Stewart.
She cooks too.
Oh, Martha. Martha can do everything.
Yeah, she's out of jail now.
Put some respect on Martha's name. She started as I'm going to break into so in Connecticut with her husband.
I watched the documentary.
Right, yeah. So she started as a caterer. So that was her first business, but she can cook she can make wedding cakes. She can bake profiteroles. She can cook a roast beast. Roast beast. But Martha's got it like that. What kind of soup did you make?
Good.
It looked, yeah. I had artichoke too.
Yeah, those what you wrote. TJ Trader Joe's. Are they frozen?
No, I got TJ's. They have their seasonal butters. There's 3 of them. The one that I got it's like a compound butter, and it's got olives and garlic and rosemary and all sorts of spice.
In this economy, you're able to do that. Amazing.
Trader Joe's.
You know what?
Oof, I churn my own butter now from the spoiled milk.
As he talks about the car he's going to get his 4th child, 5th.
All right, so continue. But you bought the artichokes fresh from TJ's.
Yeah. I just steamed the artichokes.
Butter.
Yes. So this is like a compound butter at TJ's. You melt it down. It was so good.
But again, what kind of soup?
So the soup I made was like a roasted tomato soup. There was chicken in there, onions, what else? Like spinach, basil. It was just like a hearty little winter soup. Yummy. It was delicious. Yeah.
It does sound good. Is it a clear broth or it's chunky like a tomato
it's kind of like chunky, like a chicken soup, but with like kind of an Italian spin. Soup.
Okay.
Yeah. Onions, roasted tomatoes, basil, spinach.
I got you.
Had the artichoke on the side.
Very
chicken in there.
That sounds good.
Yeah. Gnocchi was in there. We put
not the gnocchi
in there. Yeah. So it was a nice little soup. Nice chunky soup. Yeah. Hearty for the winter.
Artisanal.
Yes. Yeah. Had the sourdough. You can sourdough. You could dip in there. Yeah.
Locked and loaded.
Yeah.
Actually, does sound good.
It was nice. Prosciutto. Little,
So the
little prosciutto.
Very pretty.
Yeah, a little crispy prosciutto on the top. Yeah.
Did you microwave the prosciutto?
No, baked it.
Oh, bake. Well,
Yeah.
that's good.
Yeah. I was thinking of frying it, but
I know, yeah.
bake is easy though.
Yeah.
Done.
Do it in the air fryer too, probably.
I'm not a big air fryer guy.
Oh, I got converted. I got one for Christmas a couple years ago, and I was
great.
like, I looked at my parents and I was like, "What is this?" I was
Yeah.
like, "I don't want this." But
You
then
got a
I took
metal
it
one,
home.
though?
Now I have the saddest one. I have the one for sad single ladies. It's the smallest air fryer, but I love it. You could do so much in there.
I've tried to get the plastics and the bad stuff out of my cooking.
There's no plastic in there.
You got metal container and
Oh yeah, it's a metal container, and then I have like metal glassware, or I'll just put stuff
Yeah.
right on the plate that's in there. But no,
Some of
there's
those
no
air
plastic.
fryers, they got like they're like the forever chemical bad ones.
I mean, I'm full of chemicals.
You gotta be careful. Yeah.
But
it'll stick zins in his mouth and vape. And
Nicotine is that's a different story.
That's
story.
from
That's
nature.
good. That's
Yeah,
good.
that's
just
nature.
like a hug.
Right.
Coffee? I mean, come on.
Coffee,
Yeah.
maldehyde, sure.
Yeah, that stuff's fine. That stuff's fine.
Yeah,
I get
it's
it.
good times.
Pick our battles. I get it.
Good times.
You're the last one left to share what you did.
Yeah, what did
last
you
night.
do?
I went to the gym last night, which is not exciting in itself, but it's like upper day for me. So, chest, shoulders, back, whatever. And so I'm on the
Chest looks bigger today.
Yeah, thank you. I do have, this is like a nice pump this morning. I am sad because it's winter and I'm like, I got to cover up my arms. And so I figure that out. Anyway, so I'm on the assisted pull-up machine. I can do 4 pull-ups though now, like unassisted.
Great. I remember you couldn't do one.
I couldn't do any, right? So I can do 4 now. But anyway, I'm on the unassisted pull-up machine, and then next to me there is like just like a regular pull-up bar and like a tricep dip bar, and you could do like knee raises or whatever. So then there's a guy, and so he starts using that one. So I'm doing my assisted pull-ups. And I look over, and the guy next to me is upside down. And I'm like, my guy. I'm like, what are you doing, Spider-Man? So he's doing like reverse tricep dips. And I'm like, are men okay? I'm like, what are you?
Body weight. Yeah.
What are you training for?
Right.
That you're upside down. Like,
the city, right?
so I just started laughing, and because I had headphones in, but I just started laughing, and I was like, what are you?
So do you dress for success at the gym?
No, I dress like I wear a hat.
You can't do that. You can't do that. You got to
wear
dress
a
for
baggy
success.
shirt.
I got to teach you everything.
No. No.
I got to bring you to my finishing school. Not right. Not right.
Whatever. Anyway.
The chat is saying that you're Dr. Evil, Vinny is Mini-Me, and I'm Scotty from Austin Powers.
That's pretty good.
Pretty good. That's pretty good.
Spend time with just like, come here.
Yeah.
Bring it in. Bring it in. Hey, we got a great show for you today. A lot of good stuff headed your way. It is a thrilling Thursday here on Tasty Live. And at the top of the 8 o'clock hour, fan favorite, trades from the research team, the world's greatest financial think tank, bringing their trade ideas to the bat. So that's going to be very exciting. And then at 8:40, we have Mr. Dylan Radigan for Hear Me Out. What are you guys talking about with Dylan today?
It's a surprise.
Government's open.
Surprise.
Government's
Surprise.
open.
Yes.
Surprise. No, government's open. So I'm sure Dylan has thoughts, feelings.
Yeah, I've been listening. I saw Dylan on like Instagram. He's become a philosopher now. Very interesting. I can't wait to talk to him about this.
Okay.
He'll be on at 8:40.
Okay. And then 9 o'clock for market measures, flexing zero DTE management, part of our zero DTE series. What does that mean, flexing?
So we're talking about like managing both sides.
Yeah.
So like put side separately from the call side.
Gotcha.
So it'll be an interesting one. And then next week we're going to talk about what we've been doing, the 20 delta iron condors, varying wings, varying profit targets. We're going to take a look and see if that data is good because I don't know.
Okay.
But it's been working for us.
It's been working good.
Works until it doesn't.
Yes.
And then we have live from the trade desk, Quentin and G Money coming in. Quentin counting down all the top
Fire
trending.
Marshal G Money.
Fire Marshal G Money.
Did you not know that?
I did. I saw it. I saw it when he was on the show in his little
Respect
vest.
his authority, please.
He's got just the cutest little face.
I know.
It's so hard.
Did I look like that one point?
No,
was I cute and nice like that?
You had a 5 o'clock shadow in the 5th grade.
Yes.
I did.
Yes, he did.
Yeah.
Yeah. Your brother's shaving every day now.
Really?
He doesn't need to, but he's doing it.
His face?
Yeah.
Getting like razor burn there because it's just.
But he went this last thing. He goes, look, you can see hair, right? You see it, don't you?
Aww.
Yeah, it's there. I see it.
He's shaving his armpits?
No, I said the same thing. No, he's shaving his face, but it was just showing how
manly and
manly he is.
Manly.
Yes.
Pursuit.
See, when I was younger, it was when you were growing facial hair, like it was like manly. So like, you tried to keep it.
Yeah, right. I know. I kept mine for 18 years. It's how long it took me to grow my first mustache, all 18 years.
I don't know. I don't like how every Gen Zer looks like a minor league baseball pitcher, though, now. Like, I don't like
That's because the minor league pitcher, I mean, they are that age, but yeah.
I just know it's just it's the wiry mustaches for Gen Z for me. Like, I'm just like, no. Because I came of age in the era of Mr. Tom Selleck. I became a woman.
Tom Selleck.
Now that is a man. That is a whole ass man right there. Anyway, lost my train of thought. Yeah, Quentin and Glenn.
Tom Selleck, was he 100 now?
Quentin and Glenn, you just jealous. That man is aged like a fine wine.
He's 80.
He could get it. I want to see his Magnum PI.
I'm done. I'm not saying anymore.
And then also today, Mike and Jamal are going to be live at 11 a.m. Options Trading Concept live from the SIBO, Double the Live. It's the second week that the
Double
boys,
the electric.
Double the electric. It's always electric when the guys are live from the floor of the SIBO. So that's going to be at 11 o'clock. But anyway, in the meantime, in between time, you guys want your daily dose?
Sure.
Yeah, hit me with my theme music. Let's go.
Our leading story. Breaking news.
Across the wire.
This just in.
Top story. Just in.
In today's headlines.
This just in.
Breaking news.
All right, everybody. Today is a thrilling Thursday. It's November the 13th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Earnings.
For today?
Yes.
AMAT. That's really about it.
Yeah.
Not very interesting. Getting near the end of it. I mean, we are near the end of it. A few that are left, but not many.
Nikki, I don't have Disney. Disney came out this morning. What did it do?
It is down about $6 now. It's at 110. Should work out nicely.
Okay.
Down 6.5. Yeah, it was down around 4 earlier this morning.
Just about the expected move.
Get it together, House of the Mouse.
Yep.
Hey, getting to the first headline of the day. The House passed its record funding bill to end the record-long government shutdown. President Trump signed it last night. So the government is reopening today, slowly but surely. But yesterday, interesting news. The White House says, I'm sorry, I don't mean to laugh, but it's funny. The White House says that October jobs and inflation data may never be released because of the shutdown. Apparently, inflation data is like a duck pin bowling machine, and there's only like one guy that can like repair it. And like I was like, how is the data just gone forever? Like it's data.
It sounded like the dog ate my homework.
Right.
Like,
it was just like
sorry. Like
what happened was I was like, but you fired the lady before this all happened.
Right now, you're on a need-to-know basis, and you don't need to know. Is what he said.
So maybe if we never report on the numbers. But my question, though, is the Fed is supposed to meet next month, December 9th, to discuss rates. They're missing some very critical economic data. What does that mean maybe for a rate cut?
They'll have it, but they just won't tell you about it. You'll be fine.
Yeah, they'll have some other
The
number.
market's going to dictate it. You got bonds sitting at 117.09, down 11. They really haven't moved since the last rate cut. They'll probably hold rates steady if I had to guess right now.
Sure.
Yeah, the projections have actually moved.
You're looking at the CME site?
Yeah, so the Fed Watch tool has gone from about a 62%, 63% probability of a 25 basis point cut to now basically 50-50 between no cut and 25.
Okay.
So, maybe that is skewing it. But does anybody really believe the inflation data?
No, it's all.
Is that?
But it's something. I mean, you
Voodoo
believe
economics
what
anyway.
you see with your eyes every time you go out, and it, like Mike says, every time I leave my house, it's $300. I was like, where are you going?
He must be getting that. What kind of butter did you call it?
Compound butter.
Compound butter. He must be getting a lot of compound butter. Wow.
Hey,
I didn't raise you like this, son.
in other news, let's
It was
check.
like $3.
Let's check around the world and see what currencies are doing now that America is back open for business. Yen did start out on the back foot. I don't know if that's changed this morning.
It's unchanged, but on its
Aussie
lows.
dollar rose after jobs data.
Yeah, yen's unchanged, but on its lows. Bonds. British pound is up a little bit. The euro is up a little bit, which means the dollar is down a little bit. Euro and pound have all had a little bit of a rally over the last week or so, which would be weakening the dollar.
Yeah. I'm short a couple euro pairs. I'm short the euro Japanese yen, the euro British pound. Those are Tasty FX products. And then I'm long a couple dollar products. I'm long dollar against the Swiss franc.
Oh, the Swiss franc.
And the dollar versus the Canadian dollar. And then I'm long the New Zealand dollar against the US dollar. So I'm a little bit all over the place. But really my core is like short euro and then long dollar pairs against non-euro
Pretty good.
Got it.
currencies.
Mm-hmm.
I like it.
Yes.
Here's something funny, like no one's talking about. 2 weeks after a triumphant announcement by the Treasury Secretary that China's back all in to soybean exports, China's like, no, we're stopping again now. So China has a soybean glut because I love a petty queen. So China was importing soybeans from everyone except for us, but now they have too many soybeans because they were doing it mainly just to be petty. But now it's like a real problem. So they have to like stop importing soybeans. But where they're going to stop is like the last place they were importing them from, which happens to be America. Let's talk about the softs.
Soybeans on a tear continue their rally well above the 11.20 range that I said it was never getting to. It's 11.41 right now, continuing its rally. Wheat up is unchanged, down small this morning. It's up relative, but it's been going sideways. Corn is up also, but not like soybeans. Soybeans have just been on a tear.
Chinese state firms may be waiting for margins to recover before making large-scale purchases. That's from a Beijing-based agriculture consulting company. So do with that.
I've not traded a lot of the ags.
No, me either. You
don't-
get that from your father. I don't trade a lot of them either.
Need to bring Westwater on.
Yes,
somehow.
yes,
We got to
yes.
incorporate him every once in a while.
Get him here. Get him in here.
He's got our deep dives in crops and weather forecasts.
Deep into the weeds.
He gets in the weeds. It's amazing. Natty Gas. He's a big Natty Gas guy. But you can call him Corn Man, not Soy Boy. Okay?
Oh, hey.
You do not go that route.
Since you mentioned it
There's
has been
Corn
on a
Man.
tear, I know somebody wanted us to sell it, I think, yesterday.
Yeah, we did a little short call.
Yeah, it's down small this morning, but it stopped going up for a moment. We'll see how that
Yes.
goes.
Volatility high.
Well, speaking of oil and natural gas, I'm going to segue into this. This is interesting. If there's any question about whether data centers are driving the global economy, a new report from the International Energy Agency should dispel any doubts. This year, the world is going to spend $580 billion on data centers. That's $40 billion more than people are going to spend on new oil supplies. So we're spending more on data centers than we are on finding more oil. I was just surprised. I was like, that's a fun little
Yeah. Okay.
fact.
Yeah.
Oh, we were going to drill, baby, drill.
Oil's up 50 cents, just under 59. It got down to flirting with going under 58. Now it's flirting with going over 59. That's the whole range for the day, about that dollar.
All right.
$1,000 range. So.
Hey, sad news to report. The last penny ever was minted in Philadelphia yesterday. Pour one out for the penny. The last penny was minted at the U.S. Mint in Philadelphia. The penny passed away yesterday after a prolonged illness. It was 238 years old.
The penny passed away.
But my grocery store does have a sign. They're like, hey, due to the penny shortage, they're like, if you're paying cash, just prepare yourself. And I don't pay cash for anything. But well, I'm a millennial. I just
No, I
use
know.
my phone.
I don't. I was
use
just
my
you saw me
phone.
smiling at you.
I know.
Yeah.
I was like, I just use my phone to pay for
We're-
stuff.
we're actually-
They're just going to round up.
Yeah.
That sucks.
Yeah, and then 5 years from now, the
No more
nickel will be
nickel?
gone, and they'll round up from there, and then it's a dime, and then
Well, if you have all digital payment, then it doesn't really matter.
yes, we actually are the boys for our golf league. We're bringing back dollars, and we're doing all of our bets, our friend bets. We're doing dollars at the event. You don't have dollars, you ain't in.
So you got to pay up.
Dollars. Yeah.
Because the government tracks your Venmo transactions?
No. We're doing it just as, we want dollars. We want to bring back the dollars. I want to feel that. I want to see that cash.
All right.
Yeah,
like a stripper in South Beach.
No more
You
of this
want
net. No more of this. Yeah, exactly.
Yeah,
no more
you
of this
want dollars.
net thing.
Mm-hmm.
Yeah, right.
Yeah.
Right.
So we got a whole bunch of things. We're
You
gonna
owed me 10, he owes me 15, you owe me
Yeah,
5.
you send him 5, I send you 10.
I hate that.
Yeah, no. We're doing dollars in a jar.
I still have
on the
signed
table.
fives and dollar bills from the floor of the exchange from stupid things that people
Like liar's poker and stuff?
No, stupid things that people would say, like this is never going to trade here, or that's never going to trade here, or today we're going to be higher or lower. They didn't know what they were
Do you still look for the serial numbers on money, like as habit, like from like playing liars? What's the game where you?
No,
take the,
liar's poker.
Well,
yeah,
okay,
you
yeah.
got it right. Yeah.
Yeah.
No,
I didn't know.
Played in a
I
decade.
didn't know like how ingrained that was.
Yeah.
Well, it costs 4 cents to mint a penny, so that's not good economic sense. So, RIP to the penny. Hey, Coinbase announced yesterday they are incorporating their business in Texas from Delaware, following Elon Musk and Mark Zuckerberg's lead on a couple of their initiatives. Coinbase chief legal officer wrote in a Wall Street Journal op-ed that the crypto platform is moving its state incorporation to Texas from Delaware. What's Coinbase doing?
I was in Texas. People are excited about this. I mean, in our space that we had there, I don't know how big a impact it's going to have, or how many companies they're going to attract besides the ones that are in Texas. Liquidity is always king. It's an interesting experiment to see what's going on. Coinbase is up about $3.05. Under
300-ish.
What's that?
Back to 300-ish. Full round trip.
Yes, full round trip. I did a little diagonal trade. It hasn't worked as of yet. Maybe I'm out about $1 or so on it, but I did when the stock was like 311. So I could use a little bit of a rally in there. It gets back to 311, I'll be profitable.
What's Bitcoin itself doing?
Oh, Bitcoin's up a little bit this morning, just under 103. It traded over 104. It's been down to 101, up to 104. It's 102. Let's call it mid-price for the day so far.
All right. Hey, a couple of earnings from last night. Cisco reported better than expected profit and revenue in their fiscal first quarter earnings report. The company's recorded revenue growth in 4 straight quarters. Look at you, Cisco. Go, girl. The company reported
Cisco kid.
Cisco. The company reported revenue $14.88 billion versus $14.77 expected. Revenue increased 8%.
Yeah, it's up closer to $5 than $4. 70
At the expected move.
Yeah, at the expected move.
Did you trade it, Nikki?
We did. We have a little short delta there, but it should be okay given the kind of at the expected move on the upside. We did put diagonal spread. It was kind of like a poor man's cover.
A big
put,
move
really.
Yesterday too, to the upside, I believe.
Yeah, I mean the stock's been near highs. I mean
it is at highs. This will be a high if it opens here.
Yeah. So it should be scratch, maybe small winner, small loser, depending on what happens with volatility. And
directionally wrong. Hopefully you get a scratch or a small profit. Or if it comes down a little bit, you'll be profitable. But you were directionally wrong and still be in the game. That's a dynamic position. That's what you're looking to do.
Circle's third quarter profit beat Wall Street expectations, driven by higher reserve income amid rising circulation of its flagship stablecoin. Circulation of USDC more than doubled from a year earlier to $73.7 billion in the third quarter. CRCL, did you know it had earnings?
We sold the 80 puts, and it's gone against us like $200.
Yeah, traded down at about 86 or so. It closed down to 85.93. It looks like it's up around $1 this morning.
Yeah. Vol has come in pretty nicely.
Vol's come in nicely, but Circle's a big mover yesterday to the downside.
Yes.
10% or something like
that. Circle has struck partnerships with traditional financial institutions recently. So good job, Circle.
Beautiful. Good job.
Here's a newbie. Fly Aerospace. I just want to fly. Give me what you want. Okay. Firefly Aerospace shares jumped 15% as the company announced strong revenues and boosted guidance. Firefly's net losses totaled $140 million, but revenues in the third quarter jumped 38% to $30 million from $22.4 a year ago.
Was $18 and change, now 20, flirting with 23. So good number for Fly. That $18 change was an all-time low for Fly. What are you doing over there? It's two things.
I got long NASDAQ, a little bit lower. I got short another gold contract.
Nikki.
Micro gold, little small Johnny. Okay, don't worry. Don't worry. It's okay.
Gold hasn't had a downtick in
I know.
a week and a half.
Still, it spooks me. It spooks me a little bit.
Fly also lifted their outlook for the year. So do with that.
Silver almost seems like a better sale than gold.
It's hard because you can do so they have SIL. We could do that.
Yeah, I think SIL is the way to go.
SIL is the way to go there. The silver
gold ratio is down to like 75 or something like that. So that's something to look at too.
All right.
Sorry, go ahead.
No, you're good. You're good. Anthropic is launching a $50 billion nationwide AI infrastructure build-out, starting with custom data centers in Texas and New York. Anthropic, backed by big tech names like Amazon, announced the plans yesterday. The facilities will be designed to support the company's rapid enterprise growth and long-term research agenda. Like I said, you can't directly trade Anthropic, but you can trade Amazon, so...
Amazon's been a stock that's been on a little bit of a tear. It's off of its highs, let's just call it in the 250 range, the 244 range. That's where it sits right now. Been on a tear. It's been going sideways the last week and a half or so. It looks like it's unchanged to down 50 cents this morning, but you got even the S&Ps, NASDAQ, Russell, and Dow all down small, equal to what they were opened yesterday to the upside.
Are you trading Amazon at all, Nikki? Or
rank of 17.
We had some long delta there. I think I'm out. I'm sorry. I'm having my platform froze
Amazon?
up here.
I got you.
243. So it's down about $1. I don't have a position on.
No, you're out of it. Yeah.
Okay.
Yeah. Played it into earnings. Played it to the upside. Made some money on that, and then played it again to the upside. Got a couple shekels out of that too.
IBM.
Damn, we missed the silver. Just sold off.
I tried to tell you.
I was stuck.
Sorry.
Sounds like a you problem.
Damn.
You'll get them next time, Tiger.
Yeah.
Okay. Should we do it now?
Do it now.
Feels so dirty. Do it. We were just watching it.
Yeah, I mean, I think you wait. But up to you.
So sorry. IBM announced yesterday they'd built a new experimental quantum computing chip called Loon that demonstrates it hit a key milestone towards making useful quantum computers by the end of the decade. IBM
led the Dow yesterday, taking a little bit of a breather this morning. Even the S&Ps are down 20 now. IBM down around 50 cents or so, right off of all-time highs. Crazy move in IBM.
Okay.
IBM's a new meme stock.
What's the IV rank in there?
Big Blue, 25. Not bad.
Maybe for option trades today?
Maybe for option trades today, every Tuesday and Thursday. Thank you for the shout out. Today is Thursday. Lucky for you. Markets are a little wide in there, 50 cents. We'll have to wait.
Okay.
I took off one of those golds.
Good job out of you. Nice
ticks.
little scalpy.
Yeah. I'm short one, and my average is like right here.
Got it.
Because I had two yesterday. I closed one while I was making my soup. Saw that move in gold, and I was like, oh, let me scoopy a little bit of that.
You're like, we eating good tonight, baby girl.
Yeah.
That's right.
This soup's on me, baby.
Woo-woo.
Compound butter.
Woo-woo.
Ooh, no problem.
It's like, you want some shaved truffles on that? Microsoft announced yesterday they are bringing online their first AI super factory with the grand opening of their newest multi-billion-dollar data center facility in Atlanta, Georgia. The company said they're going to link the massive new server farm with existing data center infrastructure elsewhere in the country, and basically they're going to own everything. So Microsoft.
Yeah, Microsoft is one of the Mag 7, right? So 510 or so and change. Looks like it's down around 50, 60 cents.
Wild move yesterday. It
Wild
was down like $5 or $6, $7, and then rallied and was up like 8 or 9 at the end of the day.
Yeah, we talked a little bit about this yesterday, just one-on-one, how like a lot of these stocks, not necessarily Microsoft, but a lot of these stocks have gotten hit and the market really hasn't gotten hit. Now, is that like kind of bullish? I mean, the bullish side would say...
sector rotation?
Yeah, well, sector rotation, and plus if these stocks that have led us here have gotten banged to the downside, is there anything left to the downside? Are they going to keep them elevating the market? We'll see what happens overall today. So far, volatility up 13 cents, so not too much of anything.
God, that silver move.
I know. Silver now down 37 cents. I tried to tell you.
I was there. I had my thing was frozen.
I mean,
I want a refund.
Yeah.
From who? The government?
Yeah, right. My Taiwanese sources tell me CPI data is collected via persons visit brick and mortar locations, so that's why they didn't come up with the data allegedly.
Sure.
Yeah.
Okay. No, that is true. That is a component, but okay. Yep, you're right. Hey, Vinny may not be allowed on the highway, but Google's Waymo is. Waymo announced they're going to start offering freeway robo-taxi rides in San Francisco, LA, and Phoenix. They're going to be offering these types of trips quite soon when a freeway route is meaningfully faster. It would be a major milestone for a driverless ride-hailing company. No one has ever conquered that great unknown known as the 110. No, it's a freeway. I mean, that's a level of, because there's no one in the car. Like, freeways are crazy.
I hate to say I'm an expert on the subject, having been in a Waymo one time. But it was a wonderful experience. That's all I'm going to say.
It is, but in San Francisco, when all the Waymos get stuck on like a dead-end street, or they're blocking the trolley cars, like... It's like
I don't know how they do it.
Like the Austin Powers were backing up, and they're all just like.
I don't know how they do it. But it's really good.
Put your money where your mouth is.
No,
Google. What are you doing in Google?
No. I drive myself. I'm sorry. I'm that old guy.
Okay.
I like the drive too. I don't want to take
I don't like to drive, but I do it myself.
You don't like driving?
Nah.
It would be nice to be chauffeured everywhere. Like I used to complain when I was a kid.
No, I don't want to be chauffeured
now I want
either.
to be chauffeured everywhere.
Now I just want to be left alone. Is what I like to be. So I like to be. $2.84 and change, down around $2 for Google, just off of all-time highs made the last couple of days.
Good move for us. We're kind of neutral, but a little bit of short delta here. 280 would be perfect.
Apple has announced a new passport-based digital ID that is rolling out to iPhone and Apple Watch. It will give travelers a new way to clear TSA security lines with just their device. It's the biggest step yet in the tech giant's push to make the Apple Wallet app a digital replacement for everything in your pocket. Apple's wallet has select agreements with certain states that you can have your state ID on your iPhone. Illinois is not quite there yet. I cannot stress this enough. This is only to get through TSA. If you are traveling internationally, hear me when I tell you this, you need your physical, actual passport. You can't just be like, it's on my phone. Do you know who I am? It's like, no, you need your passport. But you can go through TSA, like if you need to. But if you need to clear customs, you need your actual
I got a
passport.
bone to pick with TSA.
Everyone has a bone to pick with TSA.
It's not your fault. It was your grandfather. Okay,
that's true.
That's why.
That's why I get randomly selected.
For
each
SSS.
time each time
security
you've
screening.
been randomly selected. Oh, got it. We've gotten to the point where there are too many lines and things.
You don't have TSA pre?
Oh, I do have pre.
Oh,
pre
okay.
is for the peasants now.
Okay.
You got clear plus,
Sure.
global entry, special entry, all these other things. You can't keep upselling me.
You sound just like your dad.
It's not fair.
That's the business
I don't
model.
understand it. Like I got the pre-check. It used to be like that was like the traveler one. You know,
That's everybody's business model except here, where it's always free.
That's true.
On demand,
It's an
free.
upsell every
Live
time.
free.
It's like I get in line and I got some, guy that paid $100 to clear, and he just walks right in front of me. And I'm like,
You don't have
was
$100?
I do, but now I got to
Sell
do
some
this
more
one.
micro gold.
And then I got to do another one. It's never ending.
What
There's
is
always a
Apple's
new
stock? How about what can
Don't
you do
miss
in Apple's
silver next
stock?
time.
Yeah.
Apple unchanged, 273 and change. Apple's been putting this market on its back. It too is right near its highs.
But this
Maybe
is
rank it
cool.
13.
Like, it would be great to like never have to carry a wallet again. Like, everything's just on your phone.
Yeah, give Apple more of your free data.
I don't really mind giving Apple my data.
Oh.
It doesn't bother me.
All right.
It's fine. Hey, PayPal is relaunching in the UK after nearly 2 years. They will allow customers to shop online and in stores 2 years after they restructured their operations there following Brexit. The digital payments platform said customers in the UK will also have access to debit cards that can be used worldwide without transaction fees.
PayPal is
Round to the Greggs, pop round to the Tesco. Use your
PayPal has
PayPal.
just been sideways since
Forever.
May. Yeah, it
Forever.
hasn't moved. $70-ish.
Since it went to 300 during COVID.
Mm-hmm.
After that, it hasn't gone anywhere.
Yep.
We're short the 65 puts, right at the money.
Yep.
First strikeout.
Down dimes. Yep.
Yeah.
Not
Is
much.
it you, Nikki? You said you don't like shots. You don't
love a shot.
love a shot. Well, don't get mad at me because I'm not inferring anything by this story. But Weight Watchers is now going to offer the Novo Nordisk
Wow.
Wegovy pill, but a pill for 2026. I said don't infer anything from it, but I'm just saying this is something. It's not a shot.
Poor Weight Watchers. They're always behind they're like years behind everything.
So Weight Watchers, I guess you can still trade it. I thought they went private, but WW is Weight Watchers. They're going to sell Novo Nordisk much anticipated Wegovy in pill form if it is launched next year in the U.S., depending on a tie-up.
This was a sub-dollar stock. I think they did a 10-for-1 split if I remember correctly.
Someone get Oprah back in there.
Yeah, like around 40-ish cents or something like that, which makes this a $40-ish stock. It's trading under 30.
Yeah.
So
All right,
trade with
do with that what you will. I'm just here for the information. Well, if you don't want to take a pill, maybe you could just put on a pair of Skims. Kim Kardashian's Skims is now valued at $5 billion after a new funding round. The brand plans to use the money to fund an expansion of physical stores. Skims raised $225 million in a new round of funding led by Goldman Sachs. Sad news: Kim K did not pass the California bar. She was using Chat GPT to answer her questions. I'm not making any of this up. No, those are just the facts. So she was using Chat GPT a lot. She was trying to take the bar because you can take the bar without like going to like law school. Like
Yeah.
like you can just
told
you could raw dog it, as the kids say.
I was told that this is somewhat concerning, but my girlfriend said that they are making bush panties.
They are like a little merkin, on.
You know they call them merkins? I didn't know that was
a
like
merkin.
Yeah.
Yeah.
Panties with a bush on it.
I know they had panties with a bush on it. I didn't know they called it merkins.
What?
It's the morning show. It's the morning show you need, everybody.
A merkin?
Merkin.
What's it stand for? I don't
know what it stands. It's just called a merkin.
Yeah.
You know?
I don't know the etymology.
I was
but
told about this. I have not
He doesn't
seen
have the equipment. He doesn't know.
Yeah.
I just would have called it a landing strip. I mean, I don't.
No, but this isn't this is bush.
I know, full. Yeah, no, I know.
I guess
Like
the
the
bush.
70s are back.
70s are coming
like
back.
a busted couch.
Yeah.
Is what you're
Yeah,
saying.
like what you
when it-
remember.
Yeah, when it
I'm so
comes out the
uncomfortable.
sides, yeah.
Skims has 18 stores across the U.S. And is planning to open additional stores overseas in 2026.
That's what we used to call it in the 80s. I'm sorry.
We called it a landing strip too, okay?
No,
It's
busted
not that
couch. We used to call it a busted couch when it wasn't trimmed up. Sorry.
Skims. You can't trade Skims, but Skims does have a partnership with Nike.
Oh,
So
Nike.
you could trade Nike. How about that? Look at this.
Nike, $64 where it closed, almost $66, so it's up $1.80. Nike's been one that's been trying to buy the dips on. We finally got a little bit of a buy the dip there, about $5 or $6 in Nike. Ivy rank at 29 is pretty good there.
Every now and then, I mean every day, basically, I do miss Scott Sheridan because he was he's a special man. And
He was a good rich guy.
I miss him so much. But this
Generous
story,
rich guy.
This story
Good guy.
is specifically for him. So Scott, wherever you are, the story's for you. Alinea has lost
Vinny
one of its
cried.
Michelin stars.
Wow.
In a seismic announcement,
Yeah.
the Michelin guide announced they were pulling stars from several locations at restaurants across
The DC
country.
place lost a star, too.
Yeah. So Alinea
Why? How?
has had a 3 Michelin star rating since 2010. Grant Achatz, the star chef, said in an Instagram post that he was disappointed about the demotion to 2 Michelin stars.
Yeah.
Smith, literally around the corner here, is Chicago's lone Michelin 3-starred restaurant.
Wow. Yeah, I know. My son Vinny cried on that.
Did they say why?
Told me
Why
last
would
night
they?
right after hockey.
I don't know the intricacies of the fine dining
Yeah.
universe, but restaurants, it's not the first time. So restaurants can lose stars, and they've had it since 2010. So maybe they weren't innovating at a pace that the Michelin guide people thought. I think it's crazy that a place that makes tires rates food, but that's just me. What do I know?
Yeah.
How many Michelin-starred restaurants have you been to, Nikki?
0.
Oh, you poor
Maybe
guy.
one.
I've been to a
star.
no,
Well, there's good
not
restaurants
3 star.
here. Not 3-star, right? Yeah, they're not that
I've been
many
to
in
it.
Chicago. So,
Now there's only one.
yeah. So, I don't.
How many
know.
have you been to?
I don't think any.
You hear that, guys? She's available if you were an extra.
Is Panda Express Michelin?
Yeah, that new
Panda
spice.
Express, this new,
the new spicy orange chicken.
Chicken, not bad. Not bad. Tastes a little bit of Vinny's. Pretty good.
Yeah, see.
That's all things considered.
Stuff.
Yeah.
Hey, finally today for my viral video of the day, I love men. I just love dudes. When dudes getting around. Have you ever seen that meme where the girl is like, he's probably cheating on me, and then he's like off doing something just like ridiculous or whatever?
Yeah.
This is like one of those videos.
Oh,
Watch
beautiful.
this. Heading over to Andrew's later, probably just gonna have a drink and stand around the fire.
Okay.
Oh no.
Oh, I love it. I freaking love it.
Over the hunting buck?
Evil Knievel. Yes. Oh, he didn't have a good enough landing.
No, he did. He didn't hit the fence. I mean, this is very impressive.
Yeah,
This is awesome. Bring
I like-
this back. This is what you need.
I like the assist from my man in the back.
Buddy, yeah.
Throwing some gas on the fire there to
I love
pump
it.
up a little bit.
Someone
That's good.
in the comments wrote, "Hey, how was Andrew? How was Andrews? It was fine. How's he doing? Dude, I have no idea." Man.
That's good. That's good. We need more of that.
Yeah.
Yes.
Anyway,
To do that all the time.
what's coming up next?
We're gonna take a quick 90. We should do it on roller skates too.
Roller skates?
Yeah,
You
roller-
jump over fire on roller
No,
skates?
not fire, not
Okay.
fire, but garbage cans. We
Oh,
line
sure.
up the garbage cans, and I didn't get airborne very.
Yeah, you needed some Wegovy.
Yeah, I need someone Gobi back there for sure. I didn't get over too many garbage cans. We're gonna take a quick 90-second break and come back. We got more Tasty Live after this. What do we got coming up next?
Firm and send.
Very good out of you on this Thursday, November 13th. We'll be back in 90 seconds. Tasty Live.
Beautiful.
Good job, man.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Look who's back testing.
tastytrade now has options backtesting for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get backtesting at tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We are back, son, and you know what that means. Time for a little bit more Tasty Live. Well, with Confirm and Send, but like we always do, we take a look at the market. Let's see what's going on here today. Even the S&P's down 19. They are red. All four indices are down. All four indices are down around a little over a quarter of a percentage point, third of a percentage point. I guess the Russell is the weakest of the group, down 1460. That's /RTY. NASDAQ down 99. And the Dow down 102. You can see the Dow has been the strongest of the group as of late, as the NASDAQ sells off a little bit. Even the S&P's strong like the Dow, and the Russell the weakest of the group here, just over this little short period of time that we're looking at, last week or so. Volatility up by 7 cents, 1952, starting to percolate a little bit to the upside, ever so slightly. Nothing that I really see overall in the market itself. Bonds down 13, 117.07. Bitcoin, it gets to Kembade, that 105-ish area. Got only up to 104 and change. But every time Bitcoin gets a little bit of a bid, it definitely can track some sellers. It is up almost 1%, $885 today, but it is around $102 and change, as you can see. Middle to the lowest start of the range for the last week or so. Ethereum doing the same, up 26 cents. It too is a little bit better, faring a little bit better over the last week or so. Oil up 58 cents. Did you do something in oil yesterday? Did you buy a little bit of oil?
I got long on micro crude, MCL.
Yeah.
I got long at 58.60, so I'm up like 40, 50 bucks on it. I probably put in like an order to close it for...
Nice. Got up to 59.15. It's 59.06 right now. It's about as high as it's been for the day.
I was looking at, I wanted to get into a crude position, but volatility just like hasn't really expanded there. So I was hoping we got like a day 2.
Yeah.
And then I could get
It's going to expand to the upside, son. That's the problem with.
We got all the geopolitical stuff. So
Yeah. That can help too. Gold up $20. Gold has been on a tear. You can see here from under 4,000 and flirting with 3,900. to 42 and change without a downtick, up 20 right now. Silver back up, son.
I got my SIL.
Oh, just now.
Yes.
Oh, all right. Beautiful. Yeah.
I don't like it because I'm still, it got up to 54.
It did get up to 54.4. It's 53.5. It did get under 53. Remember, it's a big movement. On silver, $1,000 per point, big move. Net gas unchanged.
SIL is 100.
SIL is 100. Yeah,
Yes.
I'm talking about the larger future that I had up there. I apologize. For earnings, you had Costco. It's up around 5. Disney down around 4.
Cisco.
What's that?
Said Costco.
Oh, Cisco. Yes, I'm sorry. Cisco up around 5. Disney down around 4, and JD up around 50 cents. Since I mentioned Costco, it is one of the few stocks that looks like it's a little bit higher right now by about $1.
Should be good for earnings. I think Cisco will probably be like, a small win-loss scratch.
Because you're directionally wrong.
Yeah, Disney should be a good one. I did a crab trade on the downside, so I'm long the 115 out in December. I'm short 2 of the 110s. We're hovering right around 110, so those won't really hurt me all that much. So that should be a good one. And then JD, I did a short-term Zebra. I mean, that's one of the China names that really hasn't participated in much of the upside. I did a Zebra there, so I did little 2 contracts there, two lot.
Yeah, not bad. Yes.
So maybe $50, $100 on each, depending on where we open.
Beautiful.
Yeah.
All right, my son, let's go.
Cool. Confirm and send.
Confirm and send. Let's do it. Is it ever worth selling calls in VIX naked or as a spread?
I would not as naked positions. I don't think it's really ever worth that risk. I would certainly always define the risk, just because the tail is so huge, and the real problem with these is not just the risk, but the risk of a move against you. It's volatility of volatility. It explodes against you, and so not only are you short, and leaning into a big up move, but the volatility of those options is going to expand exponentially. So that's really your biggest risk, along with the expansion in buying power. So when volatility expands, buying power is going to expand. And so these positions can get very, very big, very, very quickly. And that's where a lot of people get caught. I think if you want to be short volatility, you could be long something like an SVXY, or sell like wide call spreads in like a UVXY or something like that has like kind of like a beta slippage to it, because the futures roll and those products go to zero. But again, you have to be able to withstand the pain of when it does expand. And the pain is going to be,
when those binary events happen, which, listen, that's why volatility is priced so expensively. They move exponentially. I mean, tens of points as opposed to just dollars of points. It goes from 19 to 29 to 49 if you get market really go down like that. I'm going to answer it a little bit differently. You're 100% correct. I would, as a standalone trade, I'm not interested in selling naked VIX calls because you mentioned the amount of skew that's there. It's a huge amount of call skew. We all know that if there's a lot of call skew, call spreads trade very cheaply.
Yeah,
so you can use your money a lot more efficiently than selling very cheap. I'm talking about like dollar-wide spreads will be pennies. $5 wide spreads will be 50 cents. I mean, it's not a great product like that. I don't mind buying VIX futures and selling VIX calls against it, like that kind of spread, but you don't get any margin relief between the two. It's not a trade you can put on as one click. I'm going a little bit in the weeds here. Another thing that a lot of people don't understand when you look at VIX, I'll put up on the screen here, it's trading $18 right now, but if you're trading the D17 VIX options, they are tied to the VIX futures, which are trading 19.5, and you can tell it's around 19.5 because the at-the-money calls and puts are going to be trading approximately the same price, and you can see here that the 19 calls and 19 puts are almost the same price. 19.5 calls and the 19 puts are almost the same price here, which makes this VIX view. A lot of people think that it's trading $18 and they're looking at this at the money. They don't even know where the product is. So a long-winded answer to say it's probably not worth selling VIX call. Never something I would do, but you're open to do whatever you want to do.
Yes. You can't buy long-term calls in VIX because of that dynamic of where volatility is trading. Like it's not,
you go to the 18 puts with it being around 19.5, it's $1. You go to you can go to the 28 calls, they're $1. From 19. I mean, it's there's a reason why there's all that call skew.
Yes.
Next question, please.
Cool. So the other day, I think it was Tony who made a comment about the indicator Nick had on his charts. Okay, essentially Tony said indicators weren't helpful to him. Don't you think with the advancing in technology, indicators are more reliable?
I think they're better. I don't know. I mean, I don't know.
Technology-wise, they're better.
Technology-wise,
you could do a lot more.
You could do a lot more with them. You get a lot granular with them.
Yeah.
You can look at the data a lot better. In years past, the data wouldn't be as clean as it is today. You'd get all these little blips in them and stuff. So I think technology has made those indicators better. Now, if you give them some worth, then I guess the next thing you would extrapolate out is say that the indicators are more reliable. But I don't think they were reliable to begin with. So just because the data is cleaner and it's better, I don't think it's. I'm sorry, I'm not a. If indicators worked, we would all have been using them on the.
I know that's the whole, and it's always what I say to people. It's like if there was some.
Do you agree with that? I mean, or
no. I think everything is context, and if it helps to build a story, or if you like visually how it looks and it helps you make a decision on whatever your decision is, I think that's great. But ultimately, if there was something that like I get the emails all the time of like, I found this like free money trade or this, like where is the risk on this trade? And if you think you just found something while you're poking around somewhere.
Probably didn't find.
I promise you, there are a lot. There's technology and firms and teams that are trying to arb out fractions of a penny. You're not finding a free $100 bill on the ground.
Right.
There's
especially on what you're looking at here is a 50-50 shot on or 52-48 if you want to play it.
I just mean in general of people trying to find things where there's no risk. Right. Like I found this no risk trade.
You know what? I like those people. And I'll tell you why.
Because they're looking for stuff.
They're looking for
and they're
stuff.
interested.
And they're doing a complex option strategy, which is not a complex thing. It's just more than one leg to it. And they're finding something that they think they see. I like that.
Yeah.
The person who has an indicator that says this is, right, 80, 90% of the time, I think has gone into the weeds a little too deep and is found something that's really not there.
Yeah.
So that's the one that I have a harder issue with, getting behind.
Yes.
Next question, please. Sorry.
That was good.
On Wednesday, the government said it probably won't release October CPI or employment. I was surprised that markets didn't move when the announcement was made. Doesn't the Fed need that data to decide on interest rates?
Yeah, I mean, we discussed this morning with Vanetta, but even it's not something that I look at all the time, but the Fed Watch tool has kind of taken a little bit of the juice out of the rate cut probabilities into December. So, yes, that did happen. Ultimately, I'm sure there's other data points that they're going to use. There's other things that I don't think these are just the only things that they're looking at. But yeah, I mean, it has come out of the rate projections. Even bonds today, have come down, which is telling you rates are going up.
Right, small.
Yeah,
117.08.
No,
yeah,
but I mean, it's markets are moving on this. So you saw this, you wrote this email. Markets have moved on this.
Let me use the person who wrote the last email's logic here. So if these numbers didn't come out and the market didn't move much, does that mean the numbers are valuable at all, ever?
Or I love when people say the market was wrong.
I mean, the market's never wrong. I mean, it's never wrong because it is what it is.
Yes.
At that moment, and you have penny-wide markets or one-tick-wide markets, you could do whatever you want. Market's never wrong.
Yeah.
Things move, but the market's never wrong. But I'm going to go back to, so if it didn't come out and the market didn't move, are those numbers, they always get revised anyway.
Yeah.
I mean, it's such a gray area. Again, I think it's, some things are good to know. Some things make you money. I think this is a good to know thing.
Yes.
Not necessarily a moneymaker. Next one, please.
Do I take off that silver here?
What's that?
I take off that silver.
Oh, you sold it at 53.05, 53.55, 53.505, and you bought it back at 53.285. Very good job out of you.
$200.
Very good job out of you.
Not bad.
Not bad. Gold actually up $12 now at the.
Yeah, I need gold a little bit. I'm like right here. This is kind of where my spot is. My net. Because I scalped.
Understood.
A little bit.
I think this is you.
Why does anyone care about the Dow anymore?
Because
it's at new highs.
Yeah, it's new highs. Yeah. Well, yeah, that's why they care about it.
Yeah.
They like to talk about the upside, not the downside or anything else like that.
Yeah.
Pedigree, I guess it has a long-standing name to it.
Yeah.
But you're right. I think the more relevant market is the NASDAQ market these days. The Dow 30 stocks, I don't think really encompasses what the market is. I guess you could say like what a large
Just legacy.
Cap?
It's legacy. I
Just
mean,
legacy.
it's the one that has been around the longest, and it's not as volatile typically. Is the other thing is that tech is and NASDAQ is thought of as like that high vol, high beta index, even though I would consider it like the market. Like that is what the world is right now is tech.
I would agree.
And so, I think that's part of it too.
I would agree. I think it's legacy. I think that's what it comes down to. I think it gets a pass just because it's been around for so long.
Yeah.
I agree. I think that's the last one, right?
Yes.
Very good. Very good. You know what? We're going to take a quick 90-second break. Let's just take a look at the market here because we got trades from the research team next. We'll really look at the market before the market opens. Even the S&P is down 27, trading at or near their lows. NASDAQ 138, Russell down 16, the Dow down 120, and volatility up 15 cents to 1960. Bonds are down 11, which Nick just talked about. Bitcoin up around 800, mid-range for the day. Oil up 47 cents. You've been trading a lot of gold and silver. Gold and silver have both been moving, nicely. Bigly. Gold had a $70 move so far. It's about mid-range. Silver, on the other hand, has had a much bigger move. It's been the more volatile of the two. It's had almost a $1.50 move. It's trading at the lower end of its range. We're going to take a quick 90-second break and come back. We've got a couple of researchers for you. Trades from the research team next. Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on tastylive.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Tasty Trade. Download today.
Mickey, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with trades from the research team. Who is our first researcher? You ever seen a shark in the wild? Shark?
I've ever seen a shark in the wild?
Yeah, like in the ocean.
I mean,
you're supposed to punch it in the nose.
Yeah.
Yeah, good luck.
I've never gotten close to one.
Look at Kai over here. That's what they say. They teach you that. Punch it in the nose.
No, seriously, have you ever seen a shark?
I've seen it in the ocean.
You have seen it
like
in the ocean?
Like the fin in the ocean. You know,
oh, you have?
Because it's like sticks out of the water.
Yeah.
I've never gotten near one. Because that would
you've
be
never been like in a
time.
cage in one or anything like that? You never done that? Your parents loved you enough that they didn't put you in one of those?
Exactly, yeah.
That's awesome.
Yeah.
That's
My
awesome.
dad realized there's other ways of turning me into a man besides putting me next to a shark. Where the
you went in the cage next to a,
to
a shark in
that was
Mexico.
fun.
Yeah, yeah.
It would be fun though.
Caught one too. They are. You're not a good representation of a shark. Let me put it to you that way. You're a kind, loving human being. You know what I mean? Like a shark is a mean SOB. It's almost like it's
No, sharks are misunderstood. All right.
Yeah, that's what they say. But when you see a shark, even if you're trying to take a hook out of its mouth, they're not misunderstood.
No.
They have an agenda, and they are making it known. There's no gray area with a shark. A shark knows.
Although at some point, some would say, like, Gad, if you provoke me, then I have an agenda.
Yes.
Come back.
Yeah, you don't want to.
No, I'm not gonna.
That's not a thing.
I'm not gonna provoke you.
He's a black belt in jiu-jitsu. Don't mess with him.
Absolutely. There's a lot of things you don't know, Tony.
I bet. Karate man bleed on the inside, don't bleed on the outside.
Yeah, exactly.
I do have, before you get to your trade, and I know obviously your research team, you're instrumental on all the stuff that we present here 2-3 times a day. So thank you for that. On the 0 days, which we do on Thursdays. I have a buddy of mine, not a buddy of mine, person writes into me, just like anybody can write into me. Tony here says he would like to take a look at 0-day SPX trades. We look at them at the beginning of the days. We've done the research where it's better to put them on the beginning of the days, take them off, more towards the middle of the day. Middle of the day on to the end of the day seems to have a lot more of volatility to the P&L to them. Doesn't mean it's not a good trade or a profitable trade, but it has a lot more volatility to them. How about the last half hour of the day? Is there something where we can go around that 20-ish delta and go, $10, $15, $20 wide? So maybe we can take a look at the end of the day too. Got our beginning of the day kind of metric. Maybe we get our end of the day metric.
Collecting enough premium.
So again, is there enough premium? Is another juice for the squeeze? As we had an email earlier this week asking us. We manage these things. If you're selling something, let's say at $3, where we've been doing them $3.50, something like that, and you're taking them off for 20, 30%, 50% if you got a home run type trade. Can we make that same
You're going to have less premium, less theta.
Yeah.
Off the top of your head, that's what you think.
Right.
That'd be interesting.
But let's see if you get that same. Let's say we're trying to make a buck on this $3 trade.
I see. Okay.
Can we make that buck or that 80 cents in that half an hour at the end of the day, just as nicely on a win-loss ratio?
All right. Okay.
All right. Cool.
Research request live on the show.
That's right. Why
there
not?
you go.
Why not? All right. What do you got for us? What's your? Otherwise, I forget to send it to you, and then I get in trouble. Bullish in MU.
MU.
Oh man.
A skewed iron condor, a poor man's jade lizard, multiple
There you
names,
go.
multiple names for this strategy.
Man.
So it ends up being bullish because you are $20 wide on the put side and $10 wide on the call side. It's actually down $3 pre-market, so it's a perfect time
Yeah, but
if you want to.
I mean, it is about $10 off its all-time highs,
which is a 3x.
Its all-time lows this year was $60-ish. Its all-time high was $250-ish. This is not like.
Look, we discussed in the chat, okay, that the true contrarian thinks the market goes up forever. Okay.
Oh, okay. So, there you go.
Yeah.
There you go. All right. That's what's true. You know, 6 of one, half dozen of another.
No.
Depends how you look at it. What do you think about this, son?
I'm just trying something more interesting than a basic iron contour.
Understood.
Yeah, I like it. I already have a position on. If I didn't have a position on, this would be. I mean, this is in the wheelhouse. And even though you have more risk on the downside, I mean, your delta on this is very minimal.
Yeah,
like it's not a huge.
$5 or $6.
Yes, I know you mentioned it's like the market always goes up. You know, like that's a contrarian lean. This is neutral, slightly bullish. So I'm with you. I have a little bit of short delta here, and that's my position. So and it's a big position.
The crash is going to hit me pretty hard.
It's Micron through the years has always been one of those stocks where I look back and I'm like, this stock every year kills me. Every year it costs me money. It's just one of those like
it does me too.
And I think everybody has those, and and Micron is that for me. So I won't be adding to the position, but if yours works, mine will work.
Okay.
So we're on the same team.
I'll take that.
Beautiful. Good job out of you.
Sounds
Who is our next researcher? That smooth talking man, Gad. How are you, my friend?
I'm good. I'm happy.
I got a question for you.
Okay.
Is your name spelled G-A-D or G-H-A-D?
G-A-D.
G-A-D?
Exactly. But sometimes it depends to who I'm talking to, but my legal name is G-A-D. But my social media or social life, it's G-H-A-D-Y.
We'll take this offline, and I'll figure out why you're the Slim Gaddy instead of Slim Shady. What do you got for us?
I got Boeing.
Boeing. Yeah. All right. I haven't looked at Boeing in quite some time. Ooh.
We got Longy yesterday. What are you thinking here?
It's unchanged, maybe down 30, 40 cents.
Yeah, I'm doing a calendar spread in Boeing. Selling December, buying January.
I've got this sort of. I have a diagonal spread, but same thinking up to 210. I like it. I mean, the stock has sold off 20, 30 handles from the top. Volatility is super low.
Yeah. I think it's one that I'd be looking to kind of Nike it. You know what I mean? Like kind of buying the dip or trying to see that, it has a decent correlation to the overall market. 0.68, relatively high. I think
if the strike, the strike remains there, you'll be correcting like 90 cents a day.
Especially if you're a little bit bearish on the overall market at market highs, if that's what you are, and you're looking for something to buy to give yourself a little beta weighted delta, maybe won't go down as much as the rest of the market. This would be something I would look for a strategic play. Yeah, sure.
I like it. If I didn't have one on, I would definitely be. This is these stocks where we've had a 10, 15, 20% pullback have been the ones that I've been looking for to get some of that long delta. And on the flip side, some of the stocks that haven't had any sort of downside, like Apple and IBM, those are the ones that I've been trying to take a little bit of a downside directional opinion on. And so I like it.
Good.
That's all right. Very good. Very good. Next researcher, please.
I got long another.
You got long micro NASDAQ. Yes. Very nice.
I screwed up your dance, I thought
you screwed up my dance. You screwed up his music. Show some respect to Kai. What's up, my man?
Doing great. How are you?
That's it. You got a very short applause. Very short. Very short. That's all you warrant right now.
That's fine. I was thinking about that. Whoever the guy bring up the last 30-minute study, zero DT study. I was thinking about when does the zero DT becomes too long for investors?
Right.
We're gonna have minute binary 10 minutes. They had the Bitcoin perpetuals that I think crypto.com maybe. One of them, binary, like 15 minutes. So will Bitcoin be up from the price right now in the next 15 minutes? Like 15 minutes from now, binary.
Never thought I'd see the day.
I think these ideas are going to be good for CBOE. They're probably going to launch the intraday.
Oh yeah.
Option expiration cycle, right?
For sure.
Every hour.
I bet it'll be like up down though, like a higher lower type bet, like 50-50, where you can only take ones, like no extrinsic value to it. Like, will we be above 6,900? That sort of thing at a given time.
Yep.
2 days ago, I saw a tweet. There's a guy post some interesting trade ideas from, what is that, Polymarket or
Polymarket?
Polymarket. He said, I'm going to bet $2,000 on the Trump is not going to give out the $2,000 bill. If he lose, he will get $2,000 from the government. If he win, he makes $18,000. So he never lose any money.
Oh, that's good. Yeah, I mean,
wow.
You think about it.
Yeah.
If you're willing to.
But if you're betting the 2,000, you're probably outside of the stimmy bracket. So now
he's going to get double whammy.
See, that's the arb there. You think it's a free money trade, but then you're like, oh shoot,
I don't get the
money. Not getting the stimmy.
right.
And now I'm out $2,000.
Right.
So now you're in the hole. So you got to be careful there. You got to figure that out. You got to price in the risk of where the line is drawn for the stimmy.
Yeah, just for some fun.
Yeah.
All right, my friend, what do you got for us?
All right, I'm going to do the Meta Ironfly, slightly bullish. So the delta Y is a little bit more aggressive because like a $40, $35 to the upside, but I moved to the change the strategy to an Ironfly, so kind of reduce the risk in certain perspective.
Are you doing okay? So you're doing put, because you could do this like. This is the same as a butterfly, so you could buy.
Butterflies too, yeah.
Butterfly. If you might get a little bit better spreads just because you're not selling the in the money put. But same thing, put call parity. But I like this. I'm long Meta. Meta is a freaking dog.
Meta's a dog. Let's
got killed after earnings.
Yeah,
it got killed after earnings. It's almost where it started the year, which it's unheard of in this market to say a stock is almost where it started the year, trading 609 or so. I think it started the year.
Especially as one off the Max 7.
Yeah, around 590-ish or something like that. So, yes. You might have to take it out of Max 7 if it keeps acting like this. Right?
Yeah. I'm in on
all. What do you think about this?
I'm in on all of these, which I don't know if the people out there will like that, that we're all on the same side here. So, I mean, I have all these positions, so I'm with you guys.
Okay.
Let's hope we're right. I mean, this is all of us in the same boat together.
Mm-hmm.
Spooky.
Right. Very nice. Very nice.
I like it. Yeah, I think Meta is another one where it's if you've been trying to get long something.
I like the thinking Boeing,
Yeah.
Meta. I mean, Meta's another one that, its correlation you would think is a lot higher than Boeing's, right? Because it's one of the Max 7, as you said.
Yeah.
But it's like 0.3 versus 0.68 to Boeing, just because all year long it has not participated. They're really looking at a yearly correlation here. So that's why. All right. Good job out of you. Good job out of the team. We're going to take a quick 90-second break. We'll come back. We got more Tasty Live immediately following these messages. With the opening bell, we're back in 90 seconds, Tasty Live.
Beautiful.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
I tend to call myself a lonely options trader because I really don't have a lot of people that I can share stories of wins and losses with. Like Tasty Live plays the whole day at my house. I love that they've made everything really easy to digest and take in. I love that you can easily send an email if you have any questions and Tom will be quick to respond to you, or if somebody else, Nick, Tony. I really enjoy that it's a customer focused and it's a customer centric system that you guys have here, and tastylive has definitely changed my life financially because I'm able to determine how and where I can make my gains and not be a passive investor where you're just relying on the markets to do something for you. You could actually go out there and do it yourself.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities, and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you would like the chance to share your trading journey and inspire others.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Nikki, we are back, son. The opening bell is imminent. Are you scalping in and out of your NASDAQ?
I'm scalping in and out of NASDAQ a little small.
Sold your long out at 490, and you just bought them back at, you bought it, you sold out your long, and now you bought them again at 456.75.
Yeah.
Nice little trading little range here. Your little scalping fool. Even the S&Ps trading near their lows, down 28.
Just kind of playing that little round number at the bottom here.
Understood. Russell down 18. Market set to open in about 30 seconds. Dow down 140. Volatility up 11 cents. Really hasn't moved too much. It was trying to make new lows, but it's been catching a small bid with the market moving a little bit lower so far this morning. Bitcoin almost seems like it's frozen, up 8.55, hasn't moved too much. Ethereum up $12, oil up 53 cents. Gold only up $2. I say only up $2. You can see here, trade up to 42.50. Oh, look at you, scalping out of them at 80. Beautiful.
25-ish.
Yeah.
Little something.
Very nice. I mean, that's the way to do it, son. Good job out of you.
Thank you. Sorry I interrupted with the dip.
No,
I figured you'd be used to it. I'm not
interrupt this nonsense of quoting the market for some real trading over there. So, good job out of you. Good job. Let's see what's leading this market with a bucker. Baba up 5. Cisco up 4 and change. Cisco was up a little bit more earlier pre-market. I think up 4 is better than up 5 for you. Meta up 280, being a little bit of a bucker itself. Nike up $1.25. PDD up small. GLD up small. Obviously, some of the oil-related stocks, ExxonMobil, CVX, and Apple up 80 cents. Apple trying to keep the market wings up. Let's see what's going to the downside. I can't really quote SanDisk. The markets are really wide in there. But the app loving also with wide markets. First good market here is Tesla down $9 and change. Disney was only down around 4 or 5. It's down 8 and change. AMD down 6. Google down almost 5. This is why the NASDAQ and the rest of the market, I guess, a little bit weaker. Google down 4 and change. Netflix down 4 and change. Coin down 4 and change after catching a small little bid earlier. Coin back down. NVDA, which has earnings on the 19th, down 3 and change. Hood down 3 and change. I don't know. A lot more red than green on the screen. What are you thinking here?
Yeah, they took some of my winners. They took a ton of vol out of Cisco.
Yeah, for earnings, right?
Yeah.
Sure, you would expect that.
And Disney, I need it. I'm right here, but markets are still junk, so
you got to be careful.
I'm gonna wait, and same with Cisco. Like Cisco's got my 75 put in December marked at $1. I mean, that's $2 out of money.
Yeah,
that's a nothing move.
Yeah, it's a nothing move. Yeah.
So they've really smashed volatility there, but gonna wait and see on those. Let those markets tighten up a little bit.
Okie dokie.
Nothing. No big movers.
No really. Big whoops so far.
Yeah, nothing like really sticking out at the moment. I didn't have a bob up position. That's kind of the biggest mover here.
Yeah. What do you think of volatility here? Seems like it's just kind of languishing at 1960. Hasn't moved too much, even though the S&Ps have sold off nicely. Seems like the market has a little bit of pressure to it. You've been able to scalp it from both sides, back and forth.
Yeah.
So you've got a little bit of two-sided action in the overall market. The S&Ps down 31. Relatively average volume yesterday across the board here. All right, what say you?
I think, your
overall positions are okay.
Yeah, I've got a little bit. I've got some longs, some shorts. I'm basically flat delta. My delta is very, very flat here. I think you see a little bit of a vol crush. I think you got a little bit of a bounce and a vol crush. Volatility is not expanding. We got through all the government shutdown. I think in hindsight, the move was earlier this week. They gave you your kind of euphoric move on the government shutdown. We all knew that was going to happen.
Yeah.
I think that kind of got priced in earlier this week, and now you get into a little bit of an inside chop fest and maybe a vol contraction. It's a pain on both sides of the YOLOers. If you were YOLOing crash and you were YOLOing blow off top, you both lose.
Yeah.
That's what the market kind of feels like right now. handful of stocks
that's
up.
definitely what is presented so far by your scalping of everything, and really not no directional bias to it. I think we wait a little bit on the 0 day to see what the market. Even the S&P is down 30 right now. I think we wait a little bit. I mean, and see what goes on. Yesterday we did it pretty early on in the day. I think today it's entirely up to you. You've been hot, but it's entirely up to you. But we'll wait for now. Let's just see what else is moving in the market now that we've Disney down almost 9 and change, Tesla down 7 and change. You could see the low here 420, 424 is the high, trading 423. So it's actually catching a little bit of a bid. AVGO down 6, Reddit down 6, Google down 6. These are your stocks that have brought us to the promised land. Coin down 5 now. IBM.
Now you're getting a little bit of a move down.
Yeah, now you're getting a move down.
Nasdaq down 200.
Down 36. Mm-hmm. Yes, sir, Senator.
Yeah.
Oil up 50 cents.
My Disney position really hasn't moved at all. It might just be a close. I played it to the downside, but I played it inside down. It's kind of past the expected move downside. I'm out about $20 on this trade.
Okay.
Kind of a nothing trade.
Kind of a nothing trade, yeah. Do you think about taking it off?
That's what I was
thinking. The almost scratch? I mean, it looks like the play is over and dead.
Yeah. And you don't really have enough duration to roll the shorts. Like we did that with Amazon into the big move in Amazon where we rolled the shorts to the November monthly, but you still have like 15, 20 days left until expiration on that. So this one, 10 days in the November monthly, I'm not going to do that. I'm just going to try and get out here for.
You got a nice 40 handle move in the market. Take a look at the 0 days just because we were quoting them the other day. $35 expected move. Remember yesterday it was closer to 24, 27, 25. Now it's 35. So volatility definitely being pumped in here a little bit in some of these products here that represent the SP. Nasdaq down 250. That's your leader to the clubhouse to the downside. You just closed your Disney for $1.43.
Yeah, it's like a 40-cent loser. Nothing. Scratch.
Yeah, directionally wrong, right?
Yeah, I mean, right on direction, but not magnitude. You needed kind of that inside down move. If you get this outside down move, you lose 40 cents, no big deal. Obviously, you have the tail risk. If Disney opened at 90, you have a problem because you have an extra short put. But, here with the stock down outside the expected move, it's a nothing trade. Now, if the stock was inside and up, you probably make $1, even though you had short delta at the start.
Yes.
And that's because of the short premium that you have in the weekly that has higher volatility. You're short a lot more vol there.
Very good, sir. Good job out of you. You know what? Even the S&P is down 44. Volatility catching a little bit of a bid here, up 20 cents, 1965. Nasdaq weaker by a full 1% now.
Yeah, got it. I'm gonna
starting to nibble a little bit.
Yeah.
Perpetual bull. Look at you.
There's not.
Hey, and if you're going to compare the two,
and it's small. I'm using.
Yeah, you're doing.
These are nothing.
Yeah. Mm-hmm.
These are, they're small.
Mm-hmm. Good job. All right. Well, are you ready to take a quick 90-second break? We've got Mr. Dylan Radigan and Hear Me Out, Nick. Does that sound good to you?
That sounds great. Let's do it.
Sounds really good to me. We'll be back in 90 seconds. It's 90 seconds. This is Tasty Live.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more. from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
There's a beast in the financial world, and it's not the bull. If that's you, join us on tastytrade. Genius loves company.
I'm still coming down from the weekend. Saturday night like we should. I know I should work a bit harder, but baby, your love is too good. You knew what you did when you planned it, you scammed it.
Nikki, we are back, son. We're having a little bit of problem reaching Dylan, so we got a little bit of a tasty extra coming back at you. Really just going to talk about the market here for a quick second. What do you think about here? If I told you that even the S&Ps were down 55 handles, and I told you the NASDAQ's down well over 1%, $324, the Russell down 23, just about 1%, and the Dow only down 117. Dow obviously keeping us afloat here, trying to keep us afloat. Apple is a big mover there, up 233. Would you think volatility was up 20 cents or more?
No, I would think it would be up higher, which is kind of you're getting a little bit of a move in gold as well. But that was my whole
downside move in gold. Yeah, down 15 now.
That was the whole thinking of being on the long side of the NASDAQ here. The NASDAQ really hasn't been the strongest of the group in the last week or so. We talked about how the Dow is kind of the headline here, as well as the Russell too. The Russell has been a little bit stronger, but it's really been Dow, E-minis have been kind of the ones inching higher, and then NASDAQ has kind of been in the dumps. It's been a little bit of that rotation. Talked about it with Chris yesterday on the last call of kind of the big name tech stocks have been out of favor for the last week or two.
Yes.
And the smaller names, the lesser, less popular names have been the ones kind of keeping us bid in this market. If you look at a Meta down $150.
Yes,
you think the market's crashing.
Yes.
But that's not happening.
Meta with a huge move lower up today, being one of those buckers that
I can't stop. I told you I was going to stop.
You told me you were going to stop with the scalping because you scalped it nicely. Now you just bought the NASDAQ again here at 325.
Yeah, I'm 50 points higher is my average here.
This is, I guess this would be.
This is in the hole. I've watched too many times people selling them in the hole.
This is.
I'm buying them in the hole. That's okay.
This is post. I'm going to stop.
Yes, this is post. I'm going to stop. I'll get out of one if we do a little bit of a bounce here. We'll say
Okie dokie.
10 handle.
You can try. So you would think that the volatility would be a little bit higher, right? It did trade up to 1975, but it's 1966. I would agree. Volatility's been staying bid the last 2-3 days a little bit. I would think volatility would be a little bit higher, but this is a decent size move. Even the S&P expected move is $34.
Should have held that silver.
Yeah, that's the problem with futures. You're always looking at
no, you look at the past and
the hindsight trade. Yeah. You gotta be careful there, son, with the hindsight.
Yeah, I know. I say it jokingly.
I know.
I think that's something that as you trade more, it kind of as your favorite expression, a water off a duck's
back. That's right. Like water on a duck's back. That's correct.
Yes. Yeah. But it's on both sides. You make jokes about it, I should have held it. But it's hard to hold it after, watching it move a couple $100 in a minute. You take that money and run. You trade it. We don't.
You trade it.
The hindsight it's killer. It really is killer.
Hindsight is a killer trade.
Yeah.
It really is.
Because if you don't have it on, it's over.
It's
you know what I mean?
It's true, and you can't hold it. It's so hard to hold. It's just a very hard trade to hold.
Oh, wow!
Scalping out of your NASDAQ. Good for you.
One of them. I'm still long, but I've scalped my way out of a hole here.
You scalped your.
It hasn't been pretty, This is
a hole that you built yourself.
That I built myself, yes. But I feel fine with it being an upside, hole. I don't know. I don't know how people do just selling, short.
It is tough, right? I mean, it definitely.
You're getting paid today, so.
You're definitely getting paid. You're definitely getting paid today. If you've been able to trade two sides, you're definitely getting paid today.
I like this though. You got vol basically, doing nothing. You got gold and silver both kind of taking out some of that explosion to the upside. This looks like a scoopy to me.
So far, it certainly does.
Apple higher. What are like my?
Yeah, we're not going lower with Apple. With Apple leading us.
Nvidia.
The way it is, at least it says. What's this?
Nvidia is kind of the fucker of the trend.
Nvidia down $5 and change, right? Yeah.
Yeah.
Nvidia, a big player in the market. It's had its own kind of correlation in the last couple of days, but a big player in the market. Yes, sir.
Yes. Cisco coming down a little bit. I just bought back the cheapy put. I'm out about $200 on that diagonal spread, but I'm gonna leave that long put on, see what happens here if this market continues. Google, that's another big one. Do I scratch this trade? Volatility relatively low. I had this, so I can pull this up too. I'll pull this up. Give me 1 second. So,
down move is over, son.
You think
for the moment? Yeah, it seems like it.
So I got this strangle on.
I mean, I think the lows are in here at 68.17 to the downside. It seems like it as of right now.
Yeah. So we did this crab trade into earnings, and this was, on the 9th here. So we're, somewhere around here, 250-ish. We can actually pull it up here on the market snapshot. So you right click, you go to view market snapshot. So we put this crab trade on, which has upside directional risk in Google. So we did this when the stock was at 240. It's now at 280. Okay, so you've taken 20% move to the upside. You're short an extra call against it. If we look back at the order chains here, so we sold a put against that position because you're naked an extra call. Sell the put, reduce some delta there. We took that position. We closed out of the long spread because you have that embedded long spread there, the diagonal spread. We rolled the strangle out in time. We did that for a small little credit here. So we've managed this position, which was a short call at 265, which is $15 in the money. You have that long spread, which is 15 points wide, so that hedges you a little bit. You get $15 of value out of that position here. We've rolled and we've sold the put against it, reduced a little bit of delta. The stock is now $10 off the highs, which was from where our short strike was 30 points. A face ripper to the upside. You think no way you can manage this trade. Right. Do a little rolling, little time decay, some volatility. I mean, like when we look at some of the other metrics here on the market snapshots, you can see the underlying price of all these adjustments. The stock's it was a face ripper, within a couple days, and then you get a little bit of chop, some volatility decay. We can look at the IV index here. You can see you get this kind of, vol staying bid. Our last adjustment volatility was at 37%. We can look at it now. It's probably lower. It's at 34% now. So you've gotten all those things that you can actually kind of trade around: volatility contraction, time decay, reducing your delta exposure. Those are all things that you can, trade towards. They're not indicators on your chart. But these are things that we look at. You look at IV rank. The IV rank is 27. You want to see where we were doing these adjustments at?
Sure.
So we started the trade at 50. IV rank of 42, and we made our first adjustment, 47. It's telling you that vol was staying bid into this big move up, which is not a shock for a tech type stock. Our last adjustment was at a 30 IV rank. It's now at a 27. So you've gotten at a certain point. Obviously, this one it took us a little over a month. Sometimes it might take you 2 months or 3 months or 4 months. I've been in trades for a long time.
Longer than you wanted to when you put them on.
At some point, you're going to get the volatility contraction. You're going to get the time decay. The time decay is something that happens passively throughout the trade. I mean, when you sell extrinsic value, you are capturing that time value. It's whether the stock moves more than that value is really your P&L.
Good job out of you.
We're gonna just close this one out, and
why not?
This is one where you start fresh. It's 100 and $120 loser that was probably at one point a comma. You know?
So you have those?
Oh yeah, of course. I mean, everybody has those, but it's one of those trades where
it comes down to your size too, right? So if you're not doubling up to catch up, then you're in a decent place.
And it stinks to be in that. Like you don't but those are going to happen. You're going to have those tail risks, and if you're too big, you get squeezed out in that $1,000 that you hindsight it. You close it at $1,000, and then you look at that trade now, and you're like, shit, I should have held it. I'm a scratch. It's the same way when we look at silver and we're like, oh, we should have held it because I would have made our 50 cents, but it goes both ways. So it nets out as zero. That's why you got to just kind of forget about it.
100%. You're 100% correct, son. 100% correct. Good job. Good job out of you. Yeah. You ready to take a quick 90-second break?
Sure.
Let's take a quick 90-second break and come back. We got more Tasty Live after this. We've got
They're gonna bounce this market all the way back.
I don't know about that.
You don't think so? But this is going to be one of those, like, we're going to end the day down 20 on the E-minis, down 100 on the NASDAQ. It'll be like one of those, like...
NASDAQ down 250, even the S&P.
You just, like, chopped all day. Nothing day.
Let's take a quick 90-second break and come back. We got more Tasty Live after this. What comes up next? A market measure.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home. Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Global markets never sleep. Explore them with Forex. Now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live at the top of the hour here. Pardon me. Even the S&P's up 44. There's about as much movement we've had in the market, two-sided action that we've seen in quite some time. NASDAQ up 220 and change. Russell down 220 and change. NASDAQ down 24, Dow down 130. Volatility up 13 cents at 19.58.
Yeah.
Gold down 13, about 20 some dollars, $17 off its lows, well off its highs by about $50. Bitcoin catches a small little bit over 103 to up 1,300.
Yeah, this has been a great market to trade. The last couple months have been, if you're taking stuff off,
just a trader. If you're looking for opportunities, if you're an opportunist, SOB.
To both directions.
Yes.
I mean, it's been awesome. And I tell people at every event, I'm like, you're going to miss this volatility because there's going to be,
And it's not really that elevated. I mean, but at least it's 19 and change.
But this is nirvana.
Yeah.
Like 19 to 22 range is just perfect.
Yep.
You don't want it to be super, super high because that's when you have, stuff moving too much. You can't, you put on the risk and you get those realized days. When you got a vol that's in, let's say 18 to 22, that's where stuff moves in both directions. You got stuff going, down a couple points to scratching on the day, and you could take stuff off intraday or, after a couple days. When vol gets to 13, 14, you're going to be like, this stinks. Like, I can't do this.
I miss it. I miss it real bad.
Like, this is, I hope volatility stays like this for the foreseeable future.
Totally agree.
Spikes in vol to, low 20s, come back down. Spike to low 20s, come back down. It's beautiful. Perfect.
Totally agree, my son. Totally agree.
Market measure.
0 days. Let's do it. Even the S&P's down 47, 48.
Flexing. You've been flexing.
They've been flexing.
You've been flexing. You look good, Pops.
Thank you. Appreciate it.
Very svelte.
Thank you. Well, thank you. I didn't want to look like some of the other people when I walk out. So I wanted to walk out.
Yeah, you wanted
I didn't want to walk out dragging anything.
You wanted to walk out quickly, not slowly.
I had to.
Yeah, didn't want to get stuck here.
Yes. I didn't want my parting picture to be a limp.
Yeah.
As I walked out. Yes. I didn't want to limp out.
A real life bobblehead.
Yeah. Yes, a real life bobblehead. Even the S&P down 48.
Oh.
Volatility up 15 cents.
Oh.
All right, let's go. 0 day.
Do it. 0 day. Flexing 0 day management. So in recent years, 0 day options have seen an explosion in popularity with traders and institutions, resulting in tight liquid markets that are perfect for active trade management. We have had a lot of fun with these SPX trades.
Yes, we have.
They've been good overall. Might even look at one here after the show, after we do this.
Okay.
Because we didn't do one this morning.
No.
We're going to wait.
No.
Delta neutral strategies give traders the ability to look for opportunities in attractive markets such as 0 day without committing to a directional assumption. So we're talking like iron condor type setups here. Typically, such short premium positions will profit if the underlying moves mostly sideways, but when the intraday action goes both ways, the two sides may have each profited at different times. So we're talking about kind of looking at management here based on each of these spreads. So not just looking at the trade as a whole, which is what we typically do.
Yes.
We're going to see if there's some sort of edge of, legging out of the puts, legging out of the call side at X amount of profit and see what that kind of looks like here. So we're going to be changing the approach, looking at profit targets here. Using over 2.5 years of data, we're looking at every 10 minutes, this data being collected. We're considering selling a 0 day iron condor at 9 a.m. Chicago time. We're doing that in a 5-minute window here, plus or minus 5 minutes each day, using a variety of short and long strikes. However, these are conceived or looked at as separate put and call verticals. So we're talking about closing the winning sides. So today, if you put one on in the morning, you'd be closing the call side.
That's correct.
I just bought in the risk on Oklo.
Oh, very nice.
Is that coming down? We did that wide ratio. That was a fast market trade.
Down $4.45.
I have that on for a small debit net. So I have that. I own that butterfly for about a 60-cent debit, but you got 30 some odd days. So it's a cheapie.
It's not moving.
It's not going to move. I put that order in at $2. It's a round number. The markets are 70 cents wide.
Yeah. Yeah.
I just said, you know what?
I told you when you traded that you have to watch out in there because those markets are quite wide again.
Yeah, but you've had a little bit of a downside move.
Yeah.
Vol has come in a little bit. You had earnings. That helps.
Ivy rank of 53 in there. It's
So now I have a 40-point range
70s. Yeah.
that I have for basically free. It's a shot trade. I could have just closed the trade for 50-cent winner.
Mm-hmm.
I'm going to leave it on and give myself the lotto ticket.
Yeah, you've definitely got a lot of movement in there, so you're fine.
You get one day where it's up $20, and
Yes.
that's going to be trading at $2, $3.
Yep.
All right, so we're looking at winning sides, closing them when they got to certain profit targets. So we're looking at 20, 35, and 50% of the max profit. All these trades were assumed to exercise at the mid price, which is sort of generous because a lot of trades you have to move them, but it's as good as we can do, obviously. But we're going to look at managing these trades and what they look like here in the next couple slides.
Let's do it.
So,
a gesundheit.
Thank you. Short strikes, 30 delta, $10 wide. The put side, $5 wide on the call side. So this leans a little bit long. You'd expect this to be a little bit better than being neutral because the market has gone up in the last 2 years. That's why all the put studies have looked good. And so here we're looking at managing the trade separately. So closing at 25% of the max profit. So that's each spread, not the trade as a whole. You're looking at each spread, whatever you sold it for, 20% of that. You can see the win rates across the board here, 25, 35, and 50%. Your win rate goes down as you have to hold the trade longer. That's not a shock because you're looking for higher profit potentials. You will see, however, and this is pretty intuitive, your average P&L, daily P&L is going to be negative because you're taking, a lot of these winning trades are put sides, which means that your call is being tested. And so a lot of these trades where you're taking off the put side, you're taking profits and there's profits left, and those will end up being out of the money because over the last 2 years, the market's gone up. So you're really just losing on the call spread on all these trades. And so as you get to a higher profit potential, your trades get better. And that's because you're selling a meatier put spread, but you're also taking more profit. And in hindsight, you're looking at a market that has done nothing but go straight up. And so, all these are going to look the same. Your CVAR here is relatively flat across the board because these are tight, defined risk positions. But the key here is to understand that anything where you're managing trades on both sides in a roughly one-sided market over the last 2 years.
Yeah, you can't argue that it hasn't been a one-sided market when we're a skosh off of all-time highs. Definitely been a one-sided market.
It's going to skew the results. Yeah. And so here, the point being here is like there's not really much to be had from targeting profits on either side. You got to look at the trade as a whole.
Yes.
And over the data set, it skews very bullish. And so you got to kind of take this with a grain of salt. The next studies that we do are going to be on iron condors, a little bit wider, managed at much less aggressive profit targets. And I think that's going to be the way that has worked in hindsight over the 2-year bull move if you weren't just YOLOing upside, short puts every single time.
Perfect. Good job.
Next slide here. So getting into the short strikes at 20 delta, we're looking at $10 wides on both sides. So $10 wide put spread, $10 wide call spread. So this is just like your cookie cutter 20 delta iron condor. Again, you can see like the data here is kind of skewed. You have your win percentage is what you would expect. When you are managing at higher profit potentials, nothing really changes here. But again, you have to keep in mind that the call spread has a lot more risk now. That's why these numbers are basically the same at 20% and 50% versus the last slide where you only had $5 in risk on the call side, where it gets better. And that it gets better because the market went up.
That's correct.
And so here, obviously managing at a higher profit potential is going to also reduce your daily CVAR. And that's because you're taking more profits on these and specifically more profits on the put side. It basically works out 1-to-1. Like that 70-cent difference in CVAR is because you're taking 70 cents more profit on the put side. Or probably maybe like 40
cents. You're booking a profit, right.
Yeah, you're booking a 50% profit. You sell it at $1.50, you're taking 75 cents versus the 20% where you're taking 30 cents. That's your difference.
Love it.
Next slide here.
You've gone through these very, very nicely. You've explained them well. You're prepared.
I do look at the slides and I do prepare these things prior.
You're doing an excellent job. I just wanted to quote you.
I'm gonna scoopy one more of those Nasdaqs. We'll let one run just for
Nasdaq only down 180 and change.
I told you it's over. Done. That's
it. What they usually say. As foretold.
That's it.
As foretold.
Did I get filled on that? I didn't get. Did I get low dinged?
No, you didn't get filled.
Oh, I didn't get filled.
No, we're out at 39.
Oh my God! They just moved 10 handles.
They are dynamic, and
they're moving all over the place.
Yes, because they're back to 30. They're back to. Well, you sold them at 33. They're back to 30 right now.
I had them in at 40.
Yep. So you're completely flat now, right?
I have one left.
Oh, one more.
A little, as the kids would say, a little runner.
A runner.
A little runner.
A little runner.
You let that one run to the
You just got 20 handles, so that's pretty good.
Yeah, well,
good little scalp.
If we get a little bit of, if we get back below 400, we'll look at something there.
All right,
another 40, 50 handles to the downside. Last one here. Let's do it.
I'm ready.
So here we're looking at the 20 delta strikes with $20 wide put spread and a $20 wide call spread. As you'll see throughout all of these, this one you have further out of the money risk in terms of you're collecting a lot more premium on this trade. So your risk on the upside is a lot further out of the money, which skews the P&L values again here. This is why this one is better than the other two, is because you're selling a bigger spread on both sides. And you'll see all the probabilities and the win rates, they play out as you would expect. It's just that you're realizing a lot of the tail risk here because of how much upside movement we've had here. This has not been a choppy market.
No.
In the last 2-year data set. So here you can see average daily P&L, and we're talking about like a couple dollars. You're basically flat on this. And you have risk on both sides of the market into what has been just a straight up market. Imagine if you get a little sideways. How nice this would be.
Heaven forbid.
Heaven forbid. It'd be scary. A couple takeaways.
Sure.
We're very early. I went through these too quick.
You went through them.
There's not a lot. I wish there was that's why I need the iron condors managed at smaller profit targets, because these are it's been all straight up. We did the puts. The puts were they're amazing. Obviously,
yes.
You put that risk on every day. It's
every day, and twice on Sundays, even though we're not open on Sunday.
When it comes to option trading, opening a position is only the beginning. That is profound. I will have to talk to the people about some of the ChatGPT that's been used on the summary there. That sounds like a little bit of that came AI.
Does it bark at you?
Yeah, a little bit.
A little bit.
The rest of it is okay. Managing the two sides of the 0-day iron condor as separate verticals was not an overall rewarding approach over the past 2 years, thanks to the persistent upward movement in the S&P 500, the SPX. This is, kind of the problem with 0-day data right now, is that the data set just isn't large enough. You have to, take that with a grain of salt with anything that you look at with 0-day stuff, because there's not enough data and there's not enough of both directions to really pull a huge conclusion out of it.
You're 100% correct.
So profits from days with significant profits from days with significant two-sided intraday action, however, such as we have seen recently. So doing it when you have two-sided action, it has been better. Those are
but you don't know when you're going to have two-sided action. You can't cherry pick that though.
Yes. In these cases, it was important to let a larger portion of the credit come in from the winning side than we often do with treating these as one trade. So again, the higher profits with more long delta has been the best way to trade.
It's been a good thing to do.
Using different widths in two directions allows for trading on a mild directional assumption. So, doing the $10 wide, $5 wide on the call side, but exposes one to the larger of the two downsides. So there's always a trade-off to everything. The flexibility
from the liquidity of zero-day markets means that you can profit from any kind of action with the right combination of strategy and mechanics. I mean, these have been, even in a persistent bull market and you're two-sided on these trades, there was no big pain. I mean, you're pretty, on an average basis, it was a zero sum for the most part. And I say that with the fact that the market has gone straight up.
Market has gone straight up.
You get some chop and you're golden. The question is, will we ever?
Chop today for the first time. They are only down 29. I say only down 29 because they were about 30 handles. Excuse me. 30 handles lower just a moment ago. NASDAQ down 155. They were almost 150 handles lower just a moment ago. Russell down 20. Dow down 100. Volatility completely unchanged at 1945. It's now 1942, down small. Bonds down 16 ticks. They haven't really moved. Bitcoin 103, trying to catch a bid, up 1,400. Ethereum up 25. Bitcoin up on a percentage basis a lot more than Ethereum, almost twice as much. Oil up 55 cents. Gold futures down 5. GLD is actually up 70 cents. Gold futures trade 24.5. GLD is set to the close. Silver down 35 cents. Nat gas up 7.5 cents. Nat gas making new highs. Expected move in the E-mini S&Ps now down to 28 from around 35. We're going to take a quick 90-second break. We're going to come back. We got the trade. What you doing now? Oh, Palantir. What'd you do there?
I did like a little 1-by-3 ratio. I took $100 out of it.
You're putting this on as an opening trade.
This is a closing trade.
Palantir. It's a closing trade. I saw a credit, so I thought it was a opening trade.
I know you're not used to the whole credit thing. Like
as a boomer, right?
You make like $2, $3, $4. You know, it's nice. You feel great. You're used to you close at 40 cents. That's a nickel. Look at you.
You put this on in Palantir. If I remember correctly, it was my suggestion.
Yes, definitely.
Thank you for at least doing that. You did it for what kind?
Yesterday.
What kind of credit did you do?
We did a $1.50 debit. So we sold 3 against long 1 further out in time, kind of like what we talked about with the Google position. You had a little bit of a pullback, and vol has just gotten crushed. So the December.
You made yourself $1 on the trade.
Yes.
Overnight.
Yeah.
Thank you, Dad.
Yes. Good job out of you. You're good at this.
We're going to take a quick 90-second break and come back. You know what? There's 2 sides to every trade. You found the close. You know, let's just make it a kinder, gentler place.
I was just looking at the stuff that you've done, and I was like, I didn't know if you missed it because there's a lot of things on the.
We're going to take a quick 90-second.
The team.
Put in a spreadsheet for me.
You know why we call this the bats? Because it's the team.
It is a team.
This is the duo here.
It is the duo. It is the duo. We are trying. Trying our best. A coin down $1 hasn't gone positive yet. We're going to take a quick 90-second break and come back. We got more Tasty Live after this. We're going to go to the.
You want to do phone calls too?
Yeah, I was going to say that. Let's go to the trade desk and let's go to phone calls too. So if you call in 855-238-2789 or 855-BE-TASTY, that's the phone number to call. I'll have the phone number up there in just a moment. If you call in, I won't make you wait. I'll put you right through. I'll interrupt the trade desk guys or whoever's here to get your question answered. If you have a question, we would love to hear from you.
And YouTube. If you're on YouTube,
of course,
in the YouTube chat, throw them in there and we'll.
We are YouTube friendly here now. 855-238-2789 or 855-BE-TASTY. We're back in 90 seconds of Tasty Live.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at tastytrade.
Nicky, we are back, son, and you know what that means? Well, we're taking your phone calls, 855-238-2789 or 855-BE-TASTY. Phone lines are open. I would love to hear from you. If you have a question for Nick or myself, we will take your phone calls. We'll have that number up in just a moment. There it is. See that? Call Nick.
Yeah.
855-238-2789.
Talk to the bats.
Or 855-BE-TASTY.
Call the Bat Cave.
Call the Bat Cave.
The Bat Phone.
Do call, and I'll go immediately to your number so you don't have to sit there and wait. But right now, we hear from this guy, Q. Quentin. What's up, my man?
Fellas, how's it going?
How's it going, man?
You know, John could be our Alfred.
He could be our what?
Alfred from Batman.
Let's ask him.
He could be our Alfred.
John, do you mind being our Alfred?
Yeah. John's not on. It's Beth.
Beth.
He said yes.
He said yes? Okay,
There
yeah.
we go.
John
There
could
we
be
go.
our Alfred. It would be perfect.
I like it. I like it.
Do you like that? I think that's good. I think that would be fun.
You know what? John is a kind human being.
I know.
He really
that's
is.
what
Alfred
is.
So he fits the role. He fits the role. Like you would not be an Alfred, but he would.
No.
He would be an Alfred.
No, but Alfred was the man behind the Batman.
Totally.
I mean,
Yeah.
that was the guy.
Yeah, he was the man.
So-
Yep. 100% correct.
Yeah, well, today, fellas, we've got some two-sided action.
It's beautiful.
In the markets.
Wonderful.
Markets are moving. I thought, we saw the down day. Wait, I meant to ask, Nikki, did you buy the dip on that big down day last Friday?
Oh, well, of course.
Did you buy the dip? I mean, I was thinking about
the
that.
dip today.
He was on the show too, so I mean, it's all
Oh,
there.
yeah.
Yeah.
So you got,
You
it's
don't watch-
archived and everything.
You don't watch the show?
Man, I was busy.
He
doing the
does
TC
work,
Live
you know.
event.
I mean, he does answer phone calls.
Well, I was doing the
Oh.
event. I was doing the event. I mean,
Yeah.
I do miss watching the show, though, because I used to watch it, every single day, all the time. And now, I got things to do. I have a lot.
John, work gets in the way.
Life gets in the way. Yeah, work gets in the way. Exactly.
Yeah. You can't tune into the
This is me tuning
redheaded
in.
stepchild over there. It doesn't
This
matter
is me
about that.
tuning in,
Yeah.
I come on, try and provide a little bit of value, the most I can.
Oh, come on. You know you do a great job. So.
Oh, thank you.
I know you.
Yeah, no, I love when customers
You know
call
you're
and
fishing. It
stuff.
seemed like you needed it. So
No, the
give it to
customers
you.
call and when they get me, they're like, "Oh, I watch you on the show. You're doing a good job and stuff like that." So I appreciate it. But no, we're not fishing. We don't do that. We're not fishing.
Yes.
But
No high fives.
No high fives.
No high fives. Yeah, I'm with that. But yeah, we've got some good two-sided action. Implied volatility is high. What's the VIX trading for? /VX. You like to use the future?
19.5. I'll just
Yeah.
round.
Oh,
I'm thinking
okay.
rounding down by
That's
about
what it
8
was
cents.
like.
It just
ET
ro-
the other day.
Yeah, we had the roll. Last week was.
Oh, okay.
Yeah.
Was it? Yeah, it was last week.
Yeah,
I think it was
18 and change
Yeah, it was
last
18
week.
and
Yeah, it's got about $1 worth of juice in it. Even the S&P just sold off a little bit. They're down 43. Volatility up 10 cents. You just bought some target puts.
Yeah, I sold them out at 310. Or I did that like the other day. So I don't know. Just
Yes, I saw-
I love. It's our research. It's everything. You be nimble. You got a soft market right now. You're at market
Yeah.
highs. You're buying puts back that you're making a profit on.
it was like 15%.
Yeah,
not
in a couple of days.
yeah.
Listen,
A couple days.
pays the electric bill. You know
Yeah,
what I mean?
earnings are coming up too. So like
It's going to volatility.
you get a little bit of a downside move. Maybe you get back into earnings. Who knows?
Yeah, no, what we see most of our customers do when trading, they don't always force it when, implied volatility isn't high. But right now, we've got a lot of opportunities for the premium sellers.
Yeah.
So it's getting, market's getting more exciting. It's not just, green bar after green bar, right? Got a couple down ticks.
I have to interrupt you for a minute.
Of course.
I have to go to Orlando, Florida. I got Scott Chapman, Orlando, Florida. What's up, Scott?
Hey, what's going on? Is this Tony?
Yes, it is. Thank you so much for calling in.
This the Bat Cave?
We're in the Bat Cave.
No, you were in the Bat
right.
Cave.
Yeah, that's right. Hey, I was out in Austin and saw the live show. It was pretty awesome.
Thank you, man. Appreciate it. Appreciate all your support, too.
I don't know if you remember who I am. I called you Nick.
I don't know if that's a compliment to him or an insult to me. So I don't know.
That's a compliment
He
for
got
both
us.
of
Let's
you.
just put it that way.
Yeah, you got one of us is pissed.
I do remember.
Yeah, one of you guys is mad. Yeah.
Yeah.
You guys get to choose who gets the compliment.
I'm going to say me. I know I'm getting gray here. I'm not that old, though, okay?
Hey, so I have a suggestion / request.
Okay.
Sure.
So I'm relatively new to options, okay? And when I watch your show, I love your show. You guys are incredible. I love the whole platform, the whole 9 yards. But what I need is a little bit of the basics.
Mm-hmm.
You know, you guys are throwing out the debit spreads, the call spreads, the iron condors, the butterflies, the J lizards, all that, and all that stuff is way over my head. I understand it, and I know that it's an important part of the piece of the puzzle, But my puzzle is at the beginning stages, and is there any way you could incorporate maybe like 1 minute in your show to like the very basics, like, hey guys, this is when you want to sell a put. That's all I'm doing. I'm selling puts and selling calls. I don't buy calls. I don't buy puts. That's all I've been doing. I get assigned, and then I do the wheel strategy, right?
Mm-hmm. Yeah.
So
okay.
that's I don't know when to sell a put.
Okay. All right. You bring a good. We got to bring it back. We got to bring it down sometimes.
Yeah.
I mean, sometimes we.
Yeah. Because some of us, the entry guys, it's a big learning curve. You have to admit.
Yeah.
For sure. We are lucky. We've got a office full of traders to bounce ideas around and talk about trading all day long.
Yeah.
It's definitely something we're working on some of that stuff as well with maybe a Discord group and Reddit is kind of building that up, but we're trying to make that a little bit more accessible to everybody else.
You know what I think would be interesting actually? Maybe like you guys host a like back to the basics webinar or something like that.
You trying to make me work more?
Like that.
You got. What are you trying? What is this?
We can do an intro.
Volunteer, You guys, how about you? Okay, how about that? How about you?
Hey,
how about them?
tastytrade.com.
These guys.
I say, how about we make Glenn do it? He's the best.
I haven't taken a bathroom break yet. Okay,
I've ever seen.
What more you want me to do? You want me to stay here another hour?
All in favor of Glenn. Raise their hand. All in favor of Glenn. All in favor of Quentin?
I'm in favor.
Raise your hand then. All right, two Quintins. We're in.
We could do it. Also, the Tasty Trade courses have been pretty good for us.
Yeah, you can go to the Learn Center too, sir. I mean, I know I don't want to. I'm not blowing you off at all.
No,
we hear you, and
I do it all the time. I watch the stuff. I'm talking about. I want the professionals to dumb it down just a little bit for 1 minute. That's all I'm saying. All the pros can go get some coffee. But the newbies can say, like for example, NVIDIA. When would you sell a put on NVIDIA and why?
Now.
NVIDIA down 5.
I just did.
There you go. You're ahead of the curve. You know why.
Yeah, but the only problem it has earnings November 19th.
Here's what I did, and correct me if I'm wrong. This is what I did. I take I don't really look at the implied volatility. I look at the expected move, the strike price. Subtract this from that. It usually puts it at about a 17 delta, and then I'll kind of stay in that range.
I think that's good, but implied volatility tells you why you're looking to sell those puts. You're having a little bit of a down move, volatility expands, the premium on the downside, those puts become juicier. So instead of selling it at $2, it's trading at $3.
Right.
And that's why you're going to sell that put and looking to sell that put. It's not because you think that tomorrow NVIDIA is going to be up. It's that, maybe tomorrow NVIDIA's up, but volatility is high, and I want to get, I want to sell some of that premium. I want to be long that time as well, because you get that theta decay, but you're doing it. You might not realize that you're thinking about all the things I'm saying right now,
but you're doing it for the right reasons.
You're doing it right now. You're saying, okay, stock is down. It's at 187.
It's a market leader.
It's a market leader. I want to lean a little bit long. Volatility is high. I know you didn't look at IV, but the reason you're looking to sell that 17 delta put is because it's trading at $3. A week ago, it was $1.50, and you probably wouldn't have sold it. And so you're kind of looking at all that stuff intuitively.
What's considered high and with implied volatility? That's a little confusing for me. What's low and what's high?
Because it's subjective.
Yeah.
If you look at IVR, IV rank, like the monthly implied volatility on the right-hand side of the screen is what it is. That's an absolute number. We don't even look at that really. What we look at is IVR. The IVR at the top of the page in NVIDIA is 28. That's relatively, under normal circumstances, the lower end of the range. I wouldn't want to put on any new trades selling premium with an IV rank under 25, but you're using December options. If you look, November 19th has earnings, so volatility is going to stay a little bit bid here until earnings. So I think you're doing it for all the right reasons, and I think you have a decent amount of volatility IV rank in there. in your overall trade. So I think you're doing it for the right reason. To answer your question, over 25, closer to over 35 would be my entry.
And that's with the rank and not the actual implied volatility.
Yes, IV rank.
IV rank puts a context to where implied volatility is. So the number of implied volatility, it doesn't tell you anything about that stock's range in implied volatility. So if I just told you it's got 100% implied volatility, that's a high number, but that's not a high number for a meme stock.
Right.
That's a high number for Apple. And so you need IV rank to give you that context to tell you where that number has been. When you look at something like in NVIDIA and IV rank is at 28, so it's kind of mid-range, and you look at the implied volatility, the actual implied volatility at 52%, it tells you that implied volatility here probably goes from 40% to 70%. You know, like there's you're in the middle third range of that range in implied volatility. It gives you the context to quantify actual volatility in the underlying.
Sir?
Okay.
I'm gonna have
another piece of the puzzle. Thanks, guys.
We will do more.
We'll do a better job. Yeah,
we will
appreciate
do.
it. That's great feedback.
Yes.
Great feedback. Continue, my friend.
Hey, and you guys continue doing a great job.
Thank you. Thank you again.
Thank you, Scott.
That's a great job out of you, by the way.
Appreciate
Good job
it.
out of you.
Thank you. I went against my own rule and got another NASDAQ.
Yeah, I see that. You're trying to scalp NASDAQ from the long side here. All right, beautiful.
All right, guys. Hey, thanks a lot.
Thank you.
Appreciate your service.
Quentin, back to you.
Yeah, you know, back to the basics. That's really interesting. Like on courses.tastytrade.com, if you have an account, you know, no extra charge, no fees to open an account, no maintenance, whatever, any of that stuff. You know, you could just log in. And then we've got a lot of basics content on there. We've got bullish strategies, bearish strategies. We've got intro to futures as well. That's one of the newer ones that's come up. We've got trade desk FAQ I did recently as well. So that was really cool to add. So we've got a lot of good content, not only like how to use the platform, but some more basic strategies if you're just getting into it.
Very nice. Very nice.
Yeah. So I always like those. Customers have seen to, you know, really gravitate towards those. And the customers that do view those trade a lot more as well.
Yes.
So not only does it help you with the knowledge, but helps you with the confidence as well.
Good job out of you.
All right. Thank you, fellas.
All right.
Let's get to some business here. Top 20 symbols going through the system and their IVRs. At number 1, I've got Tesla, 14, NVIDIA, 28, Disney, 16, Cisco, 31, AMD, 35, Palantir, 16, Meta, 19, Oracle, 86, CoreWeave, 18, Amazon, 17, SoFi, 28, GLD, 68, Apple, 12, TQQQ, 32, Google, 27, SLV, 55, IBIT, 46, Robinhood, 22, NBIS, 62, and Netflix at a 16.
Good job out of you. But before I let you go, we have to do a proof of life call right now. Mark the trainer in Florida. What's up, Mark?
Gentlemen and Quentin, how are you today?
So it's Quentin, not
I
Quentin.
got to tell you, Nikki Bat, you really came into your own. You're doing an amazing job. You really are.
Thank you, Mark. Thank you.
I think what people should start looking at is Meta. Whenever Meta gets hit, you know, because it's like it'll get hit for 20, 25 points. Start selling iron condors 3 different months or 3 different weeks. It's been a real big winner for me.
So it's had a little two-sided action the last couple of weeks.
Kai was kind of on that.
Yeah, Kai was on the same this morning. Yeah, he would agree with you.
Yeah. I mean, that's the way to go because the theta is greater than the delta on these options.
Yeah.
It's really amazing. So
good little catch.
When it gets, you can only do it when it gets hit.
This volatility is expanding a little bit there. It has been an underperformer in the market for sure. It is up $5.60 today.
But it is
because I was
dog.
down
It's a dog.
$1,000 yesterday at the close on 3 different positions. I not only made up that $1,000, but took 700 on closed trades today.
Good job out of you, my brother.
Well, I'm a tasty trader, right?
Yes, you are.
Yeah.
Yes, you are. Beautiful. All right, good job. Thank you
All
for
right,
the
guys,
thank you for the tip.
Fantastic job.
Yeah, appreciate it. So I learned something.
Right, be well.
Thank you.
Thank you, Mark.
It's Quentin, not Quintin.
It is Quentin, not Quintin. Quentin. So I do not care at all.
Oh, I didn't know that.
Quentin, Q.
I like Q.
Whatever. As long as I know it's me. Over the phone, a lot of the times I'll get Clinton or Clinton.
Oh, yeah.
Which I really don't care. I'm just here to help.
I will not call you Clint.
You call me whatever
I like
you want.
Q. Q's like it sounds like trader,
Yeah.
That's my guy Q.
Yeah. Clink was coming up to me yesterday. He was like, wow, like Q. And he's like, why do they call you Q? I'm like, well, Clink, it's, the first letter of my name. And he's like, yeah, but that's a pretty official moniker.
Yeah.
I'm like, yeah, well, you know.
Right. You're like L, even though she didn't have one letter. I mean, it was.
Yeah, no, that's different. L is different. Like, that's a one name type thing, but one letter,
One letter.
A lot of people that.
It's like a one letter license plate.
Mm-hmm.
Yeah. But a lot of people that have like Q, like Quincy or something like that, a lot of those people go by Q anyway, just because, Q's
you're overstaying, you're welcome.
All right.
Who is
Thank you, Quinn. Q.
Who is our next player?
Quinn.
Player with an A. Oh. It's you again.
Tis I, Glenton.
Glenton. I like it. Oh, I have to interrupt you. Orlando. George in Atlanta. Orlando, what's up? George, thank you for calling in.
I think we may be old and slow down here in Florida, but I agree. All the trades on the follow page have gotten too complicated to be able to figure out. They're all custom. They're skewed. They're split. They're calendars. And I've been with you for 10 years, and I can't understand why you're putting on these trades.
Okay, that's fair. That's fair. We will work on that.
That's all.
Okay. All right, thank you. Appreciate you reiterating it.
All right.
Thank you. Appreciate it.
More puts.
Viewers are very in simpatico with my wife. She also has to tell me things 4 or 5 times, and I say I heard you the first time, but I appreciate it. You guys don't have those problems yet, but you will soon. I can see a handwriting on the wall. Fire Marshal Bill, how are you?
Doing well. It's been a roller coaster of a week. You know it. Because, fire drill. I got my wisdom tooth out on Tuesday as well.
Oh, I didn't know that.
So I've been cranking soft foods. I have a bone to pick with Mr. Bob Evans himself. Packages this Jewel Osco mashed potatoes. Love mashed potatoes. It says feeds 4 to 5 people.
Oh, that's not inflation.
Are you kidding me?
That is. You pound that thing in 30 minutes. Easy.
Yeah, and I did. Yeah. 1.5 pounds. See ya.
Yeah, no chance. That's not a 4.
Yeah, I'm living the dream.
Yeah. Did your girlfriend record you afterwards, like a little, like one of those videos, like where you get the
because you're under and you're all stunad, we would say in Italian.
I don't do all that.
You don't do
one shot here, take it out. I'm walking.
Oh, you didn't do the gas?
No gas.
Huh.
You know me, Tony.
That's a tough guy.
I don't feel pain.
Yeah.
Why would be my question to ask. If you could, why?
Why what?
Why would you not want the gas?
God, I really can never do anything right. I try and, just live my own way, and I'm too soft or whatever, and then I try and...
You have some dark secrets. You have some dark secrets you didn't want to tell.
Naughty things, and then
we know you
have a problem with that too, so...
I would have gone in either direction. If you took the gas, I would have gone the other direction. You know that.
I do know that. I'm now getting it. I get it.
Oh my God.
You're a good man.
How are you guys?
Thank you for playing along. I appreciate it. Even the S&P is down 62. NASDAQ down 300 and change. Volatility making new highs here. Bonds down 11.
Bitcoin round trip.
Bitcoin 102 now, just under. It was just 104 a moment ago.
So close.
So close.
Selling off there.
Yeah. What a wild day today. Maybe a little Coinbase short put.
Got some
Coinbase.
People want the easy trades, the short puts.
Sure. Coinbase down $8.80. Ivy rank is only 22. It's relatively low. You already have positions in DESA and Jan in there.
What about like the 240 puts? We've been trading those a couple times. I sold them on the 6th at 525. I bought them back at 340 on the.
Talking about the DESA 240
on the 10th?
puts?
Yeah, they're now like back in the middle of the range at like 450.
Yeah, you look at the open interest here, it's in the thousands. You look at the volume, it's a little bit anemic. Markets are a little bit wide. Stock is relatively soft today.
Yeah.
So my way of looking at it, we're going to a short 13 delta, relatively low delta. I would be looking, if I was going to put this on, closer to the offer. Like I might make the offer better at 470, but I'm not making the offer better at 450, right?
Wow.
Where'd you get filled?
I sold the 250.
Oh, you went a little bit higher.
I went one strike up. I put it in. It was marked at $5.90-ish, $6. I put it in at $6.15. Got insta filled.
Yeah, that's why you got to go in closer to the offer when these markets. You got. Sometimes you got 2 ears and 1 mouth. You should listen twice as much as you speak, and you should let me finish.
This is
my statement here.
This is the problem when you work with family. It's like this. It's like this.
You got filled.
Like I gotta talk about the 5 cents, the 3 cents I missed on this, and the 500 I got on something else.
It all adds up.
Thank you. Thank you. See, spoken like a true riding the middle ground here person. Good job to you.
Yeah.
Well, what do you got for us today? Bring us something.
Looking at FX markets, it's actually been interesting this morning. This week, the U.S. session in particular has been pretty muted, which hasn't been a ton of fun for U.S. traders. A lot of overnight moves. But looking at markets right now, looking at the Eurodollar, look no further. Looks like we might be breaking out here to the upside. Dollar getting hit yet again. Now, in the past hour, we're moving towards 116.50. We got up to around there in the European session around 4 a.m., came back down pre-U.S. market open, but now we are through those highs. So momentum traders might favor, this going now, beating that little stutter we had this morning. British pound, U.S. dollar, similar price action, now trading through its 2-week highs after a pretty established range there. Had some UK data this morning, positive for the pound right now.
You're really catching a bid the last couple of days too, right? And with the pound.
Very consistent. We're looking at a pretty strong bounce from when we broke below 115 briefly, looking November 5th, Wednesday. Now we're up 150 pips there. Dollar holding in against the Canadian dollar, still holding that 140 line, but that's about it. Dollar Swiss franc now trading back towards its range lows near 79.30.
Yeah, that one has been painful.
Yeah, that one's going with a lot more strength than its European counterparts.
Blame you. I blame you.
That's good.
Because when you came on, you said the franc. And I was like, okay, I got to get long with dollar against that.
Well, there's always time for it to come back.
Yes.
But dollar yen also bouncing off of, that was interesting earlier this week. Thought there might be some BOJ intervention, but not today. Trading down closer to 154 after stuttering near 155 earlier in the week. So that's at the top of its range. If you're looking for more range opportunities in these lower volatility markets, dollar yen is coming off of its highs. It gets a little murkier in these European currencies, but they definitely have some momentum right now. Checking in on IG Group client sentiment real fast against these major US dollar pairs. We have 52% of traders short euro dollar, 55% long pound dollar, so a bit of a mix there, as more perception of future pound weakness in the market. 61% of traders short dollar yen, so favoring this reversion against the dollar. 81% long U.S. dollar Swiss franc, like yourself, Mr. Batista.
I don't like that. I don't like to do that.
You're so public.
Shoot. Damn.
But that number,
I was just going to add to it.
That number hasn't really fluctuated a ton. We're seeing a lot more position traders in that market. 64% long in Australian dollar, U.S. dollar, favoring some more U.S. dollar softness there. But U.S. dollar wins out against the Canadian dollar, 56% long that pair at its recent lows of 140, but still historically pretty high for that North American pair. So it's nice to see some divergence in these U.S. dollar pairs, not all moving unanimously, one-sided dollar stories. So a lot of opportunity out there to get some nuanced positions in the same dollar markets for whatever different time horizons, looking at that Australian dollar, US dollar, and that Canadian dollar as more, risk plays as we see markets sell off a little bit. We're seeing the US dollar hang in there, but not so much against the yen and the franc as safe haven appeal, perhaps going to those offshore currencies rather than our US dollar.
Good job.
My friend. I might add a little bit on the front.
Just a little sprinkle?
Just a little sprinkle. So
You're in.
I'm going to buy another couple lots here. Little mini, little tiny. But the functionality is awesome. So when you're on the trade page here, you just click the buy button, you put your sizing in, and then it's a one-click trade. Lots of leverage. Lots and lots of leverage. And then when you're in, it's done. It adjusts all your lot sizes. And 19 micro lots. I like to do them in different sizing because you get different line items and you can one-click close them. So I like to do them just slightly different each time. So you get a couple.
And to contextualize that 0.19 lots in that dollar Swiss franc, that is controlling a notional position size of 19,000.
19,000 total, then 9.
Correct.
Yeah.
So I don't know what your margin requirement is on that.
Small.
Yeah, but that's levered at 33 to 1. So you're getting that $19,000 notional exposure at a clip of around, what is that, 6,000?
Oh.
What are you doing over there?
I mean,
look at you guys.
600.
A little SPX, something?
Yeah, I gotta do a little option trades today. I gotta start loading it up, getting it ready there, son.
Beautiful.
Ring, ding, 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 ding.
We love the ding.
We love the ding.
I want my FX ding.
Yep.
That's my FX ding. Yeah. Something like that. That was kind of like an FX-y ding,
Well, and what does that mean?
Just like a little bit like hoity-toity, like it's like a little uppity kind of.
Oh, it's definitely a little uppity.
Yeah, like I trade the fond, not like I got crab trade in Google. That sounds
right. That sounds a little.
That sounds like
pedestrian.
Yeah, pedestrian. Like I am short the funk.
Mm-hmm.
So,
All right, good job out of you, my friend.
Thank you.
You did excellent. Even the S&Ps, take a little hit down.
Yeah, this ain't fun. I don't like this. Send them back up.
Even the S&P's down 74. NASDAQ 30 went down almost 400. Russell down almost 40. Dow down 325. Volatility up by 41 cents. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with who comes up next?
We got Liz and Jenny, of course.
Jenny and Glenn. Come on now. It's Red Shirt
Glenn
Thursday.
as well.
Oh, Red Shirt Thursday. Oh, that's why you have a pseudo red shirt on.
Yeah. I count it.
Thank you.
Counts.
Good job out of you.
Good job out of you.
Suck up to the ladies. The best thing you can do in life. You learn how to do that. Good job out of you. We're going to take a quick 90-second break and come back. You got a lot of work to do, by the way. We're going to take a quick 90-second break and come back. We got more Tasty Live after this.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tastytrade. Download today.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
everybody, and welcome to the Liz and Jenny Show. Today is Thursday, so we're joined by Glenn. Hello, Glenn. How are you?
Hi, guys. I'm doing well. How are you?
Hello, Glenn. It is great to see you. I was just saying, I don't think we took any pictures when we were in Texas, the three of us.
A missed opportunity, and I'll take responsibility. I apologize.
And especially because all three of us snuck away for a little bit. I'm hearing an echo. Are you guys getting that echo too?
Yeah. John, there's a little echo. I love hearing Liz's voice twice, but
I think you're hearing it like 5 times.
Yeah, Texas was fun.
It was a great time. I was so happy to have you with us.
Oh, thank you guys. You made the setup much easier.
Glenn, is it happening for you too? Because you know how like when you're on the phone and you can hear yourself talk again?
Yeah, it should be better now.
Okay,
it was just in my ear and in the studio. Now we're good.
Got it. Our teams, they're on top of things. They took care of it. Glenn, everyone was making fun of me during the break because I heard the boys talking, saying you were a fire marshal. I believed it because I feel like Glenn is capable of being a fire marshal.
Oh, Jenny.
Well, thank you.
Sweet Jenny. Bless your heart. Isn't that what they say in the South?
Yes, they do.
Bless your heart.
It's actually, it's so funny. You can say bless her heart or bless his heart for someone not in the room, and then you can get away with insulting them in any way possible. You can say,
Yes.
her son is just not the sharpest tool in the shed, bless his heart. And
You
then
can say anything you want to as long as you say bless his heart.
exactly.
Afterward.
The Lord
My Southern
doesn't. The
friends
Lord
got
doesn't listen after you say that. So.
And he's funny too. I was trying to set Glenn up with one of my friend's daughters, but didn't. He has a girlfriend. He's taking ladies.
But now, are you going to see if he can carry her? He's apparently, you got to be able to carry somebody 50 feet. Jenny, who's going to? I volunteered Jenny as tribute.
No.
Considering she thought you were a fire marshal, I volunteered Jenny as tribute.
Okay, Glenn. One time we filmed a commercial, and in the commercial, someone had to carry me. Never again.
That's
Never
pretty funny.
Again.
Yeah, no, as the fire marshal just comes from me being on the emergency fire safety team here in the building. I am only the assistant elevator monitor, so no carrying. Just don't get on the elevator. I give a stern one of these and tell people to take the stairs.
So, Glenn, you should not sacrifice yourself and be the last one out of the building if there's a fire. You're young. I'd say old people first. Like let one of the old guys be the elevator monitor.
Well, if you think about it in like time taken to get down the stairs, if I give any of them like a 2-minute head start, we're getting to the bottom floor at the same time. So it's okay being the last one out.
Do you know that there was a fire one time? Jenny always, fun fact here, Glenn. Jenny always requests low floors in anytime you're at a hotel because she wants to be the first one out of the building. And there was some curling iron caught on fire, and she was the first one out.
That's very impressive.
When I was at U of I was living in Bromley. That dorm still exists. Living in Bromley, there was a fire. There was a fire in the dorm. I was on the 10th floor, and I was the first one out the door.
There you go.
Did you ever see the Seinfeld episode when George is at the kids' party and there's a fire and he pushes all the kids away as he's running out the door?
In the stairwell, I was like jumping over the railings, like down a flight, down a flight, down a flight,
That's
down
impressive.
a flight, out the door.
All right, I'm going to nominate you for an alternative position on our fire safety team.
Sure.
Finally, someone takes it seriously. These Batistas, luckily they have people looking out for them because.
No, so Glenn, you probably don't know this, but the reason I ended up on the trading floor, my grandpa was a fireman at the Chicago fire station across the street from the Options Exchange and the Board of Trade. So
awesome.
He was a fireman there right on Van Buren Street. So that's how I ended up at the SIBO. His friend was doing security at the SIBO, and he got me in over at the SIBO. So I grew up with, in a fireman family. So I do take it very seriously.
We'll thank them for their service.
Well, if he were alive, I would. He's like 100. He'd be like 100 now.
That would be impressive.
Yeah. So anyway,
you're looking great in red. We really, you do look great in red.
Thank you.
We're very excited for this segment today. We've heard you've got one slide.
Yeah, just one slide, a little number crunching on my end. Just wanted to look.
I love a good visual aid.
Oh yeah. Just wanted to rerun one metric that I like to look at that doesn't appear on the platform but is just a 3-month average. This is your one standard deviation move based on daily price changes in these major US dollar pairs. And so what this tells you is it gives you a sense of 2/3 of the time, roughly, what the close over close, the rolling change will be in either direction in any of these pairs over the past 3 months. So I looked at 6 months, 3 months, and 1 month, and we can see that volatility is coming in the 1 month, but wanted to take the 3 month for, kind of a breadth of data, and with the expectation that over the next month or so, perhaps we revert a little bit and get some more FX volatility as we have the government reopen. Who knows what data will come out, but more data than we've gotten since October 1, which are, of course, for these US dollar pairs, volatility events, any economic data point, fuels speculation on interest rates, which are the primary drivers for these US dollar pairs. So we're looking at the US dollar Japanese yen as the most volatile recently, but to give some historic context, this number can very well, and has been, be in the 3 digits, in the hundreds, anywhere from around 90 to 120. British pound coming in second at 50 pips, euro dollar at 38 pips, dollar Swiss franc at 33 pips, and your commodity currencies, Australian dollar and Canadian dollar, around 27 and 25 pips respectively. And so what we can do to contextualize this a little more is you can say, oh wow, that Australian dollar is really not volatile. Is it worth it to trade? But you can also say that 25 pips on a relative basis, on a percentage basis, because that pair is priced at, 1 Australian dollar is only 65 cents. A 25 pip move will be around, more than 0.5% on a day-to-day basis. So all these pairs have unique characteristics, but this is actionable for you guys and for other traders, just to kind of think about what possible take profit levels are, or stop losses, if you're trying to think about getting in and out of a position within a day, within a couple of days, just what you can expect. Like if I'm looking for 100 pips of movement in the US dollar Canadian dollar pair, that's likely not going to happen within 1, 2, even 3 days, as that could be a multi-day mover at this pace of around 27 pips a day. So those are my numbers for today.
Would someone take these numbers and think, okay, I'm going to I can put more buying power into positions that move less because my risk of a bigger movement is lower, and then I would put a smaller amount of buying power into the positions into the underlyings or the FX that move more, because I can get my price, my profit target quicker.
Yeah, exactly. There also is the nuance that these pairs are margined differently, so it might require you that, as it's set from regulators, is actually a function of volatility, but you're more capitally constrained in that dollar-yen pair already. So when you take what your notional exposure is, you're margined at 5% or leverage only 20 to 1 in that pair. So it kind of nets out as opposed to the euro dollar, which you're able to get 50 to 1 leverage for around half the movement there. So it does kind of shake out or net out, but yeah, you can see if you're looking at just the pairs that are 20 to 1 leverage, which is the British pound and the Japanese yen, you could take that the British pound is right now at least a lower volatility trade.
So what did you do with this when you see this? So Glenn, you wake up, use your Face ID on your phone, you see all this. What's Glenn doing today in the FX markets with this?
Yeah, let's hop into the platform because we are looking at some interesting price levels, some price ranges. And so when you're looking at spot FX markets, you do have to get directional if you want to engage in these pairs. And so when I look at that what kind of volatility environment we're in, perhaps I have additional a thesis of what pairs do what in which volatility environments. Like, say, if I have a thought based on perhaps historical data or just anecdotal data that in lower volatility environments, a pair like Aussie US dollar tends to be more range bound, then that can already start to tip my directional bias. If we're looking at a pair like Australian dollar that's coming off of its recent highs, so we're looking at highs back to the start of the month. So we've been on a run up. If I think that maybe this is a junction where it could turn around, then I would look to the numbers I just ran and say, okay, if I want to be in this trade for, we're sitting here on Thursday, I don't want to take it into the weekend. I want to be out by ideally Friday, end of day. Then I can look to my risk reward and think, I can only realistically expect 25 pips in my direction or not in my direction. And that's kind of my frame of reference for what my risk reward can be.
Okay, so you use it backwards. So you use it after the fact. Like you would go in there and see what's interesting, then you look at the something like that. Okay, that makes sense. It's like a secondary reference.
Yeah, so like we can't expect it to move much, so I'm going to put my closed trade for a profit pretty tight because I can't expect much.
Yeah.
There you go. Okay, that makes perfect sense.
And another lens to look at it, if you pull up the euro dollar chart, it's kind of a similar thing to how people use, support and resistance levels or just price levels of interest. Because here we're looking at, we stuttered around in this pair 116 for the past few days. This week we've tried to break through 116 to the upside a couple times. Just recently in the past hour or so, we got to 116.20 in the European session, came off that, and then in the past hour we traded through that. And so if I'm a momentum trader, then I could maybe look to, the next historic price of interest. Maybe I'm targeting that 116 level or 117, and I could expect that, I have now 60 pips left in that trade. I think it can get to at least that 117 level, and then I'm comfortable closing it. Then
that's a good tool to have, especially because you can put in those closing orders.
Exactly, and so then I take in a frame of reference of what we've already done, and we've already moved 50 pips today. So that's outside of what we've seen recently in terms of daily range. So then I can treat it with, I can layer in some probabilities of, that number I pulled of around 40 pips for this pair is only right or has only been right 66% of the time. So maybe this is an outlier day, but it also, factors in just how much more I can expect, how much more elasticity can I expect out of this pair without something major happening, like a tariff announcement or what have you, whatever would move these markets drastically. So that's just how I would think about it. But we're looking at, we've got some interesting price levels here. I just mentioned that kind of breakout. This euro dollar's been on a tear since the beginning of November when we were trading lower than 115.
Yeah.
And so if you look just at the recent months, we have a very clean range here of treading down from where we were all the way to 115. Now we're back. So if you're looking at this 116 half level and you think this range holds, then you have that whole range to fill, perhaps to the downside. But also if you could think that this is now a trending market and you want to hop aboard. So it's definitely not to talk out of both sides here, but what's nice for me looking at these pairs right now is we're not seeing the dollar move all in one direction. Like we're seeing these European currencies really capitalize on the US dollar. But if we went back to dollar CAD or Aussie dollar, those are moving more with our risk off sentiment right now.
Not bad.
And Glenn, I know when you mentioned not to say talk out of both sides of your mouth, nobody knows which way these are going to go, right? So for someone to put in a long or short FX position, it's nobody knows. So you don't know, we don't know. Nobody expects you to know which direction is going to go.
Except we do expect you to know which direction.
But yeah, in terms of risk reward, what's at the top of their ranges right now, if you want to get long the dollar, British pound, US dollar is interesting to me. That's gotten.
So what we have like the positions we have are still here. So we've got so we don't have the US dollar here. We still have this euro US dollar shekel, which that's been with us for a long time.
That's a lifetime position.
Yeah,
a
lifer. So we could put on, you said US dollar pound.
Yeah, so it looks like you're already long the pound against the euro. That is back at its extremes. But this is interesting just because we're at the top of that range. Similarly, your Japanese yen pair, that one got rejected early this week from 155. So now we're ticking down there. If you think that that's going to fill any sort of range there, then you have a lot of downside prospectively. And you could use that kind of 75 pip reference point.
And now, this is something we've talked about. I think I've talked about this with TP, using this as, we all work for IG, and IG is a British company. So if anyone has shares of IG, we want, if the pound is stronger and this goes up and the dollar is weaker, that's good for our IG shares. Is that correct?
It is.
That is correct.
That's correct.
So if we were to get long this, it's kind of like doubling down on our IG position in a sense. Like if we ever want to hedge that, we're better off going the
opposite.
Correct. You could in effect lock in that rate.
Yeah.
Press that button, Jenny Andrews. Press that button and let's get this guy out of here. He's working too hard today.
All right, but yeah, I mean, I can see why someone would go long here. It is, when we've seen it, we watch this. We do watch this. So sure, we're hopeful. Maybe we'll just get, double down, get long, and be hopeful that the British pound gets a little higher.
Yeah, there you go.
So let's see. Buy how many?
So this is one of the more capital intensive products margined at 5%.
Okay, so $329 for 0.05.
Go, just do 0.03.
That's just what it defaulted to. I didn't put that on there.
No, I know. I'm just making something up. I'm just saying, let's go 0.03 and we'll do a very small, and then buy it, ship it. We'll use $200.
Place trade. And now, per your little chart, like what can we expect out of this?
Yeah, so going back to that, you'd look at about 50 pips on the day. So it looks like we have.
So you can put it in as take profit 50 pips away. Like put it in that
so
way.
Right there. Yeah, like 50. I'm going to get there.
Yeah, I'm just saying, I only visually, if you look at the right side, you can put in the pips away instead of using the marker.
Yeah, right here, 51.5 pips.
Perfect.
Which is only $15.
That's great. I'd love it if we got $15 out of Glenn today.
All right, so I'm going to leave that. I'm going to let that work. That's in there.
Yeah, one more example I want to look at is pull up that dollar yen, and this is where I think it could get is the most clear example right now of how to think, how one way you could think about risk reward. Pull up that trade tab, and so here you're looking at similar to the euro dollar market where we kind of stuttered around a price level for a while. In this case, we've reversed off of it instead of trending through it. But here, if this was enough to convince you that this range has been established and the yen might strengthen a little bit further, then if you zoom in here, you'd be looking at you kind of know when you're wrong at maybe that 155 level. If we try that for a third time, whereas if you look at the range we've been in recently, and along with what we can expect the daily move to be, then your risk reward is only maybe 50 pips to the downside, and then 75 or even greater to the upside. So that's where you can use a combination of price action and some statistical measures to get a little bit of that asymmetry. Of course, you still have to be right directionally, but that asymmetric risk reward.
And this is the biggest mover. And I was just curious to see, since that's the biggest mover,
we have
in FX. If I look at 6J, is that so it's the biggest mover, but the as far as the volatility in 6J goes, it's still not that much.
Yeah, but it's still very low, but it's a 25 for itself. So it's always a low volatility.
Yeah.
It's always low volatility. All right, Glenn, we have kept you on for longer. I know you are a very, very busy man and you got lots to do.
This is my favorite 25 minutes of the day.
Oh, Glenn, good to see you. Good to see you. Next time we're in the office, we'll take your name off the fire marshal list. And
No, don't you dare. Then they'll take away my vest. I need that vest.
All right. Thank you very much, Glenn. You have a wonderful rest of your day. I'm sure you're going to be busy. Thank you very much. Okay, Jenny, do you want to take a look at the markets?
Yeah, let's go. Let's go. It's kind of an ugly day. We had said, and we looked at studies that after a long government shutdown, when it reopens, in the past, after a long shutdown, you've had a bigger market move, and it wasn't necessarily to the upside or downside. I thought it'd be to the upside. We're getting a bigger move to the downside today. Right now, we're down 1.5% in the Nasdaq, a little over 1% in the SPOOs.
Yeah, it's a big move. Big. You know what else is a big move that Frank has been texting us about?
I know.
Disney.
I know. And you know how, how sometimes when your husband's right and you're like, ooh, I didn't want him to be right. Yesterday, I said, oh, Disney has earnings. And my husband's like, get rid of your Disney position. That's not going to go well. And I was like, nah, I'm keeping it. I'm long. I'm keeping it. And then today he's like, what did Disney do?
You're like, it's fine. Everything's fine. It went up.
Yeah, don't worry about it. Don't worry about it.
Fine. It's fine. Everything's fine.
Yeah, down 11.23. No, not good. Not good.
But you know what is right above it? And Disney's worthless, so we can just leave that. But you know what's right above it? The one that is good. Cisco Systems.
Liz, way to always look on the bright side. So is that all we did yesterday? Were 2 earnings trades?
I think so, yeah.
Activity.
Because there were only 3, and we didn't do, on was,
no,
we closed.
That was just the closing order. There's just closing. So Disney, Cisco, and we did a BABA trade.
And BABA's up today too. So of those 3,
but we put on that. Someone was bullish BABA, and we did this upside calendar saying that you could have this call for only $1.68 for earnings.
And look how you remembered so well because you closed your right eye.
Got it. I remembered it. All right. So Cisco, we put on this diagonal. We'll close it. Take 210 from Cisco. That's probably the only green on our screen today.
So take 210 Cisco and BABA. I think we're up $50 in it.
No, we did it to keep that long. We want that long.
I know, but you said the only green, and I said that's not true. It's green.
Well, we're holding on. Holding on to that call for dear life. Gosh, I was going through our account looking to see, is there any mess we need to manage, but not really.
Can you do me a favor? What was our downside ratio? Was it Circle?
CRWV. We have the
CRWV. Perfect. Now, I promised somebody that I would go over a natural gas broken wing butterfly, and I was just looking at this because this might be a good example. If you go to the analysis,
I just wanted to show you. So our position expires in 8 days. This is where CRWV is trading. So I know you look at our position and we're like, ooh, this is down $215. Well, fast forward to expiration, and right here we'd be up $282. So it's where we want it to be. We just have 8 more days left in this trade.
Okay, so this is for Matthew. Matthew was asking me about a broken wing butterfly and natural gas. And his question was, how come it's going towards where I want it to be and I'm losing money? Is that possible? Did I set it up right? And the answer is yes. So this is the visual example. A ratio spread is very similar to a broken wing butterfly. The broken wing butterfly just has risk definition. So this is exactly right. You need to be right there at expiration in order for it to be making a lot of money. You almost have to sit on it. It's a double-edged sword. You want it, if you're playing for the credit, you want it to go away from the center of your peak. If you're not playing for the credit, you need it to be at the peak at expiration.
Right. So if you think about it, when you put on a ratio spread, it's just your short, it's a long delta position because you're long one put short two. And if it's a broken wing butterfly, it's still a long delta position. It's a long delta position if you're taking in a credit and playing for that credit. So here we took in a credit, we were playing for the credit. This is a long delta position, but with that chance of these ratio spreads and broken wing butterflies, they're kind of like a mind game where we put it on and we say, well, we want it to go up. We just want to keep this credit. But if it goes down, we won't be as upset as if it were just a naked put and we had no chance of making something extra. So now it's down and this trade is losing, but fast forward 8 days and it's a winner. The risk is if it keeps going down.
And this is why we do them short term. You won't see us do ratio spreads in, your normal 45 days till expiration cycle. These are very near term because of the nature of how the butterflies and broken wing butterflies don't open up until you get very close to expiration. So this is a very good example. And now natural gas is up today. Can you check and see what natural gas is doing?
Sure. I feel like that's all we ever hear is natural gas is up.
It was down yesterday. That's the only reason. So I'm pretty sure it was. So if you take a look at this, so it was a down, I mean, it's up today, but it was a down day yesterday. And so they put it on a broken wing butterfly for a credit. And it was getting when the natural gas was going down, it was getting to that peak. So visually, if you look at it on the analyze page, it looks like you're going to make more money when it gets in there. That peak is at expiration.
It's crazy. Isn't it crazy the run natural gas has had?
Yeah, yes. But and it was interesting. Nothing we do is a trade recommendation. And I really appreciated this viewer for saying that too. But I don't mind that the broken wing butterflies and natural gas, it's just up so high for me right now, but they're in the 11 day. So they've got,
in the 11 day, and look at this. If you go out to the 43 day, that's even higher, 4.8. I'm just curious to see if we put the center strike at 5. I just want to see what we can collect and what would the risk be. So what are we collecting here?
You're collecting, your max profit is
380. We're collecting 380.
It's $5 wide.
That's not bad, and we only have 920 risk.
It's not bad. It's counterproductive for me because
if you break even to 5.1,
and that's in 11. Is that in 11 days?
No, this is the next cycle.
Yeah, I wouldn't do a broken wing butterfly in the next cycle.
Because you break even to 5.1 now.
Put the dollar sign on the natural gas.
That's what I was just going to do. It looks good on this chart. It doesn't look good on when you look at the longer term chart of natural gas. I need this slash. So here we have a longer term chart of natural gas going back 20 years. And you're looking at that 5.1, which looks really good short term. But how far back you get to this period of time back in 2022.
Yeah, that's what I'm saying. I just wanted to go over the that for Matthew, but I don't want to put one on, not to the upside.
Yeah, I don't know. I mean, I don't mind it to find risk, but
we have to define our risk because natural gas is a big animal.
Yeah, I don't mind it. That was a decent collection. Like you could even bring it in and collect less. Like here we're collecting, $400. If you bring this in, you're still collecting $300 and your risk is $700.
If you want to do it, it's defining your risk. Like I said, I have a tendency to do to the put side.
Then here you're collecting $160 and your risk is $350.
Is that even broken? Yeah, I guess it's broken because the 5. Yeah.
4.955, 5.1. It's broken a little. You're collecting $170 and only risking $340.
You could try
it. Here.
And then let's move away from natural gas because
that's going to be our first call, Brooklyn Butterfly in natural gas.
I know, it's causing me heart palpitations. All right,
we're only risking $350.
Yeah, it's not bad. It's defined risk. We lost more than Disney today. Do you know what I mean?
Yeah. I mean, Disney is getting painful, and I'm not sure what to do with my Disney.
I just have the same ratio spread we have. So I'm leaving it.
No, I've got more than that. I was really, going long on the whole Taylor Swift in, on Disney Plus.
I know you were. I don't know why. Okay, let's, can you push it back so I can see where the SPOOs are, not the percentages?
Yes.
Thank you very much.
Okay, they're down 75. I put on my SPX this morning. I'm going to follow mechanics of close at noon if it doesn't work out. I know
we haven't had an uptick. We opened and have continued to go down.
I'm going to go to Twitter because we have a few people who are also in it. I did want to bring this up. Ashvin was listening. Couldn't watch live, but he said he was just trying to keep it classy. He didn't want to tease you on and what team was he from?
Louisville.
Louisville beating Kentucky.
Louisville, yeah, they're arch rivals because they're about 45 minutes apart. But yes, I know, Ashvin. I mean, we were teasing each other on Twitter the night before, but as soon as you won, you went silent, and I get it, and it's classy.
Yeah, that's nice. That's nice, Ashvin. Very nice.
I can't say I would have done the same, so it's fine.
She would have been all decked out in blue.
Although, you know what's so funny is we're wearing the Louisville colors because when I was watching the game, it's they're the Cardinals, so they're red. So the whole stadium was red and royal blue. I should have worn royal blue today.
Hey, you know what? I'm almost positive the last Notre Dame basketball game we went to, they were playing Louisville because I remember those fans.
Well, there's a lot of red teams.
No, I think it was Louisville, and they weren't that far to drive up.
Okay, that's what I was going to say. I was like, there's a lot of red teams, Jen.
And we were sitting right behind. I didn't realize when I bought the tickets we were sitting right behind their team.
Oh.
Yeah.
The Louisville Cardinals. Okay, so then Frank the Great comes in from the SIBO. Wednesday's option volume is 61.1 million contracts, 11% below recent average levels. Calls leading puts.
Hey, for when are we going to see a day puts leading calls? When are we going to see?
I wonder if it's going to be tomorrow.
Maybe. Thanks, Frank. Economic calendar.
What do we have? So I know we're gonna start getting numbers again. I just don't know how fast.
Maybe they said maybe not. There, numbers will start coming, but they don't know. I don't know if we're gonna get all of them. Didn't you hear Nick and Tony talking about there's one man putting together the numbers?
Yeah, I don't think it's gonna happen immediately. I think it's gonna start trickling in. But yeah, so we should start getting numbers again though.
Yes. So here you had the natty gas inventory. 10:30 a.m., which was 9:30 our time.
9:30 our time.
So that just happened. So Blue Wackadoo, happy Thursday. So he's got his 0 day on, put on a 2-lot and 4-lot, 90 points wide between the shorts. So
what time did he do this? Because he's got it trading at just above 68. He must have done this a little bit later.
68.10, 68.05. Let me see, where are we now? Because at 9, we were about 38, 40 points higher. Yeah, that's it. That's it. That's right. That was around, 9:15 or something. That's where we were trading.
I'm getting so screwed up right now because I keep looking at the SPOOs.
No, I know.
It was really messing with me because I was like, oh, he's not, you know what I mean? It's not bad, but it's not. This is SPX, not E-mini S&Ps.
But his short puts are the 67.75 and 67.75. So really, we're right there. You got wider VIX. I looked. The first thing I looked at before I put on my SPX was the VIX. And if the VIX was really high, like if there was a big pop in the VIX, I wasn't going to do it, or I was going to not do as many. But the VIX, when I looked at it, was only up 40 cents. So I was like, oh, VIX is only up 40 cents. Maybe it's going to be not too much of a down move.
Yeah. But now the VIX is up
$1.50.
Yeah, 10%. 9% move. That's not that much, though.
I wonder if Mikey's shorting his VXM.
Oh, I bet he is.
I bet he is. Oh, it's almost there. It's almost 20. This is where he sells it.
He likes to short it at 20.
Should I sell it? Should I sell it and buy it back at the end of the show?
Yes.
I'm doing it, Mikey. This is for you. This is for Mikey.
She's a certified badass. I would say options trader, but we need one that says futures slinger.
Certified badass futures slinger.
That's what I'm saying. We need one that says certified badass VIX futures trader.
All right, but I'm closing that at the end of the show.
Oh God, yeah. Okay.
Okay.
Okay, let's pop back into Twitter, make sure we get to everybody there.
Yes. Okay, so Eric, good luck. We're with you. Painful day today. Painful day in my account today. All right, Bob on fire. Today we have AMAT and NU.
So, look at the calendar. So the calendar looks loaded, but Bob vets this for us, and those are pretty much the only liquid ones, right? Oh, wait a minute. JD was before the open on Thursday.
Oh, yeah. Let's look at it. What did it do? Well, you've got it in your account.
I'm not going to lie to you. I didn't even notice because it's...
Oh, it didn't even move. Yeah.
I didn't even notice it.
Yeah, it didn't even move.
Okay, let's go. Can we go back? I want to see some of the other ones. Okay, so JD was before the open. Oh, no, go back to earnings.
Oh, here, sure.
So we're kind of coming up on not a lot, right?
AMAT today... Tomorrow morning before the open.
Nothing.
Nothing really.
Nothing of there are, but nothing of importance to us.
I heard the boys today talking, or maybe Vanetta talking about Firefly, or maybe I heard this on another network. Who knows? Have we ever looked at this?
When it IPO'd, I think you did.
So I was curious to
talk
see
about the reverse. All these IPOs like Circle and CoreWeave went straight up. This one went straight down.
I was just curious to see what kind of premium are in these options. It's not bad. Look at that. 20 puts, you're getting $2.
Look at it's using $1,100 for a $20 product.
I know you have to do this. Why are you laughing?
Ashvin, he's like, I love the ladies in red. That's because it's your color. I'm switching it to blue.
All right, I'll go top down. Okay, Alan Miller. Good morning, my favorite ladies. Left Orlando yesterday. Now here in SFO, is he in San Francisco?
I think so.
Tending to my mom. Oh. Well, I hope your mom's okay, Alan.
I know, me too.
Not doing well. Here's maybe put up a little Christmas tree for her. Maybe that'll cheer her up. I'm going to go. My mom's still recovering from her lung surgery. I'm going to go put up her Christmas tree on Saturday.
Oh, yay. That's good.
Yeah.
Easy for you to do.
What's our exit plan in Nokia?
Oh, well, let's take a look at it. I remember we look at this sometimes for them. We have an NOK position. I didn't close one eye, so I don't remember what it is.
6.5 put.
Oh.
9.5 put, 7.5 put. What that? A buffer. It's a buffer.
The buffer. So in full disclosure, we don't have. We're fine. This isn't. We can't lose until under 6.5.
Yeah, was this? This doesn't look bad. Did we have something else previously? Because I know he said he'd be happy to break even. Did we do something before this? No, this is just a buffer. We just have the buffer. So happy to break even. Fine.
Can you show that on the analysis page, please?
Yeah. So we did this buffer where if it goes up, we make money. And if we have room before, we would lose. So we're just going to leave this.
Yeah. Our Nokia, we will then be long the shares. Ultimately, if you just left it, you'd just be long it at 650. But you can't, we're not going to lose much of anything until 650.
Look, it was almost down 90. Well, not good.
Yeah. Yep.
Okay, Jack Tucker, 0DT SPX trades, ICs with the roll down of call side, collected $21,000 in premium. And good luck to you, Jack. Today is a rough day. Hopefully we get a little bounce at the end of the day, but I don't know.
We haven't, I don't think we've had an uptick since we opened.
No.
Yeah. That's okay. It is what it is, right? You got to have days like this. Mama said there'd be days like this.
Good morning, ladies. I took profits on the Baba calendar call as the short call was in the money this AM, 60-cent winner. Okay, good, Ron. He took profits on it. Should we close ours?
I mean, you said we're holding on to it for dear life. I was shocked.
I mean,
sure.
Well, someone wanted to be bullish in Baba.
They were said it was hashtag bullish vibes. I closed one eye, and that's the only thing I remember. Hashtag bullish vibes. And I think it's through earnings. Can you open up the trade page?
Right, yeah, it's through earnings.
But we did it before earnings. So
no, but when we put it on, I thought we were buying the one through earnings.
I don't know, Jenny. I really don't.
Let's just close this thing. I thought we were going to have one on through earnings, but
I think we take our $50. $50 ain't bad.
Yeah, we'll take our $50. I wish I would have taken my money in Disney yesterday.
Yeah, no kidding.
All right, Ajit, good to see you. SPX short strangle 0 DTE. So.
Well, short strangle and a 0 DTE. This is great. I'm glad you put this up there, but that's a lot of capital.
Yeah, Ajit's big by big, Liz.
Wait, and then it says we will be adding new spreads every hour and also adjusting any if need be until 3 minutes before session close.
30 minutes. Whoa, Ajit's gone wild. He's like crazy selling these SPX strangles. Watching Tom with the SPX on the road show, he was aggressively managing. He'd be like rolling down calls, rolling down calls, rolling down calls, rolling down calls.
But he also had defined risk.
Nah, not in all of them.
No, in SPX, yes. But not in all of them, no. But SPX, yes.
Yeah, but not in ES. He did an ES strangle.
No, I agree, but not in SPX. That's what I'm saying. Ajit's got SPX naked.
Yeah.
Ajit's big by big.
He's big by big. Okay, so we're out of that Baba. Webull is something else that, I've gotten questions about. We sold these puts in Webull. It didn't look like it could get any low. We thought we were lucky getting in.
I closed mine a while ago.
Well, we still have them here. So they're really far in the money. We've got the 12.5 puts. It's trading 9. Honestly, I think there's not, in my mind, what I would do with these. I don't know what you would do.
Can you go back to the November, open the cycle that it's in, try to close it, see how much money you're getting back? You're getting back $500. I would literally go and buy the 8 call through earnings.
Well, and I would go, through earnings, sure. There's not a lot of extrinsic value here, so I agree. That's what I was going to say, buy calls. And I was even looking further to buy, because there's only 16 cents in these 7.5 calls, and then you have them 36 days. But you're right, you could just do them.
I just saw the earnings thing. That's the only reason I wouldn't stay in the 8-day. If there weren't earnings on the horizon, I would probably do the same thing you're doing. And then we would have to adjust after earnings. Then our earnings trade is in.
So we just have a long call, and we'll adjust that after. And honestly, Webull, we got in it when there was a lot of premium in it, and it wasn't using a lot of buying power. But now there's not a lot of premium in it, so
and it's holding up quite a bit of buying power. Yeah, so that's good. Oh, you know what? I haven't been doing my job, Jenny.
You haven't pushed anything out?
We haven't traded anything.
What do you mean? We've been filled on at least 3 things, now 4.
Let's see what we've been filled on.
All symbols today. Cisco, we closed. We did their VXM, which is not going to look good. Baba, we closed, and we adjusted.
Okay, these are going out now.
So that's an adjustment in Webull. Anything else that looks like a real big mover?
You have to be looking at that for a second.
I'm just seeing Intel's down $1.60. That hurts. What do we have here? Short 40-30 put spread. Oh, this is that one that we did that was like the super big open interest.
Yeah. That's a very, very small trade, right? With super big open interest.
Well, we got a $10 rate put spread, 40-30. Can't believe Intel's trading back to 36. Intel.
Tim Knight was right. He's the oracle.
And SBET, this is one of those. We have a strangle around it. This is one of those where I'm ready to throw in the towel on SBET. SBET has been a real dog.
Is there still a lot of premium? How much time is left on our options? Because we have a strangle around it. It's not like we have a collar around it.
We have a strangle around it.
So you either have to we can move this out in time, or we can close it.
Yeah, we can move it out in time. sell the 10, 15.
That's pretty good.
Wait, why is this we're only taking in 10-cent credit?
Because you moved the strikes by $2 down and $2 down. Like we have the 12. Like if you go to the 12, go to the 12.
We have the 12 put. Well, that's what I'm
saying. So if you go to the 12, go 12 to 12 just to show. Like there you go. Then you're taking.
And then our call was the 17. So that's like.
Yeah, there you go. You're taking another 93 cents. That's not bad. I mean, I would adjust it too, but I don't mind rolling it for even if you're moving down your strikes.
Yeah. We'll do the 11.16, taking 42 cents.
Sure, that's great.
Best bet. I guess we'll just keep chipping away at this until we can maybe own SBET for free, and then it won't matter if it goes to zero.
There you go. There you go. You know what, Jenny? Today is this is going to sound bad, but I mean, I'm sure this is not going to be a popular opinion. Today is a good day to put on buffers.
Yeah. Okay. You're right.
It is, right? So let's not adjust. Let's look at this like we could put on a good buffer. That Nokia has really inspired me. So do you want to, what aren't we in?
So
want to do in DraftKings? It's pretty low.
Oh yeah, DraftKings we don't have, and DraftKings has been taking a hit.
Yeah.
And I'm glad you said that. I gotta get my lineup in. I'm gonna get in big trouble if I don't get my lineup in today.
Yeah, so let's do a buffer in DraftKings. It's a $30 product. We're gonna go out to December. Oof, weird strikes, right? You'd have to buy Can you pick a different cycle and see if there's other strikes?
It's not, DraftKings isn't gonna work. It's never gonna be.
But I mean, if you had 50-cent wide strikes, it would be.
You're not going to ever get your in the money put high enough. There's just not enough premium. There's not enough premium in these options to cover a put spread.
What else do we have? Want to get nutty and do IWM?
We can. I'll look at that.
Because it's dollar wide strikes, so we can actually manipulate it as much as we want.
Okay, so if we did, I'm going to do 240, 230. That gets our break even to 230. Not terrible. And great. Then 350. So basically we're buying a $10 wide put spread. This is going to move our break even $10. This is going to use a lot of buying power though.
I know it will.
And then we need to find a call that has 350 extrinsic value. So the 247. So we sell that.
You can go to the 248. Yeah, I get it. Yeah, it's the 247. That's fine.
Yeah, so this is the way so we sold it in the money put that replicates a covered call. It's basically like a covered call with a long put spread. So it's like you're selling that call to buy a put spread.
We need a cheaper product.
But this is using $4,000.
We need a cheaper product with dollar wide strikes. Please.
I'm curious, and I know we had the Disney trade on for earnings, and I know it didn't work, but it's a $100 product. I didn't know if they have dollar wide strikes out here.
I think you have to be under like $75 to have dollar wide strikes. Go to the watch list.
Target maybe?
Watch list? You can try Target.
Because I think that's been down too. That's been down too.
That's going to have $5 wide strikes.
$5. So and under $75, we need something that's really, really has a high IVR. So if we sort by price,
you got to go to, there you go.
Sort by price, and then we're going to look like around this.
Is silver taking a hit today? So you could do like silver EEM, emerging markets. You could do stuff like that. But what's got the high IVR? Okay, wait. Silver's got the 54 IVR. EWW has a 64 IVR.
I know, but those don't have enough premium to, they don't have enough premium to get your in the money put high enough. We need a real high flyer. Right? Like, because if we go to EWW and I go to the trade page and go to December, there's nothing in these. And
they're really wide markets. What did you is it CoreWeave or Circle that's got that great buying power?
Let's look at Circle. I know CoreWeave we have a position in. But Circle, we sold a put spread in.
Yeah, we had to sell a put spread because it's very, very expensive.
Oklo is down today. It's down $7. And now I know that uses a lot of buying power too. You'd have to buy something.
Well, we could. Let's go through this. Let's kind of go $1. There you go. $15 wide.
105.90. $15 wide. And then like if that's 720, and you could take a little bit of risk. So here, 190. So that'll get your break even down to 90. Yep. And if you're paying 430, here's a call for 430, but if you're going to buy a put, let's say you're going to buy a put for $2, you can do a call for $6 and use that extra $2 to buy a put,
Let's see how much it is. That's not bad.
You're taking in $2,500 credit.
So yeah, let's look at this on the curve view.
So you're taking in $2,500 credit. So you can make $2,500 if it goes up, right?
Yep.
But you've got this little window.
Step right there. I want to see where our maximum loss is. $430.
That's not bad. So you use $430 here, but then the below 90 is where you got the bigger risk, and your maximum risk is this 2,400. I like your thought process of do buffers now. What if we did them in?
Today's a great day for it. I just like dollar-wide strikes. It's just so much easier to manipulate. 500. Google's too expensive.
I think, but we need like a hefty premium in here.
No, I honestly like to do the buffers in the nearer term as well with things that have earnings. Let's look at AMAT.
Okay. AMAT.
And we have about 3 minutes left.
They have earnings. Oh yeah, 3 minutes. Let's put in a buffer in 3 minutes. So we're gonna do the 222.5, 212.5. That's gonna give us to 212.
No.
350.
Yes, but no.
And then then you sell this. You're getting 650.
No. Great idea.
Dang it.
Too expensive. I'm sensing 217 calendar, but that's okay.
217 calendar. Gosh. 217 calendar, 225.
Put in a 217 bid.
217 bid on the 217 calendar. If we get filled, we get filled.
And we got filled. We got price improved.
Jeez, we wanted it at 217. I'm going to get out of spooze down 86 and look at this now. And, shout out to Mikey because this doesn't lose too much. I mean, VXM is up to 20. We put it on at 19.89. So each tick is only literally $1. So we're down $11, but I'm just going to close that.
Yeah, do it. And then we do have to end quickly because guess what? The boys are going to be on the trading floor. I'm sure it's exciting down there today because when the market moves, well, I shouldn't say that. But there will be some more action with the down moves is my guess.
Yeah, I'm sure they're going to be busy. I got to go do some account cleanup in my own account. I don't know where I'm going to start.
I'm not going to look at mine until noon.
I don't know if I want to start at A or X or Z or whatever, but I need to do something. All right, everybody. Have a wonderful Retro Thursday.
And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show.
Watch the boys on the SIBO.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Delta, Vega, Gamma, Theta. It's all Greek to you. Well, guess what? Millions of people speak Greek, so you've got no excuse. Here's your alphabet. Theta is time decay. Time itself has value in the options world, and that value slips away the closer you get to expiration. Theta is how fast that happens. Tick-tock, time value drops. Delta is difference. How much does a $1 move in the underlying affect the price of the option? Long options have a positive delta because their value moves with the stock. And short options have a negative delta because their value moves opposite the stock. Gamma is get up and go. It's how fast delta changes. Gamma increases when the options start trading much more like the stock. Like the closer to the at the money and the last few days till expiration. Vega is not a Greek letter, but it does start with a V, and so does volatility. Vega measures how much the options price is affected by the changes in volatility. Now you know your alpha, beta, gammas. Well, gamma anyway. Pretty simple.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
So you're an active trader, looking to increase your return, decrease your risk,
or quite possibly both. Sure, you've heard of the Greeks. You know, your deltas, your thetas, your vegas, your charms, your vamas, etc. And you're wondering, hey, how do I use these guys to improve my risk-return relationship? Well, join me for a 10-episode crash course, and I'll show you exactly how to do it with all the gimmies and gotchas, one Greek at a time. We'll see you there.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Like a rocket ship, I wanna drive fast in this red hot whip. We gonna stand our ground and show off all our moves. Get out the glitter ball and play some dope grooves. I wanna play the game, I wanna roll the dice. I got an easy hand that's gonna make the night. You wanna dance off? Let's get our shoes on. I'm done with all your fussing, this party totally bussin'.
What's up, everyone? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal.
Hey-o.
And this is not a green screen behind us. We are live from the SIBO floor. Week 2 for us. And this is another week of pretty much a bloodbath in the markets. Do you think it's us?
I mean, I'm starting to wonder. We're down 80 plus handles once again on a Thursday.
Mm-hmm.
Can't be a coincidence.
I don't think it is. You do have some pretty big market movers when it comes to some equities. We were just talking about Disney. Disney had earnings pre-market, and they are down almost 10%. Pretty big downside move.
Smacked.
But no surprise to us. I mean, we were We were just talking about how I had YouTube TV. Now I'm on Fubo because they got rid of ESPN, and I'm not going to not watch Monday Night Football on ESPN.
We were, the wife was pissed because she's a Green Bay fan, so she was pretty pissed about this week. We were having serious discussions, and I never thought this would happen. We're having serious discussions about content and which ones we're paying for, which ones we're not. And I mean, that was something before she never wanted to talk about. It's like, whatever, we'll just get whatever. But now, serious discussions are happening.
Yeah.
And I'm sure we're not the only ones.
No, definitely not. And it's always weird to me because it's like, how do you let this type of thing happen? But I'm obviously not the CEO or the leading person of YouTube TV and the relationship with Disney and ESPN, but you have to know that you're going to lose a ton of revenue, recurring monthly revenue from people just dipping out, going to Sling, going to Fubo, whatever it is.
When you look at it, it was planned. Again, remember, they did the deal with Fubo. So that was like maybe a month or two ago.
Yeah.
Go back a little bit further. I mean, all of these were, I actually feel used a little bit. Really, because a lot of it was planned. Like when you look at some of the moves that they've been doing, they literally waited until like the optimal time, which was basically the end of October, beginning of November. Things are really happening. NFL is in full swing. NBA is really kicking off. College football is in full swing. They waited for sure, and I think they're willing to ride this out. Clearly, it's kind of interesting to watch.
Yeah, I mean, you had a 4-day rally in Disney. If you want to pull up the price chart here, we can take a look. But 4-day rally in Disney prior to this morning, and then you had a swift drop from 116 down to 106, and we are now back at early 2025 levels, early May. Basically the gap up from post-tariff information. But E-mini is down 87, NASDAQ down 450, the Dow and the Russell.
I feel like I should look at that actual press release on what they said on earnings. I almost feel like I'm a shareholder because I'm YouTube TV.
That's how it works, right? That's how it works. But yeah, definitely interesting to see what they have to say. But nonetheless, pretty big sell-off in the market here. We got Ethereum down 3%. You got the NASDAQ down over 1.5%. E-minis trailing right behind there, down a 1.25%. But Bitcoin, silver, gold, it looks like everything's pretty much red here. But when you look to the upside, volatility leading the way. Volatility futures up 2.8%. Natural gas, can't stop this thing. This is up 2.25%, leading to new highs in the last couple of weeks, but getting back to July monthly highs here.
I don't like it. I don't like it one bit. I'm still in the strangle. I'm short. The strangle I'm short is in the F contract, actually, in the January, and it's around 480, I think, at this point. I just don't like it. It's making me a little nervous. The only reason I'm going to hold on for another day or two because warmer temperatures are on the way.
True.
That's all. That's it. That's the only reason. That's all I got.
It's like 60 degrees for the next 2 weeks, so.
That's all I got.
Here's hoping.
Hopefully it follows suit and helps me out.
Yeah, I mean, it's got it, right? You can't do this forever.
No.
But yeah, outside of that, there's not too much going on in the futures market. I mean, you have a couple that are over 1%, but a lot of chop within that 1% range, and we still have a ton of information coming out next week. We're slated to get some actual data over the next couple weeks with the government reopening soon here. But
I mean, it's officially they signed the right, so it's supposed to open.
Yeah, but in terms of the actual information from like the monthly, weekly information, we'll see when they start that back up. But hopefully sooner than later, so we can get a better lay of the land. We do have NVIDIA earnings next week. I think that's going to be interesting.
Yeah.
That was a call out from this morning. I mean, this thing can't seem to buy a bid here over the last couple of days, but down 4%, almost 4%, into an earnings announcement next week where you got to expect that we see some pretty big numbers here.
Yeah, you would think so. I mean, I'm sure they're gonna win on earnings. The question is whether is the stock gonna bounce back. I mean, the week started out obviously positively as we saw overall. It's kind of funny how markets work, right? Like we said, the market did not care about a government shutdown, right? Until late last week, we saw when there was talk of the government ending the shutdown on Monday, big move to the upside. which we, of course, this is why we put on the downside put butterfly for this reason, which I just took off today, 100% gain. Markets pulled back, even though we signed the deal, we signed the agreement, markets pulled back now. So it was almost like a buy the rumor, sell the news type situation that happened here. And I just, who knows what Friday has in store at this point, but what's been attacked most of the week has been the AI names, has been the energy names once again. It seems to be that's the ebb and flow in the market.
Yeah, we're seeing a lot of sector rotation, both to the upside and downside, which shouldn't really surprise you given the landscape of the market right now. We have a lot of uncertainty around the tariff stuff. We got a lot of uncertainty around interest rate cuts. So yeah, I think we should expect more of the same, but I am a little surprised to see this huge gap fill here on Friday leading into Monday, Tuesday, and now today and yesterday we're seeing some red. Today's a big gap down red day, basically bringing us back to where we sold off from initially. So kind of wild, but
no, I think we're in a fragile area a little bit, honestly. Yeah. Now it's like, what are we clinging to? Before it was the positivity was about the government opening. Yeah. Well, the government's open. Why are we not positive?
Yeah.
I think we're in a fragile area a little bit.
Yeah. But yeah, NVIDIA is down 4% now. They do have earnings next Wednesday, the 19th, after the market closes. 14-point expected move on $187 stock price. So pretty big expected move, implied move for that earnings announcement. When you consider 8 days to go to expiration, 14 points of an implied move relative to 36 days to expiration, and only a 22-point implied move. Plenty of implied volatility in that weekly cycle, and we will certainly be trading this once the dust settles on Wednesday.
I might do a little bit now. I might do one now. I might do calendar call spread now.
Yeah, if you're buying it to the upside.
I usually don't do it this early, but I might actually do this just because it's the way that it's faded so hard. At the very least, it might bounce into earnings, and I can take it off. So I'm actually going to do that.
That's what we call the pre-earnings pump, and we hope for it when we're placing upside trades. But yeah, totally viable to do it to the upside today, especially when you consider the 4% downside move we're seeing and just how big that is on a relative basis compared to just a standard day. I mean, you have a 3-point move implied for the rest of the week going into tomorrow. You're getting double that right now. So totally fine, especially if you're bullish on NVIDIA. You're getting a decent price point if you were going to take that risk anyways.
Only question is whether I want to do a calendar call or diagonal, actually.
Yeah, I think it's cheap enough, $180 price point, and if you're going like long December, short the 8-day, or long January, short the 8-day, or long January, short December, any of those are still going to be pretty decent when it comes to the cost basis reduction. So if you just look at like a 190 January calls $1,350, a 190 8-day calls $600. That's pretty good. And if you wanted to do something like this, like a 190 200 for $10, or if you wanted to be more conservative, you could go into the December monthly cycle, reduce basis down to $7 on a 10-point wide diagonal, and you have no issue if you get that move to the upside for earnings or even prior to earnings. So definitely some options there, pun intended.
Yeah, I think I'm going to eye up that ooh, things got a little interesting in here just a second ago, a little bit. Yeah, I'm eyeing up the 190-200. I think I'm going to do that for $7, $7.40. We'll see. I think I'm going to do that.
There you go. Yeah. There you go. But yeah, E-minis, NASDAQ trying to catch a little bit of a bid here. Some currencies, seeing some big moves to the upside. If we look at some Tasty FX positions, we placed a couple of trades last week, took some off, see where we're at today. The Aussie dollar catching a bid here. Up $20 on this 5 micro lot position.
Love it.
And the long dollar short franc position continues to be a thorn in my side. This is one we're going to be long for a long time, I feel. But the Aussie dollar, long Aussie dollar, short US dollar, working out nicely today. And the euro, both the euro pound and the euro franc taking a little heat overall. But But yeah, we'll let those churn, see if we can get some more value out of those. But yeah, if you want to join us on the YouTube channel, we're streaming live there. Just pop over to Tasty Live. You can throw in your trade ideas questions along the right-hand side chat, and we'll get to them in just a little bit.
Yeah.
But it is Thursday, and the SPX pit is right behind us. So why not do a couple of SPX trades for today's tree trade ideas for November 13th.
Tree trade ideas.
And like we said before, I mean, this is an opportunity, like you placed the NVIDIA trade a little bit early. I mean, when you have these big directional moves that we are not predicting, it does create some opportunities in products like SPX and equities. So I'm going out to the end of the year, and I'm selling a 15-point wide iron condor here. So I'm going to the 64.50, 64.35 short put spread, and I'm going to the 7100, 7115 call spread. I'm still of the assumption that maybe we catch a bid into the end of the year, things calm down. By the time we'll already have our interest rate decision, the market will have digested that. And if we do rally up to 7,000, which would be a sizable rally, all things considered from this point, I'd still have another 100 points to the upside of wiggle room here. But either way, when you have these big moves to the downside, you see VIX popping, especially the near-term VIX contracts. It's an opportune time to throw something on if you wanted to take that risk anyway. So throwing on this iron condor, I've got 600 points of wiggle room in between these short strikes here. But I went to the end of the year, December 31st, and sold this entire package for $520, risking 980 on a 15-point wide spread. So still very small. I don't plan on adjusting this at all. I think this is one of those iron condors where I'll just set it and forget it, come back to it in a couple weeks, see if we can take a couple $100 out of this thing. 50% profit would be $260, but if we get a chop here in a vol crush, you could get $150 next week, something like that. So keep an eye on it, but planning to just hold it and see where we're at the end of the year.
This is the D31?
Correct.
And I assume that's like these strikes are basically the shorts are at like the expected move, essentially?
Yeah.
Yeah, I'm just looking at that. I'm just looking at like how, to the downside, you got a little more than 300 points or so, whereas to the upside, it's like a little under 300 points. That's just skew right there. You can just see it. It's kind of funny.
Yeah. So we'll see what happens, but defined risk, again, don't plan on really managing this thing. I think with a product this expensive and these spreads are still really narrow, like when you look at the raw value of these options, $6,100, $5,900, $3,300, $3,100, like if you're moving these spreads up and down, you're taking on 10, 50, 100 points more risk, and you're not going to get paid that much to take on that risk. So I'd rather have the space here and just let this thing cook and see where we end up over the next couple weeks.
Like it.
A spicier trade for you. I'm a permabull at heart, so I have to buy the dip here, as I've been conditioned as a good millennial by every and all dip.
Yeah.
So
I mean, it works.
It's been good. It's been good. It can go wrong for sure, but we'll take a stab here. Similar risk profile, but going to the end of the month, so November 28th here. 15 days to go. Just taking a little upside shot here into this sell-off, but still collecting a small credit, which is why the probability of profit is so high at 65%. Collecting 30 cents. If this thing expires worthless, I still make a little bit of money, but really looking for an upside move here in SPX. So sold the 6,700 put spread, 10 points wide. So 6,700, 6,690, 15 days to go. And then I bought the call spread. So I financed a 5-point wide call spread by selling a 10-point wide put spread. So I bought the 68.50, 68.55 call spread, whole package routed for 30 cents. That 5-point wide call spread can appreciate to $500, which is why the max profit is $530. And taking a similar risk here, just under $1,000. Max loss if we continue to sell off below 66.90 is $970 all in. So this is another one where this is your expiration risk graph, but I did a very similar trade to this last week, and I closed it for like an 80-cent winner, 90-cent winner, something like that, a couple days later. So yes, the expiration profit is $530, but if we get a reversal of today's move, this will be probably a $100 winner over the next couple days if it happens over the next couple days. So really just trying to take $100, $200 out of this thing, not looking for max profit at all. But if I were to get 50% of the max profit, that's going to be around $265. So between $100 and $265 is really my target, and how quickly that happens, if it happens, will be my determining factor of whether I'm closing it or not. But I won't close it for less than $100, we'll say.
I love this idea, actually. I mean, I'm tempted to even do it. I'm tempted to do it for Monday. Honestly, I'm going to try and do it for Monday. I don't know how much of a credit I'm going to get. Obviously, you're getting a better credit for you further out. But I'm going to try and get this thing off for Monday because markets have been moving that fast. I mean, we were literally at 68.50.
Yeah.
You know. Not that long ago.
If we look at SPX for Monday, just doing this, look at all these strikes I have. It's ridiculous.
I know.
So Monday, 4 days out, November 17th. You'll have to go closer, but you can still do the same setup, like the 6,700, 6,690. Is that what you're looking at?
Yeah, I use the same strikes. Check it out. You'll see. Pull it up.
6,700, 6,690,
and then you did 68.50.
Yeah.
And I actually did 68.60. Should sell them that, but no, I did long 68.50, short 68, so 10 miles wide. Yep.
Okay.
I mean,
yeah,
it's flashing back and forth between credit and debit. So if we drop a little bit more, I could probably end up getting some type of credit, maybe 10, 15, but.
And I mean, this is another one of those things where, like, even if you pay a 5-10 cent debit for this thing, it's basically a credit. Because, again, you're dealing with these options are $1,000, $1,500, and you're talking about a 10-cent credit or 10-cent debit. Like, even if we open right in the middle of the range, it's going to still be trading for the same amount. Like, you're really looking for that upside move, as you can see by this Theo P&L. But yeah, I like it as kind of a way to finance that upside shot if we get the reversal here. And this could even happen into the close. Like, if we reverse this move, if we only end up down 40 into the close, that's a 40-point rip to the upside, and that could yield, $150, $200 based on Theo P&L right now. So yeah.
I know the only thing that's happening, because we're bouncing back up a little bit, there's no shot of a credit, so I'm just going to try and get it for a 20-cent credit, and I'm going to leave it out there, and we'll see what happens.
Cool. So yeah, that's it. 3 SPX trade ideas for you. Unfortunately, I did a 0-day Iron Condor yesterday. I did one previously. That was a 50% winner. This one looks like it could be a max loss here unless we get a 50-point rip into the close, which has happened before.
Yeah. Seen crazier things.
Yeah. I'm not going to adjust this at all. Someone actually emailed me about this, like how much am I willing to take in terms of a hit on these trades? And really, like, the way I explained it is I'm setting these up to absorb a full max loss because I don't want to close this right now. Like, I could close this and save myself 50 cents. But if we get a 50-point rip into the close, which is very possible, not probable, but very possible, all of a sudden I've booked a loss of $250 where it would have been a full winner if you get that rip. So I don't like messing with it. I'd rather just set it to a level where I'm comfortable with taking that max loss. And that's another reason why I'm almost always collecting $200 and risking 3. It's just that $200 credit, like, this trade would have been in the money if I made that further out of the money and I only collected like $1.50 or $1 on a $4 risk. Like, this would still be in the money and at a loss. So I'd rather do that chicken Iron Condor setup where if we do get these gap downs or gaps higher, I still have the ability to reduce that risk a little bit and still have that possibility of a reversal here being 50 points in the money. This happened on Friday. We had an 90 point down move and we ended up green on the day. Like, it can happen. So I'm not closing these for losses. I'm just letting them go. And of course, praying that we get a rally. But if not, it's still been a great trade. I've booked more winners than losers. And because the winners are pretty sizable, because I'm collecting $200, it's been a nice trade.
I am going to try and do, I'm trying to get one off now, the Iron Condor for tomorrow for $2.
Cool.
Doing the 67.10, 67.15, 68.30, 68.35. So I'm going to try and see if I can get that off. I just feel so spirited to do some SPX trades when we're down here. I get the feeling when I feel the energy in the room right now, I feel like they feel like another move is coming to the downside just because we're down 70 and they're not really active. That tells me that it's a little quiet right now and there's going to be more orders coming in, and when they do, we're going to get that. But that's going to happen when we're down a little bit more or when we bounce more. They're waiting for the move. They're waiting for a move in one of these directions. You could just tell. It's a little quiet right now, but it was noisy a little bit earlier. You could just feel it. You could feel it.
Yeah. The energy is palpable, as they say.
Yeah.
But yeah, a couple ideas in SPX for you. Let us know if you like them. Give us a thumbs up. Hit the like button if you do in the YouTube chat. But yeah, we can pop over to the YouTube chat now. We got plenty of time for questions. I haven't done anything in this portfolio as of today. This Micron Iron Condor, I feel like I should just close it just to save myself from insanity.
I'm telling you, dude. What was the name somebody asked? Was it Oracle? Was that yesterday? And I was like, don't do it? I can't remember which one it was.
I think it was CoreWeave.
Nah, it was either Oracle or Micron. It was one of those two, these big names.
It was Micron.
It was one of the two.
It was Micron,
and
actually.
I was like, man, these names, they're just moving around too much.
Yeah, they were like, they wanted to sell a string on there.
They're moving around too much.
Yeah, I've had an Iron Condor in this thing for like weeks, and it's just teetering between being 10 points in the money to being right between the spread. And it's like, I've had this on for weeks. Like, what is my actual time in the trade on this thing?
The only way you're going to make money is unfortunately, as it gets a little closer to expiration, it might calm down. That's about it. And obviously, we don't typically hold things so close to expiration, but I've seen this before. I mean, these things are moving around too much. They really are, and it tells you a lot about what's going on right now. Just did a short yesterday about the circulation of money between a lot of these companies, Oracle and AMD and etc. I mean, it's real, and so the vol is high in these. I mean, I didn't trade in 1999 and 2000, but I've heard a lot about it, and honestly, this is kind of what it looks like. Look at the vol that's just staying bid in these things, and look how they move around right now. You know, just if you've been trading for a while, you've seen Oracle, you've seen Micron. They didn't do this. Dude, this is kind of what it looked like in 99, 2000. These names were, that's what I used to hear. I used to hear that these names were 200. I remember when I heard this a long time ago, when somebody used to tell me like, oh yeah, Intel and Micron, they were like $300, $400 stocks, and they'd move like $50 a day. And I was like, really? Like, yeah. And I couldn't believe it, but it's not quite $50 or $100, but these are pretty big moves every single day.
Yeah. And I think that just goes hand in hand with when you have a sweeping technological advancement like that, those are the products that are going to benefit most. Those are going to be super volatile and sensitive to changes in legislation, changes in especially tariffs now. Like, who knows where we end up with that stuff. But yeah, to your point, Jamal, when I put this on, it was October 24th. IV rank in MU was in the mid 40s. And ever since that time, we've had elevated implied volatility rank. So I sold the Iron Condor here. It's been 3 weeks, almost a month, and that's why I'm not seeing any P&L, because I put this on when it was 45 IV rank. We're sitting at 60 IV rank. So even though time has passed, we saw an implied volatility expansion, and that completely offsets your theta decay that you should expect to see. And that's the most important point with options trading, is realizing that you have theta, vega, delta, gamma all working in the same environment, sometimes for each other, sometimes against each other. So if you have 3 weeks pass, but you have a big vol spike, that offsets whatever gain you thought you would have had in your theta decay. So when I look at this, I'm not surprised that I only have a 28-cent win here, given the fact that I've got 8 days to go. And to your point, like, we're dealing with an elevated implied volatility now, so I should expect to have to hold this into next week. If I'm trying to get 50% profit out of this thing, like, I'm going to have to hold this into next week. We are now 14 points out of the money, so I've got 14 points of wiggle room to the upside. I'm not worried about the downside right now, because I got 50 points down there, but yeah, this is one where I'm comfortable holding. It's defined risk regardless, but we're in the sweet spot now where as long as if I can absorb, 2, 3, 4, 5 points to the upside, or even 10, like as long as it's not a gap higher, more than 15 points, this will be a profitable trade, and it's going to come in quickly, as we're seeing here. $100 gain today on a $7 move to the downside. We should expect to see that continue going forward, because regardless of the Greeks, all extrinsic value goes to 0 at expiration. So the closer you get to expiration, the less your Greeks matter, as long as you have something that's out of the money. If you're at the money, that's a different story.
Yeah, pull up SanDisk. I mean, SNDK. Like, this is another. Somebody asked me the other day about trading these and doing. I know, right? And I'm like, I just don't know. Like, I'm not trading these SanDisk, WDC. I'm not trading these right now. This is why. This is why. It's hard. Unless you're trading them directionally, and that vol is so high. How are you trading them directionally? I'm not trading these. Sometimes you just gotta leave certain things alone.
Yeah, I mean, SanDisk. At least SanDisk has 100% IV. When gold was making this move, a similar chart. Like when gold was making this move, I was like, I'm not touching this thing from a short premium standpoint, because we saw gold go from 320 to 400, and the implied volatility of gold, like where is their 100-point move priced in? 800 days from now. So like this is a ridiculous, gross mispricing of implied volatility relative to realized volatility, and you don't want that when you're selling undefined risk or even defined risk. Like this is where we were taking directional shots, because we were seeing the realized volatility way outpace the implied volatility.
Ooh, a little activity.
Yeah, we got some orders flowing in.
Yeah.
I don't know if you can hear it, but we certainly can.
Yeah.
You'd love to see it.
A couple of chat questions?
Yeah, let's do it.
What about GLOB into earnings today? I've never even heard of this name, never traded it. Is it Globe Life?
Globant?
I don't know what it is. Globe Life.
So these ones I avoid. I mean, anytime I pull up a stock that we haven't talked about, not too much trading volume in terms of the shares, but most importantly for me, like when I pull up a stock and I only see monthly expirations, and with that limited monthly expirations, it tells me that there's not enough options activity to open up weekly options. So it's a scenario where you don't have the ability to actually trade the earnings announcement. Like earnings are after the close today, but you're pigeonholed into doing an 8-day trade, and you're going to get a vol crush in the 8-day, but you're not going to have it go to 0 tomorrow.
Yeah.
So.
And these are a little wide.
Yeah, these are a little wide. So I'm not trading this thing, but I think if you are hell bent on trading something like this, you just have to be more selective with your strategies. Like if I want to trade this, I'm not doing an iron condor. I'm not doing multi-leg strategies. Like I'm literally just buying a leap call if I'm bullish, or maybe a downside spread if I'm bearish, or a leap put. Like you have to minimize your strikes when you're dealing with something that's not only illiquid from a bid-ask standpoint, but illiquid from an expiration standpoint. So certainly tradable, but I wouldn't be doing multi-leg strategies in here.
Totally agree. Would either of you care to share some of your bigger losses at any point in your trading career and how you dealt with them mentally? I was crushing it all year, and then Oracle happened. Well, I guess we're going to have a therapy session here now, aren't we?
Yeah, I mean, so I assume, well, I guess, was the pain to the upside or was it to the downside? Because this thing has given up all of its gains.
Yeah, who knows?
Probably rally.
Probably sold puts at some point, and then was still in them. And as it's done this, honestly, some of my bigger trading losses. I mean, when I think bigger trading losses, I think back to 2015. That was the time I was trading on my own, and most of my bigger trading losses have always come from me holding long options too long. Honestly, that's up for me, which is something I had to work to completely do differently, and it's not a thing that happens as much now, but that was usually how I had my biggest trading losses.
Yeah, my biggest undefined risk trading loss was in Meta, and this was right around here. I talked about this yesterday, I think, but it was right around here, 2022, and this is why I don't really sell strangles and equities anymore. I think there is a huge difference between an equity and an ETF. this what we're seeing in the E-minis, down 1% today. Like, this is a pretty decent red day. When you're dealing with SPY, the Qs, and ETF, like, it's a lot easier to manage day to day because you don't get those 20, 30, 40% gap downs or gap up movements like you do in equities.
Yeah.
But my biggest loss was from a strangle. I think I had a 210, 180 strangle, something like this. And as you can see, we went from 200 all the way down to, I think it was like 135 that it bottomed out at. Yeah, this is when I exited the trade because I was like, okay, this is like a $6,000 loss in this 25K account. I don't know what's happening with Meta going forward. And of course, when the brain comes in and starts thinking and you see this thing go from 400 down to 100, you're like, okay, this is going to zero. Like, this company's going out of business. Close the trade because it was too big for my account. And then I watched it rip all the way back up and beyond 210 where my short call was. So this was a lesson in sizing. I shouldn't have had this trade on given the account size and given the risk in an earnings trade like that. And if I had a larger account and I had the strangle on, had I just kept the short put, taken shares, I would have been totally fine in this trade. I would have made back all that value. So if you're trading strangles in equities, I think you have to be sized small enough to where you can withstand any variance. And same thing with Oracle. Like, if you had a strangle here and then you got blown out to the upside and you closed it, and now you're watching it come back down to where you probably put it on, that's a hard pill to swallow. But you have to just understand the nature of the beast. Like, when you look at something like SPX, my whole trade idea for next year is going to be having a strangle on in the S&P 500, but never taking upside risk. Because even in these washouts to the downside, you do see bids come in, people want to buy in at lows. I think there's more of an appetite now than ever, with so many more people being intelligent, active investors. I think for me, like, I would be in a position where I'm sized correctly to where if we get a big wipeout, 10%, 15%, 20% to the downside in the S&P 500, like, I want to have long delta there anyways. So we'll see how that works next year. But for me, this meta trade was a lesson in the difference between an equity and an ETF or an index, and just how different these things can move and how they can whipsaw every which way. So I like, and that's really another reason why I started doing a lot more calendar spreads, a lot more diagonal spreads, because it gives you the ability to take a directional shot or a neutral shot if you have a near the money calendar spread, but you're still reducing cost basis with heightened implied volatility in the front month, you're inventorying delta in the back month, and worst case scenario, you lose your debit pay. So that was my biggest loser, was Meta strangle after earnings, watching it go from 210 to 130.
Yeah, it's exactly right. Like, the idea of diagonals and calendars, they save you, you know, like they really help you out to some degree. And yeah, you don't get like the massive, you know, move. I mean, you don't get the massive P&L with a move sometimes, but you know, that's okay. It's kind of the trade-off, right?
Yeah. Yep.
Oh, CoreWeave. My CoreWeave short put is in the money now. Would you sell a call against it or wait for a bounce?
Is there a strike?
There's not a strike associated, but let's just assume maybe it's the 90 or something like that. I feel like that's kind of an area.
Yeah, let's look. So let's say you're at like between 90 and 100. So if you have the short put on, if you're in the December cycle with the 90 or even the 100, you have a covered call here. Like, you still have $500 of extrinsic value in this 90 short put. You've got $300 of extrinsic value if you have the 100. So sure, you could sell the call. It's just a matter of whether you want to add upside risk. If you got the short put on and you throw this call on, you're picking up another $300. But if CoreWeave rips higher, now you have a situation where you're going to have to manipulate this and manage it to offset your upside risk if that's what you want to do. But if you have the 100 or the 90, I don't think you need to sell a call if you want to lean long into this move. But there's enough premium here, even in the 100 or 110, like, there's still a couple $100 in extrinsic value that you can sell and reduce your delta a little bit. But if you did something like this, if you had the 100 and you added the call, I would just be cognizant of, like, if you get a move back up to 100, you're going to be taking some heat on this short call, but it gives you the ability to buy back December, roll to January, and go to something like this, like 100, 120 strangle, something like that. Like that would be my plan of attack. If we get a rally back to 100 and I want to stay in the trade, I would buy back the straddle, roll it out in time, and move it to a strangle and relieve some of that upside pressure that I added by trying to hedge to this downside move.
It's funny that they asked about this. I'm trying to queue up a trade right now. I'm going to do the D's 70-75 put ratio, selling 2 of the 70s. I am trying to get that off as we speak.
Yeah, I like that. Yeah, this is nice. You've got $2.15 credit. So nice thing about this is you're picking up a healthy enough credit, filled, sounds like. So yeah, you're picking up a healthy enough credit here, $2.15, to where if you wanted to remove the risk from this trade, it would entail buying the 65 put. And if you did that into a rally, you would easily be able to lock in a good chunk of this credit and remove your buying power and remove your risk from the trade. And the reason why I say that is because the current cost to just buy this butterfly is, or buy this option, I should say, is $2.60. You already have $2.10 that you were filled at $2.15, whatever it was. If you look at this move being reversed, CoreWeave's down 5 points today. If we look at the 60 strike put, 5 points lower than where the 65 is, it's trading for $1.50. So all that to say, if you get a reversal of this move to the upside tomorrow or Monday, you could buy this 65 put for probably somewhere around $1.50, lock in this 60-cent net credit overall, and you would leg into a symmetrical butterfly with no risk and a downside move. That would be best case scenario. But yeah, I like these trades where you have a broken wing butterfly or a ratio spread where you're collecting enough premium to where if you wanted to remove the risk entirely on a rally, you could do it.
Let's see what we got. Oh, well, that's an easy one. Why do you guys trade SPX and not SPY? Well, the number one reason is it's an index product. I guess the number one reason is the number one reason, but also because it's an index product and it settles the cash. Yep. So that's the nice thing. We can put these trades on. We don't have to worry about assignment at all. Yep. Especially since obviously we're selling a lot of these. But even from the long side, right, we don't have to worry about any assignment. We don't have to worry about exercise or anything. Yeah. It's the one difference with SPY. Sure, SPY price point is cheaper, and I prefer to do. I mean, the times when I trade SPY, it's getting close. I mean, when IV ranks are in the mid-20s or 30s, and usually it spreads, right, as well. But again, just the whole idea of not having to worry about taking delivery on anything is nice, and that's the main reason why.
Yeah, that's really it. I mean, XSP is 10 times smaller than SPX, and it's going to reflect the same risk as SPY. Markets are a little bit wider, of course. SPY is penny wide, basically any expiration you look at. So that's the trade-off there. But to Jamal's point, if you're trading longer term stuff, if you're doing like 60 30-day calendar spreads, or you're doing a 30-day iron condor, like you could totally use SPY. And I think there's reasons to use SPY over SPX or XSP, just given the bid-ask spread here. But if you're doing 0-day stuff, to Jamal's point, or 1-day stuff, you don't have assignment risk here, where in SPY you do. If your spread expires halfway in the money, you're going to wake up to 100 shares of SPY and no defined risk to protect you from that. Or if you don't have the account size, you might get liquidated prior to expiration because of the risk management of whatever broker you're trading at. So yeah, we use XSP and SPX because it's cash settled and you don't have that assignment risk for near-term stuff. But if you're doing longer-term stuff, I think you could totally use SPY.
Yep, and you actually answered the other question. What happens if you let your SPX 0 DTE trades expire in the money? It's settled to cash, right? Yep, it is settled to cash. 30-year bond auction at the top of the hour at 1 p.m., I think. Is it scalpable? Maybe. I mean, it's possible. I feel like we've seen some moves in bonds, but I haven't been able to find anything I want to do in here. I mean, look at the near-term chart here. Like, what the heck do you do with that? I don't know. And there's no vol. I'm waiting for something to do. I'm waiting for it to show me something to do, and right now I don't see anything there, personally. Hello, Mike. EEM, Zebra, or spread to the downside? EEM, emerging market, yeah.
EEM, huh?
Yeah, I mean, it shows you emerging markets have been strong this year.
Oh, yeah.
Wow.
Yeah, EWZ, too.
Yeah.
Our friends over in Brazil. Nice, strong move. But yeah, EEM, if you wanted to play a reversal here, it's a nice price point for sure. I mean, you're trading near highs of the year, and we've rallied all the way from the lows, tariff lows of 38, 39. So yeah, I think for a spread, just looking at this implied volatility, IV rank is at 23, implied volatility is at 20%, 19%, depending on what you're looking at. So I'm 100% on board with a defined risk debit trade here. Like, I wouldn't be selling a call, taking all this risk for $100. Like, you can synthesize $100 of max profit much more easily if you did something like long Jan 55, short D's 53. Like, look at this. You risk $100 for a 2-point wide spread. Your max profit is the same as taking all that upside risk. So I like the idea of diagonal spreads here. You can make them super small, but also you could just throw on a zebra too. Like, if you want static short delta exposure, you could do a similar thing where you're buying the 57, selling the 55. This is in January, 65 days out. Like, you're putting up $300, but you're renting 100 short deltas in EEM.
Yep.
So the more near term you go, this is a 64-day cycle for $350. If you did this exact same setup in December, it's probably going to be like $200. So you could do near-term zebras and really give yourself a lot of leverage to the downside relative to your debit paid. It's just a matter of where you want to go.
I like the zebra idea more than anything. That's just how I roll.
Yeah. So this one, in December, you can actually bring it in a little bit. This one, you're picking up extrinsic value, which you don't necessarily need for a zebra. Like, really, you're just trying to eliminate extrinsic value. So yeah, 260 for D's. I think I can get in on this. I'll bite. Actually, D's I'm not going to do because this bid-ask spread's really wide. $1.50, $2.40.
Yeah, well.
So let's scratch that. Let's just go to Jan. Pay a little bit more. I guess this one's pretty wide too.
Damn.
Damn.
There you go. That's not terrible.
Let's do this. Let's put up $500 here. We'll go to the 58.55. And what I'll do is I'll plan on, if we get a rally here, I'll plan on just like rolling this put up to try and offset some of that risk. Because you can roll this put up all the way to the 57.5, and you still have that extra long put to get your deltas. So I'll do this. $500. Play for a continuation of the downside. Stick with the liquid markets here. 355, 380 bid. $1.67, $1.73. We're good there. Instantly filled. Don't love that.
Instantaneous.
Yeah. But yeah, we'll see what happens. Get some downside action in here.
Oh, hello. Got an inverted Micron. I assume strangle. 230, 240, $3,400 in net credit. That would probably make sense, I guess. Wait, no. Inverted Micron? Yeah, maybe. Let's
230, 240
yeah.
In December?
In December, yeah. Yeah, if I'm reading this right.
And how much credit?
It said $3,400 net credit.
Okay.
Yeah.
Yeah, I mean, you're right between your strikes. So this is your best case scenario here. You're looking at a $1,500 loss, given the current value of $4,800, but this does give you the ability to adjust this trade if you want to. So earnings are coming up, being priced into this December monthly cycle. If you want to keep this trade on, totally fine. If you wanted to move it out to January, you're going to give up some of that implied volatility exposure and replace it with some time value, which you don't necessarily love, considering you've got a 36-day cycle reflecting a 40-point implied move and a 64-day cycle reflecting a 50-point implied move. So you can see here that you've got lots of premium in this December monthly and plenty of extrinsic value here to decay. So just pulling up your risk graph here, what was it, $3,200? in premium.
$3,200, yep.
So if we look at if we get rid of my stuff here and we just look at yours, so you've got $3,200 in premium. With your current position here, you basically have a strangle at these same strikes with a break even down at 208 and up at 260. So 50-point range if you want to keep this as is, and it will decay closer to your credit received as time passes, of course, and especially after the earnings announcement. But if you wanted to adjust this trade, you could look at maybe buying this back, going to January, and just replacing this premium. It looks like it's going to be pretty tough. Yeah, so let's say you wanted to give up some premium. You've collected a lot of premium so far, which is good. So like if you wanted to do something like this, where you're going out to January, paying $700, or if you want to lean long or short, like you can do really whatever you want here. But the idea is if you've got $3,200 and you move it to like the 230, 260, or the 220, 260, or 250, you're going to pay some kind of debit. This will bring you to a 220, 250 strangle with a $2,500 net credit. So if we just throw up this raw value, $2,500, assuming you pay $7 and reduce your $3,200 credit down to $25, now you're looking at something like this. So you actually have a similar break even here. It's improved a little bit to the downside and the upside, but this is something you can do if you want to make an adjustment. But again, you're going into the Jan cycle and out of the D cycle, which has more implied volatility. Market's selling off here.
Yeah, we just dropped, and I got filled on that spread in SPX for a 30-cent credit.
There you go.
Yeah. It was 30-cent debit not that long ago. I don't think we're coming back up today.
Well, you got it for Monday, right?
Yeah,
so
I got it for Monday.
You got the weekend.
Yeah.
We'll see if we can get some resolution here. But yeah, big sell-off towards the lows of the session. You can see we're kind of bottoming out at 67.85. But yeah, plenty of volatility today. That is to be sure. And if we look at the vol futures market, we're pretty flat now. The X contract's at 1960, the Z's at 20. We're seeing a much bigger rally in the X, of course, than the Z, but 7% rally, 3% rally, and then these back months are all up 1.5%, we'll call it. Still in contango, which if you're bullish or trying to buy this dip, I think is certainly a good sign. But if we see this continue to the downside and you see this flip to backwardation, that's where I might, take my hands off, trade smaller, even smaller than I was thinking of before, because backwardation is your sign that you might see this thing fall out of bed.
So me getting filled in that spread, and I really do mean that. I wonder what the rest of the day holds. I mean, the fact that happened, and we've just been hanging around here, right? Like within 20 handles or sitting in this area. It makes me a little worried that we might fall lower. I would say at this point, if you're like me and you just got filled on some type of nice spread to the downside, probably start risk managing the book a little bit, look around at a couple of things you might be able to close, because I don't know, it could potentially get scary the rest of the day here. Back to the questions. I'm curious about this one. Somebody's got, we got a little less than 7 minutes left in the show here. Somebody's got a good question about SPX, I assume. Has to be SPX. Iron Condor did 3 of them. Check these strikes out, man. 63.75, 64.75 in D's 26 expiration. And
D's 26?
No, sorry. This December, the 26th. The 26th. Yeah.
Got it.
So I assume the short the 64.75.
All right.
100 points wide. So long 100 points on the downside.
All right.
63.75.
All right.
And then short the 70.25.
Okay.
And 100 points wide there too.
All right.
So they're just wondering if they're currently down a little. Should they adjust? I mean, it seems fine to me. We should be
Look at all these. I have so many strikes here. This is.
Yeah, I know.
Okay, so we're just looking at this.
I feel like you're fine. You don't need to adjust anything.
No.
No.
Yeah, you're down a little bit because you're getting a vol spike. That's really it.
The wings are getting bid.
Yeah. So wings are getting bid, which is hurting your position, but. Like Jamal said, I mean, you're right where you want to be. This is a longer-term position anyways, 43 days out. You've got $4,000 in premium, and we can see this here, too. If we look at SPX.IVR, we can see that if I smooth this out so it looks a little better for the people at home, wherever you sold this, we are now at the highs of what we've seen in SPX IV rank. So if you sold this here or over here, you're just seeing an extrinsic value. I like to call this a marked loss. So an extrinsic value loss due to an implied volatility expansion, even though you know that at expiration, you'll be fine. So yeah, I don't think you really need to make any adjustments unless you really want to. And I think that's really also the reason why I say that is because if you look at just this position, and you look at the raw value of this position trading at $3,500, like where do you want to move this thing if you want to, or if you just want to move one of these spreads, you're at a 50% pop right now. So let's say you want to roll the call spread down to 7,000, 7,100. So you're moving it down 25 points. It's currently trading at $3,500. Let's see what this would trade at if we move it down 25 points. So you pick up $200, $300 if you move this down 25 points, which actually isn't too crazy. It's not nothing, but when you do this, you're going to reduce your pop. So the closer you bring this to the current market price, if you're trying to hedge to the downside, you're going to pick up more premium, but you're going to reduce your probability of profit here. So rolling down calls into a sell-off, I don't really love. If you want to do it, you totally can. But another thing to note, if you have a more narrow range, you now have to wait longer to get to 50% profit on your initial position, because you have strikes that are now likely within the expected move, and that's just going to result in you having to hold this for a longer period of time.
I think it's fine where it is, honestly. It's interesting to the downside. That's essentially August prices. That's basically like the middle of August, honestly, which is the trip.
So yeah, I mean, if you think this market move is going to continue, you could roll it down, pick up a couple $100, but if it reverses, now you're going to be just that much closer on the upside. And for me, I don't adjust anything that's right between the range. I'd rather just let it cook and keep that wide range that gives me a higher pop than move it more narrow. And especially when you think of the consideration of you're going to have to hold this longer to expiration to get the full value out of it because it's more narrow. That also prevents me from making a big adjustment. That's just me.
3 minutes left in the show here.
Yep.
Somebody's asking about AMAT for earnings. Speaking of earnings, it seems to be the only one that's worthwhile when I look at earnings tonight. There's not many, but I don't know. Me personally, I'd probably play AMAT to the downside. I know that sounds a little weird, but that's just kind of the sentiment I feel in the market and on some of these earnings I feel. Yeah. So that's what I would do.
Yeah, I mean, it's always an interesting point because the only stock that rallied in a big way into a market sell-off like this was Amazon. Like, Amazon was the only one, to my knowledge, that ripped much higher than the implied move, and that was into a market sell-off like this. Like, when you have these products that are down today, it's had 6 losing sessions in a row, and now it's got earnings after the close. Like, they really have to outperform expectations to get this thing back up to recent highs.
Yep.
So to Jamal's point, I think if you want to trade this thing, there's still plenty of implied volatility.
Hey, feel free to fade me.
Yeah. I mean, there's 11 points of an implied move on a $220 stock. So not much implied volatility in the weekly, but when you compare that to the monthly, you're accounting for half of the implied move in the monthly in one day. So you've got a 22-point implied move here in December, 11 points in the one day. So you can get a pretty small trade here to the downside. let's see. Yeah, you might have to go to like the 210. So the 210, pick up $1.50 for tomorrow, and then pay $6 to the downside. So this brings you down just a little bit lower than the expected move for $500. But it gives you the ability to adjust a little bit if you need to. Like if this, let's say AMAT rallies a little bit, you could roll the 1 day into the 8 day or the 15 day and still have a decent diagonal spread. I'm going to lean towards what Jamal said and go with I'll go with a downside trade here. I think they're going to have to smash for this thing to rally, in my opinion, but still smaller risk here nonetheless. So let's see if we can get 555. Instantly filled. Don't like that. But yeah, we're at time 11:55. But just a real quick recap. Bunch of SPX trades, so keep your eye on the follow page. We'll post it right after this show. EEM got a downside put zebra. Who am I? Downside put zebra in EEM and a downside calendar spread in AMAT. We'll see. I think this is the first time in a long time where I placed 2 bearish trades in a row. As a permable.
Yeah, I know, right? It's that kind of market. That's the kind of market we're in, I guess.
Yeah. That's it for us, though. Thanks for tuning in. Hopefully you enjoyed this session. Got a lot of questions in. Went over a lot of implied volatility stuff, some SPX stuff. But stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. If you want to reach out to us on Twitter, you can find me there. I'm at Trader Mikey B. Jamal is at Jamal Chandler. We'll see you same time, same place, 11 a.m. Central tomorrow. We'll see where this market's at, most importantly. But have a great rest of your trading day. Peace.
Later.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Dale pa' acá, estoy seguro que te va a gustar. Dale pa' acá, yo estoy seguro que te va a encantar. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. Ahí, ma, tú eres una malvada. Dale que eso no es nada. Tú y yo vamos a quiquear. We get caught up, we lose the time. We get lost, we get out of our minds. But let's focus our rosy eyes. Why don't you tell me the rest of the line? Hey, hey, hey. Hey, hey, hey. I'll be right beside you, all I ever want to. Can't get a better view on this spring and summer right through. All the way I told you, can't get a better view, can't get a better view, can't get a better view, can't get a better view. Cruising upstate and cooling down.
What's going on, everybody, and welcome back to another Risk and Reward. Today's Thursday. We're getting a little bit of a market sell-off here, but we'll touch on all of that. Hope everybody's doing well. Theta Trader, Big Deal, Mikos, Rancher, everybody taking the time to hang out with us and talk some markets here today. Maybe get some trade opportunities on, too. Before we do that, Brother Gus, how we living up to today?
Doing good. Yeah, this sell-off has not been super conducive, but I got some things moving in the right direction. I'm finally catching a nice move on a firm. I got those shorts on, so feeling good market-wise. It's Thursday. We're close to the end of the week. Feeling good holistically. I'm a happy camper.
Happy camper. I mean, we got our first snow this week. We're getting some lower lows on the market so far. What else has really stood out? I know the market, the government shutdown. That's been top of the headlines this week too. We're still waiting on a resolution for that.
Well, I believe it's done.
Okay.
I think today we're back open is the deal.
So,
because I know yesterday. I know. Yeah, I'm sure it's today.
Yeah. No, you're good. You could be like, no, bro. We're good.
Well, I had to think about it because I know that there was it got through the House last night, but then there's a second House vote where no one was expecting it to fail, but there was one more thing that still needed to happen. But yeah, I'm reasonably certain that we're reopened as of today.
Yeah, Mikos, market is broken. Maybe someone turning it back on, maybe, right? To Gus's point again, government back up, is the market back up? I don't know. We'll see how the market wants to digest that news. I know right before we hopped in here, we're talking about a power hour reversal, maybe big deal. Maybe we get some volatility into our segment here today.
Yeah, Nick and I were laughing earlier today at the fact that the government resumption is just causing this giant drawdown. I mean, at least it seems. I don't know that causing is necessarily the word, but correlated with this little bit of a drawdown we're getting today. Good. We're pushing 1.5%. And as we've discussed recently, it's amid this entire uptrend, I mean, since the end of April, really to now, we've had very few days over 1%. I mean, even during the green waves that have come through, it's just kind of these little, 0.7, 0.8% days, and we just keep stacking them up and stacking them up. But these north of 1%, and especially pushing 1.5% type days are few and far between.
No, 100%. And I mean,
Bitcoin is below 100,000. I'm seeing in chat also.
I feel like crypto has been a little bit more of a talk of the town lately. I mean, I don't know if I've been getting into, rabbit holes per se, but I will say the tinkering around 100,000 on Bitcoin seems to get the market or the market participants in a bunch, I would say, because whenever the market has an uptick in crypto right now, we're getting a pretty big reaction. Whenever the market gets a downtick, we're getting a pretty big reaction. So to me, it feels like a lot of people are positioned around 100,000, maybe because it's that whole round number. I remember a couple years ago, we were doing a little, end of year tastylive videos, and it was like, what do you want for Christmas? Some of us were like, 100,000 Bitcoin. Never got there. We were just a couple years too early, but now we're trading at 100,000. So that 100,000 mark really seems to be that, really teetering kind of spot there.
Yeah, no, absolutely. Yeah, the psychological resistance is always so real around big, round thresholds like that. I've actually seen more technical crypto people that have more knowledge than me in the space saying that 95,000 is actually the number.
Yeah?
Like that's the big resistance. If we get below 95,000, we could go do some serious testing of lows. But yeah, the 100,000 psychological resistance is very real, I think. I mean, if you're thinking, think about it. Like if you're short crypto, if you're short Bitcoin, 100,000 is going to be a very, very logical level for you to say, I think we'll retest here and I can get out. You laughing at Theta's comment?
Yeah, I thought that was kind of funny. All right, we popping our chains.
Yeah, there we go. You're welcome, everybody. Market is safe. Get long. The chains are out.
No, with that being said, we'll do a little bit of a tour to market. We'll get into see how some of these underlyings are performing right now, but we can jump into the tastytrade platform, go over a couple of the positions that we have on. I was looking at one more underlying. I want to get your guys' thoughts on. I want to get your thoughts on it too, Gus. But I got one I was keeping an eye on. But let's first look at the portfolio.
I'm getting long IBIT right now.
Some IBIT?
I'd like to float that, yeah.
Okay, let's actually take a quick look at that, though. IBIT's getting hit to the downside. I imagine BITO's probably getting hit right now, too.
Certainly,
and I imagine Bitcoin got to be getting hit right now. Did you just mention where Bitcoin was at?
Bitcoin's below 100K. That's okay. What, yeah. Well, it tested below 100K. I'm not sure what the exact spot is right now.
I got you.
Yeah, there you go.
99,620 right there.
Yeah, I feel like anytime this dips under 100K, I think leaps are a good idea. I'm going to go a little bit longer dated than the existing leaps that I have on. But yeah, this is going to be a pure gamma play with all of the premium on the put side. I'm thinking like 110 strike or something crazy like that.
Yeah. That's IBIT, right?
Yeah.
The gains, we'll circle around PLTR here in a little bit. I know I was checking out PLTR today.
Yeah, I'm grabbing a 105.
105 on IBIT.
January 2027 105 call.
January 2027. There we go.
385 is my, I should say attempted entry. I am not filled.
I like it.
We got
IV's up in
387. Okay.
Got a lot of volume traded on it. Very liquid.
There we go. Yeah, really, really love these crypto ETFs. Being able to just get options exposure to crypto is very, very nice to me. And I did also trim. I was pretty deeply long some Ethereum verticals, and I halved that position earlier today. As I sit here right now, I'm debating if I want to have my IBIT leaps as well. I think I have to. Yeah,
IBIT. Yeah.
Yeah, because these are December 19th, and we're far from glory now.
No, I really like it.
Taking off 2 of those 3, and then we'll just reposition into longer longs.
No, I really like it. I know BITO's a little bit cheaper. I think I might have traded the ETF BITO maybe once before, but I might express some directional exposure in crypto through BITO. IBIT's IV rank is really nice though. It's not as hammered as something like BITO. Circle back around to those two. As for the portfolio, UNH has given back a little bit of its gains for the day. Baidu getting hammered on the day. Some of these Chinese names down off of some news that we'll get into here in a little bit. We sold an out-of-the-money call spread on that one. We can start looking to maybe take this one off now. Actually, that's probably what we're going to do because we're 8 days left till expiration. We brought this one right down to the wire just because we were in a hole, right? We were at like the worst case scenario for a while. So this is one of those that's like kind of like a buzzer beater. I kind of like to look at it when you get so near that expiration, it kind of comes back into your favor. So I'm going to take that as a dub. Go ahead and take that Baidu position off, even though got a little out of control for a little bit there. Let's even get filled.
Yeah, I think big deal. I believe you're right that XRP is looking to come out with an ETF. There's like a whole new list of very exciting ETFs that's getting pushed right now. They're doing leverage crypto ETFs and they want to give XRP an ETF, and then they're trying to do I guess they're not ETFs, but they're giving leveraged. They're rolling out more leveraged products is basically a thing for like the super trendy stocks right now. I think I saw a 2x leverage CoreWeave was like one of those that was in there, and we're working. And I like when people do that. Like I had that whole funny moment when I discovered UNHG on the show, but that's a 2x leverage UNH just because people want to trade UNH, and so they decided to make a leverage product. And I really like when people do that. It's a great way to get some additional exposure if you have strong convictions about something.
Do like that. And I know we got the comment over here. BITO, haven't heard about that one in a while. Since the good days. No, I know it has been a little bit since we've talked about BITO. I was looking at BITO. I was surprised about how much more attention IBIT gets from BITO. I think BITO has been a little bit neglected over here.
Yeah, and then there's also is there also BITB?
BITB.
Yeah. BITB is another one.
Is that another one there? BITB. There we go. Yeah, same thing.
Yeah, just another one that exists, and this one gets the least love of them all, but they're all essentially the same product. I mean, this BITB is like insanely similar to IBIT. I mean, even right down to the like level of correlation. I mean, what am I trying to say here? Ratio to Bitcoin. Like BITB is $53 right now, and IBIT is $56. So I don't know exactly how the crazy technical back end of establishing that ETF even becomes a thing in the first place, but they've done it very similarly. They've taken very similar angles of attack.
100%. Market's making new lows as we speak. We'll see if the market wants to reverse here. We got a couple hours left in the market day. So with that being said, I was taking a look at Oklo. I wanted to get on a little bit more premium here. And something that I haven't done in a little while, Gus, was get on an iron condor. So just selling both sides of the position. It was looking a little attractive here, thinking about selling the put side. I would think I was looking at the 90s before. I think I was looking at the 90s and 85s. And I was looking at near this expected move in the December cycle. So I'm going to pay a little bit more attention to this. And right now we can collect 313 for it. I think earlier today when I was looking at it, we were collecting maybe 280 something for it. So the premiums are going up a little bit more, maybe because we're getting new lows in the market. Me pumping those premiums a little bit. I don't know. It feels like most things are on its butt today, doesn't it?
Yeah, I mean, yeah, it does. Everything's just getting whacked.
Yeah.
Yeah, I mean, I don't know. I'm happy with some things that are getting whacked. I'll tell you something that's not getting whacked is Firefly Aerospace, where I've been long for a while. I joked with you earlier this morning, but I'm long Firefly Aerospace because they had a rocket blow up, and I said like 100 times on the show, you can't get worse than a rocket blowing up. And then today they had a really good earnings report and jumped 20%. So shout out Firefly Aerospace, although they are selling off now with the rest of the market.
Shout out Firefly Aerospace.
Still holding highs though. I mean,
what was the ticker for that one again?
Fly, FLY. Yeah.
There we go. P-Sky, Fly. Nuggets and 7.
Y tickers. But yeah, that's I'm pretty much just back at break even. I was a little bit too gaudy with my entry here. It was right around the October 1st level. So we have sold off a little bit more. So we're just eking back to break even. But I'm happy to see any bullish news break for this company that has done nothing but go lower for 6 months.
Oh, yeah.
So yeah, that's a good one. Affirm. Also, I have my Affirm short leaps, just AFRM. Selling off a little bit. A lot of it, actually, I should say, almost 10% now today. So that's going well for me. And then BlackBerry, finally, we decided we don't want to hold BlackBerry anymore in the Big 2.5 BB.
In the Big 2.5. What's going on in BlackBerry today?
I'm not sure. I think we're just selling off with the rest of the market. I mean, the whole thesis for this trade was just that it ran up with Nokia and it made no sense for those levels to sustain. And for some reason, it did sustain those levels for an uncomfortably long time. But now with 8 DTE on my naked 4.5 put, we have suddenly rocketed into the money. So I'll stop getting eaten alive by Theta. Hopefully can work something out there. Because yeah, I mean, this really isn't that bad at all. I'm down like $8 a contract. We just got to get it to go somewhere. But happy to have that in the money, and I'm really hoping for a retest of this 350 level. But that would be a serious crater in the amount of time I have left.
Nokia was moving a little bit more for me on my end today. I know I had gotten that Zebra, and it's been really slow. It was a smaller position, cheaper underlying. It was trading at around $6-7 at the time of putting this on. Up about 16. I didn't even mean to do that. Trading at about $16 right now on the day, $10 overall on the position. So that one's a slower mover. It was a Zebra, very directional position. But if we find other cheaper underlyings, we'll put on some more of these Zebra positions. I kind of just view it as like a synthetic futures contract. It's like a synthetic stock. Sure. Yeah, right. Synthetic futures contract. We'll take it at that. So with that being said, we can jump over to the TradingView platform and look a little bit, at some of the price action going on NASDAQ today. Not much going on besides more downside, but let's take a look. Let's take a look, guys. And we took a couple of trades today, guys, and we had to manage our positions, and we just haven't gotten much over the last 24 hours, really. Kind of surprised that the market is selling off to these levels, but just some good keeping our house in order here. Sometimes we have to manage our red trades. So what does that look like when a trade is running against us? Because sometimes we come on here, it's a great trade that played out really well. We were able to get the bottom of the move, get the top of the move. But if the market keeps dipping, if the dip keeps dipping, like how do you manage that? So this is kind of what it looked like for today. The market sold off all the way down to the value area low. Look to scale in a couple contracts from there. Just had the stops in down at the lows. So got stopped out for, what is that, 522, 223. That one was about, what, a point, maybe 2 point stop on that one. This next one was a little bit larger, right? 2 more contracts we added near this value area low. Just wanted to retest this low that we had put in, near that value area low. Just a trade opportunity, want to take advantage of some decent risk to reward in our favorite there if the market wanted to reverse over there. Got stopped out for another 20 points. And, trading directionally, you're just going to have to put in those stops. I'm a huge proponent of using stop losses because the way that I see something like this as well is, it's like, yeah, the market could have came back for us, but at the same time, the market could have just consolidated for the next 30 minutes and then made new lows to where we're at now. And then we would have been sitting in a pretty deep drawdown because, again, the market never made any, prominent higher highs since that point. But those are a couple opportunities for the day. It's not always fun every day. Sometimes it's like, man, I got to stop out of this trade and just call it quits and wait for the next day and be patient. But, that's how it is sometimes. So,
yeah, this is sometimes there's days where the stop losses make you look bad and people say you should never ever use stop losses ever. And then some days there's days where the stop losses make you look great. And this is one of the latter.
No, and I mean,
definitely needed them in today.
No, and I mean, who knows where this market is going to go? Actually, I really wanted to get on another directional position this week in some of the cues, but I just couldn't get one on. The market didn't rip as high as I thought it would, and now we're experiencing a little bit more downside. But one thing that I think is going to be interesting to be mindful of is this swing low down here. I know it's a little far. I know it's pretty aggressive, but obligatory when trailing stops, right? That's right on time. I was wondering where those
obligatory when trailing stops comment. Yeah, it is obligatory. I would have been worried about you if it didn't come through, Jared. It is obligatory.
We'll relay the information. Got you. Feel free to drop that in there every time too. Just like. But no, with that being said, I think a really interesting level to pay attention to from a larger perspective on something like NASDAQ is going to be this swing low over here. So. We'll see if we get any reversal points before that, but until then, that's what we're going to be keeping an eye on for. So, like, what's going on in my mind when I think about holding some of these trades to the downside without managing the risk is like, what if the market sells all the way to these swing points by the end of today, by the end of next week, whatever it is, before you know it, you're down 500, 1,000 points on a micro. 500 points on a micro is $1,000 on one micro. So if you go down 1,000 points, that's $2,000. That's $2,000, right? We're just using the smallest contract that you can use in some of these positions. So take it with a grain of salt. Maybe you don't have to use stop losses as tight as I will use them sometimes. Maybe you can give yourself a little bit more of a cushion. But at the end of the day, I think knowing where you want to be in this trade and not wanting to be in the trade is important too.
Yeah, absolutely. Well put.
Yeah.
I believe rack is the technical term also.
Rack.
I think a rack is 1,000 and a band is 10,000.
A rack.
Yeah.
Oh yes.
Yeah.
Yes,
I think.
Yes. I love when we get very studious.
Yes, it's important to being documented and all. It's important that we use the right terminology.
Market's selling off to new lows as we speak. Good Lord, what's going on, guys?
And I'll tell you what's not selling off one bit is metals.
No.
We are back at highs just about on gold and silver alike. Gold a little bit less close to the highs than silver is, but silver pretty much right back at highs.
Yeah.
Gold we're like quick math 8% from highs.
There we go.
So yeah, I mean we're right there. I had a stroke. We're retesting these levels, and I find that very interesting. And in fact, as I sit here talking about this, I think my entire short thesis for silver is dead. So I'm going to get out of these.
No, kind of over silver for now.
I'm going to cut some losses. Yeah, I mean, the entire idea was that the government shutdown might do enough to knock metals off just a little bit more. I didn't think silver was ever going to actually get to the level that I needed anyway, but I thought it was, maybe in the equation. But amid this rally that we've had over the last few days, that ship has sailed. So yeah, cutting my losses on silver there. I'm out.
No, we were in a pretty long waiting period on gold. I know this was going to be another product we said that we would look at a little bit more often. Now that it's moving a little bit more again, maybe we start looking at it again. But it did feel like we were kind of just in the queue for a while. A lot of consolidations at the highs, at the lows, and then market finally picking a direction in terms of where it wants to go. But again, we'll remember. We'll keep an eye on something.
I mean, if we make higher highs and go higher, I would be so blown away. The run that we had, and if it only takes, what is this, a 20-day breathing period, and then we go make new higher highs in metal. I mean, we're talking about metals. We're not talking about Palantir. We're talking about gold.
We got...
Love my gold and silver ETFs. An options-based ETF for silver and gold. Nice. Yeah, SLV is specifically what I was short in. If I want exposure to metals, GLD and SLV are typically the way that I go. The futures angle is absolutely there as well, but I don't know. I'm more comfortable with the equity options.
No, just looking at a little bit at...
They paused the government shutdown until January, right? I guess I suppose that's an outlook. Is January the next time that we're there's a vote like this? I'm not sure, but to my knowledge, the government is pretty much resumed. Also, they said that we're just not going to get October jobs data, which I thought is funny. They were like, we were shut down the whole month. We don't have it.
Just looking at gold here again. We'll take a quick pivot to Bitcoin. Actually, get a nice little visual going for over there. But we were looking at gold here a minute ago.
Yeah, are gold and Bitcoin inversely correlated? Great scholars everywhere are asking.
They might be. Let's go to the daily, get a larger time frame view on this, on what Bitcoin's been doing. So right now, Bitcoin trading at around, let's see if we can get the actual Bitcoin on here. I'm sorry, there we go.
I have some IAUI in my long term, 0703.
Yeah, I forgot we did a little bit of an analysis on some of the metals and on some of crypto, I forget, a week or two ago.
Yeah, yeah.
Charts have changed since then, so I got to change this back to black.
Yeah, do we still have the moon on the gold chart? Because we might need to.
We might, so we can double check for that real quick. I don't remember deleting it.
Is it under the value area?
I'm not sure where this went.
It's not a big deal if we don't have it. I was just curious. We might need to.
Yeah, maybe not. But we would have reached the moon.
We would have been back at the moon, and now we got to add another planet or a galaxy or something. We'll get around to it.
Yeah.
Inverse relationship. Yeah.
No, we'll definitely pay attention to gold though. I think this will be interesting. Again, most of volume profile and most active directional trading has been done on NASDAQ, but we'll start to take a look at some of these metals now that we're kind of creating a playing field instead of just up or just straight down. We might be able to derive something out of this. So we'll continue to keep an eye on it. More specifically, if we pull back on gold, because now that we actually broke out of that range after this insane sell-off from the insane run that we had seen over the last few weeks, we'll check to see the response that we get from around that 4,445 kind of level. You can readjust your volume profiles and see where you might want to pull that from, but let's see what the market does. It might not pull back. We might go to another all-time highs, but at least we're prepared if the market does that. So that's over there on gold. I think we were looking at Bitcoin right over here, some Bitcoin futures. We marked up the charts a little bit over here on Bitcoin, trading at 99,330 right now. Let's go to the 1 hour, get a little bit of a larger time frame.
Okay, I've done research.
What you got?
Fox and CNN both are reporting that the government shutdown is over. They're just saying the word over. I don't see anything about a temporary pause. So there you go. There's your right-leaning source and your left-leaning source, and they're the same. So that's the news that I have.
There you have it, folks. Everybody's working together.
Do you still have a Pfizer position on Gus? They sneakily changed their ticker to avoid the losses. Let's see how that works out for him. Yes, I do have a Pfizer position. I did notice that they did the sneaky ticker change when it was like the day after I put it on, or like 2 or 3 days after I put it on. I went to looked up FI on TradingView, and it just wouldn't pop up, and I was so confused. It was the day that they had done the switch, but they moved to NASDAQ is actually what happened, and I don't know if there was already an existing FI ticker on NASDAQ or not, or maybe you're onto something with they're trying to dodge the losses with the ticker change. But yes, fortunately, no harm done to my positions with the ticker change. It's not like a split, or something where it actually can cause you some problems. But yeah, and it's looking good today. Again, like that's massively against the rest of the market because I'm long there. But yeah, Pfizer up about 1% today. So hopefully,
what was that again? FI?
FISV now.
FISV.
Previously known known as FI.
You're not slick, Pfizer. You're not slick.
Yeah, this is in contention for the ugliest chart I've ever seen in my life right here.
Oh, this is horrendous. This is horrendous, guys.
And I'm long against it, but yeah, I will add as well, especially because I have a naked leap on. I am still pretty deeply in the red on this position, but I have 64 days on my 75-85 short put vertical, so feeling a little dicey there, but my 125 naked leap is September 18th of next year, and I'm still cautiously optimistic about that. That wouldn't take very much for that to all of a sudden be much livelier, alive again, reincarnated.
Reincarnated.
I don't know.
Tomato.
Chris is on after us is the answer.
Yeah.
To that question.
can you chart gold and Bitcoin together? I'm sure you can do it on this TradingView platform. I mean, I've charted multiple assets at the same time using a line chart, so I'm sure you can do it in some way.
I've done like double box before. I don't know if you can overlay them on each other or not. I'm sure that there is a way to do that, but I don't know it either.
Yeah, we'll circle back around to that. And now that you brought it up, maybe we'll.
Yeah, that would be a great study. Honestly, we might just be able to pawn that off on research too. Yeah. Let's tell Sahil we need that.
And then, Tesla. Tesla's been really quiet, but no, we'll circle back around to gold and Bitcoin, and we'll.
Pfizer does look much better when you zoom into the 5-day chart. You're right about that.
Looks a little bit more liquid.
Perspective. It's all about perspective.
You laugh. But those are wise words.
It's true. It's true. And your trades are only valid on the time frame you're looking at.
You're right. You're not wrong. You're just early or late. Tesla getting absolutely hammered today, actually. IV might be juiced a little bit more in there. I know we got just a few minutes left. Let's take a look into the tastytrade platform. Just quickly see what that options chain's looking like on Tesla. Because they're getting hit. They're finally moving. It was a ghost town for a little while there. Premiums are up there. 20 IV rank, 75 million shares traded on the day. So we'll keep a...
Oh, they're saying you can just type both symbols on TradingView with a plus sign between them.
Oh, we'll do that real quick.
Yeah, let's hop over there. See if that works.
Cool.
GLD plus BTC USD.
All right. We'll do...
This will be our closing thing here.
We'll do...
Yeah, that's fine too.
Plus...
BTC USD is the full thing. Yeah, does that... And then just hit enter. Oh, yeah. Is that... What is this?
This looks like, if I had to guess,
this looks like just Bitcoin.
It looks like just Bitcoin, if I had to guess right off the bat, because we're trading at 99,000. What do you got on Bitcoin over there, though? Because, I mean, Bitcoin, I could have swore it was just trading at 99.3 something.
Yeah, no, 99.232 is what I have.
Okay.
So it's like...
232, mine's at 99.115. Are you on the futures, though?
No, I'm on BTC USD.
Okay.
Are you on the future? I don't know.
I'm on BT, yeah.
Anyway.
We'll circle back around.
We'll figure this out. We'll figure this out.
No, I think that'll be an interesting perspective to see. Like, sometimes when you crank data, sometimes you'll find out, you put in all this work and be like, oh, there's actually no use case to this data, and it's pointless. But at the same time, that kind of gives you information, too. Now,
and you have to do the pointless ones to sometimes get to the one that has a point.
Process of elimination right there.
Exactly.
Anything else to add before we start to wrap for the day?
No, nothing else. Jared, to your point, Dash trying to be green. I would agree that that's the best way you could describe it. Is that it's trying. But yeah, I'm still feeling very optimistic about Dash as a whole. And I guess that would be my closing remarks for the day. Hopefully DoorDash to the moon. Might get some more if we get lower.
Oh, I accidentally put Gush. I think I was thinking Gus.
Combine Gus and DoorDash there?
Bro, put Gush. Good Lord. That's going to wrap it up for today's segment. We'll see how the rest of these positions pan out. Anything top of mind for you?
No. Pfizer to the moon, BlackBerry to the earth.
BlackBerry to the earth. All right, guys. We'll see how some of these trades play out. Thanks for taking the time to hang out with us. Be sure to stay tuned for more segments coming on next. We will catch you guys next time. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on tastytrade, named best online broker for options trading. Genius loves company.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas.
Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Ave María Morena, Ave María Morena, Ave María Morena, caballero eres morena, Ave María Morena, le digo rumba buena, Ave María Morena. Morena, pero que me muero. Ave María Morena. Morena, morena, morena. Ave María Morena. Y tú son los ratos buenos. Ave María Morena. Morena, pero mira morena. Ave María Morena. Oye, que bien ya suena.
We're back. It's still Thursday, November 13th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Thomas Westwater. Thomas, quite a different day than yesterday at this time.
Yeah, I mean, we're taking some pain right now. Fed rate cut bets are in question, and that's throwing the market off. So there it is. It's happening.
It's happening. John, we can go to the slides. Thomas hit the nail on the head there. No data, no cut. It's not as sinister as perhaps some of us jokesters were saying yesterday on Overtime that the dog ate the homework. The government didn't conduct the household employment survey, which is different than the non-farm payroll survey, of course. And household employment survey is from where we actually get the unemployment rate. So no survey, no data. But the parade of Fed speakers today, Thomas, that's what's been bothering this market, because without that data, they don't necessarily see there's enough information in front of them to go ahead and tell us that a cut is guaranteed next month. What a change we've seen here over the past week. We started off this week looking at the CME FedWatch tool with Jamal on Tuesday, and we were still looking at north of a 65% chance of a cut. Today, we find ourselves down to 47.4%. So treasury yields, they're up across the board. The dollar is down, which is perhaps the most surprising part of this. While gold and silver are hanging in there, the stock market not liking that cuts aren't coming because the data presumably is bad, perhaps. Thomas, this is not a good day for the Russell, which is unironically the leader to the downside if we're seeing recession fears percolate without the cuts coming.
Yeah, I mean, the Fed has spent quite a while saying we're data dependent. That's what motivates our decisions. And, you know, if they have no data, they're not as likely to make a decisive decision. So I think the market is, these FedWatch bets, they're correctly pricing in that uncertainty, because if they don't have data, then they could say, we've been flying in the blind here. It's not appropriate to make a cut at this time, so that's it.
That is all there is to it. Whether or not we get the cut in January, that still seems very much on the table, or one not to arrive next month. The next month, it's December 10th, so we are basically a month away from there. Plenty of time for the narrative to change, just like it's changed over the course of this week. But I'm filled with regret, Thomas, because yesterday, the day before, we were talking about how the Russell probably looked like a good opportunity to get some short delta exposure. I never pulled the trigger. Be feeling a lot better about today otherwise, because the S&P 500 getting wiped out. The Russell is where we're going to start, down 2.61%, 2395. That 2375 put that we were examining looks really good now, but alas, missed trade opportunity. The question is, what's the risk to reward here at this point in time? Because you did get your pullback, right? You're short a market that's now sitting at multi-month support. So if you weren't already with short deltas on, is this a great place to put them? I would argue no. If I was short, I might think about taking profit down here over the next 20 points. Perhaps even with the spike in vol, this is a place where people should be looking to fade the move, first blush.
Yeah, the Russell around 2390. I mean, we've had intraday lows there 2 times since October. They've been bought up each time. I mean, decisively back in October 10th, a little more so or less so November 7th, although we did rebound, but now we're back testing that level. I agree with you. If I was short here, I would take my profit. I'm not really inclined to get short right here on the Russell. And for the S&P 500, even though I got in that long trade yesterday, I think this, around the 50-day SMA is a decent place to take your chance back to the long side and hope that this trend resumes as it has done more than a few times before this year.
Yeah, right now we see that the S&P 500 is pulling back into that 21 50-day envelope, which has been that springboard so many times, just like it was last Friday, quite frankly. Maybe this is a market environment akin to where we were in August, if we're thinking about how the market saw one of those rebounds outside of that 21-day, 50-day envelope, only for a few sessions before dunking back below it. And ultimately, was that still a place to get long? Yes, because the market rallied there henceforth. So at 67.60, this is obviously sitting near the session lows right now. I don't know if there's enough to get off the train. I'm back to break even on my trade, basically, with the S&P, which is kind of a bummer. But we are looking at a market that's now in a place where if you weren't already short, where has been a good place to try to buy the dip? And we've seen the decimation of Fed cut odds here, Thomas. So at 26.1 IVR, the move is not to short the market today. It was to short it yesterday. But now with hindsight being our friend, this is probably a place where traders should be sniffing out little bottoming efforts on a 1 hour, on a 4 hour time frame to see if there's something that we can work with heading into the final trading day of the week. I'm not going to add anything here because this looks like a waterfall right now that's catching a falling knife. But a little bit of stability could go a long way here as we make our way into the second half of the session.
Yeah, I mean, hold off on buying for now is what I'm doing. When we get to that 50-day SMA, I'm going to look for a little bit of consolidation. If we get it, I'll pull the trigger, get long, maybe an MES there.
The broader market shakeout today, what's driving this move? And I think that's obviously one of the more important discussion points here. In recent sessions, tech has not been a significant participant one way or the other. It hasn't been the leader or the loser, but today is absolutely one of the losers, falling by nearly 4% here. Thomas, when you're looking at the state of the world, this is now a return for the semis back to the uptrend that's defined the rally from the lows back in April, just like it was last Friday. So do you trade it or do you fade it down here? Because this feels like this is the backbone of the entire everything for this market right now.
Yeah, we had Cisco. They did well. They're up, 4% right now, pretty much where it opened at, up 4%. The AI trade, per their earnings, it still looks like it's intact. I mean, I think this is a point where you buy SMH. Like you said, it's led the rally. This looks like a decent spot to buy technically. It's holding the trend as of right now. But you break under that, you risk getting a downside extension that could be a little quicker than what we're seeing right now.
We're not going to have an update for the broader S&P 500 earnings review until later this week. But going into the Cisco earnings report, the earnings are broadly speaking doing very well. Margins are going up. We're continuing to see growth. But the market has not been rewarding companies. If they've been beating, pat on the head. If they've been missing, severe punishment. What do you make of that dynamic right now? And I suppose I have another question to ask, but let's go with that first. What do you make of that dynamic right now where the market's not rewarding good results? Is that a warning sign and perhaps maybe one of the reasons why people would be less adamant about buying the dip here?
I think it speaks to some hesitancy in the market. We've had a big run up coming into these earnings seasons. So, these stocks that are up a lot, it makes sense. If you miss the earnings, even if you meet expectations, you're not getting rewarded. You not only have to beat, you have to beat, beyond what the market was expecting to impress investors. That does speak a little bit to some underlying fear or complacency. And I think, this is one of the things I've done earlier this year is, you buy the stocks that have been lagging and, you assume that, you get a bad earnings report or meeting expectations. You got a stock that's already punished a little bit and it's not going to get punished much more. It's going to probably even rebound. I've done that with Tesla a few times through the first half of the year. So it's all about, this broader market move is obviously tying into it. Some economic fear, the tariffs, they're still there. There's progress, maybe not enough, not fast enough. The government shutdown, a lot of people said, it's ended. Why is the market going down? That's because we were already priced in for it to get resolved. And now it's kind of the sell the news event where we see that happening time and time again. That's no surprise there. But I think, this is a place where you have to stay small and not take big shots. And then once we resume this trend, get back over some technical levels, that's where you can lever up a little bit more.
One thing, as much regret as I'm feeling today for not executing on that Russell trade, I'm feeling relief that I was patient and waited on the NASDAQ. Yesterday, we were saying here on the show, 25,800, 850. Once you can get through there, you have kind of this period where a market, October 30th, not cleared out. Then you finally do break below. November 5th, can't get through there. You can't get through there on the 12th yesterday. And so those positions looking for a move to a new all-time high by the end of the year were never executed because we never crossed the threshold. And so I guess that's one of the reasons why I like technicals, Thomas. It gives me a very clear, no reason to trade off of vibes. Let's wait for the number to show up. And if the number doesn't arrive, then we don't make the trade. So yeah, I could have gotten sucked into a worse position yesterday, right? Got long the NASDAQ, short the Russell. Those are still a wash. So net, I'm kind of in the same boat here had that occurred. Either way, though, I'm looking at where's a good place to then get long exposure because I was interested at 25,850. So I must love it at 25,000, which fair to say it's the 50-day moving average here and now, which over the past several months, we've seen a few tests of it. 1, 2, 3, 4. We haven't closed below it just yet. That might be a tell by the end of the day because this is still a waterfall. It's still very much catching a falling knife here. As volatility has perked up with its now 34.5 IVR. But any sign on a lower term time frame that we're getting a little bit of a break in that downside momentum, volatility starts to come off the board. This is the exact place where you'd want to try to call a low, even if it's something like a 0 DT or 1 DT. I'm certainly looking for it today to see if I could take a swing and make up some of the losses that have been incurred thanks to the pullback in stocks. Would you try to join that parade of people who are looking to see for maybe a market pickup by the end of the session?
Yeah, I mean, I've done the 0 days trying to call the low on these larger pullbacks before. It usually works out well. The nice thing with the shorter dated is you can stay pretty small and cap your risk. So I think it makes sense. I'm taking some pain in my portfolio today. I took on that long call spread in ES yesterday. So that's my biggest hurt right now on the screen. Yeah, I mean, I'll look for that too. I think I'll wait till after 1:30.
Yeah, that's my worst thing too. Yeah, MES just went from being a nice winner to now technically I'm only out $5 in the position, but that's still a complete wipeout from where we were just a few days ago.
Yeah, and the frustrating thing is this is a day where you'd expect some safe haven demand. You'd expect maybe gold, maybe even silver to be, helping you out here if you've been long those, and it's just not really working. The dollar's down. My portfolio, I'm really getting help nowhere today, so it's a little frustrating.
Gold and silver have joined in as well, which an hour or so ago, that wasn't necessarily the case, where gold was off by like 0.1% and silver was off by 0.5%. But that's changed over the course of the past hour. Now gold down 1.3, silver down 2.2. And even Bitcoin and Ethereum, I think that's one of the other, changes in the market behavior from say like 8 o'clock this morning. I'm having a cup of coffee here looking at the market before US equities open, and I see Bitcoin and Ethereum up. I see gold and silver treading water. And so, yeah, stocks were down, but okay, not everything is going down, not a big deal. Over the course of the day, the riskier stuff's getting jettisoned. And then the winners, those are being sold off perhaps to raise capital to cover losses elsewhere. So feeling a little unhinged to a certain degree, given how much it's spreading through the market. So definitely not a good day over here either. Curiously, though, the Dow Jones outperformance relative to the S&P and the NASDAQ this week continues. It's down on the day 1.34%, but it's not down nearly as much as the other big guys here. We're heading into a Friday, though, Thomas, where we may start seeing a little bit more government data coming out. Are you surprised with how quickly the government reopening enthusiasm has faded out of this market? I asked because Sunday on First Call, Nick, Illy, and I were talking about like, okay, everyone's going to get their enthusiasm. Then we're all going to sit around and go, oh, wait, but that data is going to get released and it's probably bad. And then, that's when reality sets in and whatever reality we have disappears. Do you think we've moved into that second half of the equation now?
I do, but I think it can be temporary. The government reopening, you could argue, priced in. Now we get... I think we're going to get some calendar schedules coming out later today or tomorrow on when this data is supposed to come out. I think that's more of a risk of getting the data now than it is that it'll be helpful. So, we get some bad numbers. Yeah, maybe the Fed rate cut bets come back up, but perhaps it's for bad reasons. So, you get risk off. I think that's what the market is trying to see right here. You get this data, it's bad. The Fed rate cuts, yes, they come back. That's good if it wasn't for the wrong reasons, which, is some economic hurt. And I think it was the CBO that said 11 billion is going to be shaved off GDP for this year. So, I mean, right away we can see, government spending, government being shut down, it cascades into other sectors of the economy. So, on net, this was a negative event for the economy at a time when we were already, having some warning signs.
Already facing headwinds otherwise, yes, indeed. Volatility here. Nick and I were discussing yesterday. Oh, look at the VIX curve. Look at the volatility futures curve. Beautiful contango. Yeah, it's only 3 points wide, front month to back month, but we can work with that. That changed quickly. VIX here sitting just off of session highs, peaked above 21 before taking a little bit of a breather here. This would be the highest close that we've seen in the VIX going back to October 17th. Actually, 2061. That was 2078. So we haven't seen vol, and that's kind of getting to the heart of everything that we do around here, Thomas. We haven't seen vol spike up into the 20s for long periods of time recently, especially this year, post the tariff tantrum in April. This little reprieve that we had in mid-October, couldn't tell you why it happened. I wasn't here. But every other time, Thomas, it hasn't been a period in which the market has seen volatility expand that much more beyond, say, 22 or 23 in the VIX. Not that we do any sort of technical analysis on the VIX. It's a non-stationary time series. That would be ridiculous. But if we think about where volatility is right now, is this enough for you to start dipping your toes in small to be a contrarian and fade today's pullback?
Yeah, a little bit. Like I said, I'm going to wait just a little bit here, but I still believe that this market, I'm not calling it top yet, is what I'm saying. So I'm going to be tactical and take my shots. I'm going to stay small. I'm going to stay probably short dated and express my view that way. But I'm just not ready to call the top yet. I think, the AI supernova, whatever you want to call it, it's still intact. I think the broader market fear is just dragging everything. And of course, the stocks that have gone up a lot are going to take some pain. So I'm not ready to call it quits.
Not ready to call it quits. If we were to just go out through the end of the week, look at the 1 day here and go to the lows from last week, which on the NQZ5 contract, that's going to give you a 24709.25. Producers can't stop distracting me. Thanks, James. 24,700. It's a 4-to-1 bet basically right now, right? Risking 4 to make 1 that we don't break through last week's lows prior to the close tomorrow. That's interesting. It's an 80% probability of profit. We're bouncing at the 50-day moving average. I'm going to hold on to that right now. That's not a huge winner, potentially, Thomas, but that's not exactly what we're going for here. Holding the low from last week into the end of the week seems like a modest bet, modest proposal that we could make. Let's keep going here, though, because we have about 35 minutes left in Futures Power Hour. This is one of the reasons why I think the markets got a little bit weaker as the morning went on, or as the afternoon went on, I should say, because at the top of the hour, we got another weak bond auction. 10s were middling yesterday. These 30s weren't good today either. There's no other way to put it. We can go over to ZB real quick, where position put on yesterday, obviously not doing that great. But this isn't a significant decline. It's still a 7.6 IVR. So for all the vol that's been pumped back into the equity market, I would note that it has not reappeared here in treasuries, Thomas. 16.2 in notes, 7 and change in ZB. But with respect to that auction, we see here that the auction comes in with a tail of 1 basis point, which is the second tail in a row and the largest tail since August, when it tailed by 2.1 basis points. So the bid to cover was 2.295 down from 2.382. So lower demand, bigger tail. It's like yesterday. It's not what you want to see. And so we do get at the top of the hour. If we look at that 5-minute candle, you'll see that there's a little bit more weakness here, and the bond market gives you a net. We're down another 7 ticks. ZN, likewise, imprint here as well, down from 112.27.5 to 112.25.5 ticks. So it's not helping today. Are you surprised, given the selling that we're seeing in the equity market, that bonds aren't getting a little bit more of a lift right now?
Yeah, because I got long ZB yesterday. I got long ZN last week, expecting that if there's some volatility, weakness in equity prices, that there'd be some haven demand. Perhaps bonds would get move up a little bit. That's not happening. So that's why I said my portfolio, it's taking pain pretty much everywhere. The only thing that is helping me a little bit is being short some lean hogs, and that's not doing much. So tail is a fail in the bond auction world, and it's not looking good. Yeah, that's what they say, right?
That's the first I'm hearing of it, but it's now going to be part of my lexicon moving forward.
Maybe I made it up. I'm wondering if the weakness in the auctions, is this coming from foreign demand? I mean, where's it coming from?
Let me see here.
Because you assume the government shut down.
No, this is domestic. Foreign demand was up. Indirects, 71% up from 64.5%, and the highest since October 2024. So the foreigners showed up for it. It's just the people domestically were like, we're not so interested. Why would we want to buy treasury bonds when we could buy more Palantir and NVIDIA, Thomas?
Right, yeah.
So Okay, so then what do we do here? Is any position management, right? With stocks, for MES, the position I'm swinging there, like it turned from a winner into nothing. And now I'm back to break even. So if I'm thinking about today, would I buy the dip and try to fade this move at these levels? And the answer is yes, then it's an MES position. I can just hold on to it. If it was a call spread or a short put spread, I may have a different change of tact in front of me because of time and duration being an issue. But right now, I'm not worried about an expiry tomorrow or next week with the MES position. So sitting tight there. With bonds, I think it's a similar thing. This has been chopping around for a few months. The whole idea here is that this is a market that should get a lift. The deterioration in Fed cut odds, probably not helping here the past few days, all things considered. But if the stock market's down and Fed cut odds start going back up, and it's because of those recession reasons, I mean, this is just a function of patience, I feel like. So I'm rather grateful that all things considered on a day like today when stocks are getting walloped, the bond stuff isn't doing terrible. ZN, ZB, it's off a bit, but it's nothing really to write home about. This isn't really much ado about anything right now in terms of positioning. If I was looking at this market here today, would I put the positions back on? Maybe not. Maybe I'd wait for a little bit lower because it looks like this is kind of keeling over now a little bit more. But that doesn't mean I don't think 112 is going to break. I just like to get a better price. If I can get long at 112 and 15 ticks, why get in at 112 and 30 ticks? So, yeah, I like the positions. They're worthwhile. They're cheap. The view hasn't changed whatsoever, and today's price action does not substantiate any change of behavior, in my view.
I've got 71 days out in ZB, 43 days out in ZN. So, yeah, I don't like the action today, but I'm fine keeping them on for now.
Exactly. The market's not going to go up in a straight line. Your trades are not going to always work out in a straight line. Like the silver one from last week, that's how often does that work out where you put something on and for 45 and 21 out, and then all of a sudden it hits in like 4 days. That's consider yourself lucky. You hit your profit target, you move on, you go to the next trade. With this, there's still 71 days like the 122, 124 call spread. That's just insurance so we can do things otherwise in case recession comes along. Right? There's nothing to do there. Hold on to it. That's my view. And same thing, 43 days. Maybe if this was 23 or 24 days, you could consider, downside momentum looks a little sharp right now. Do I really want to ride this out to the downside if momentum's keeling over what I'm going to be at 21, tomorrow or the next day? No, if I was at 22 DTE here, Thomas, I might just say, let's cut this. Let's roll it forward already. Let's not deal with another day of loss as we go through theta burn and decay. The market moved against us. Readjust now. It's not worth waiting. But at 43 and 71, I don't think there's anything to discuss here.
Yeah, I agree.
So we move on. Let's talk about our golden goose. I mentioned that there was a change in tone. I typically put together the titles about an hour beforehand, and then I make adjustments to them, Thomas, about 15 minutes before the show starts. So precious metals were surviving the day prior to this program beginning here. Of course, a lot has changed since we first started Futures Power Hour at the top of the hour. Gold is now off 1.34%, and we'll go down here to we'll go to 5-minute time frame. Yeah. You see that, Thomas? I updated my slide deck 5 minutes too early because all those gold losses came after I submitted them to the production team. Not Classic surviving mistake. So much now. Classic mistake. How dare I get things done on time? Why did gold and silver sell off here? Are we just raising capital right now to cover losses elsewhere? No, not immediately after that. I'm curious what the chat thinks. Maybe something came out and I missed it because I was getting ready for the show. But as far as I'm concerned, we're back to 41.61. I'm treating 61.9 IVR. Volatility coming off today is the interesting notation. Not so much the pullback, but the fact that vol has been eroding over the course of the day, even as prices have begun to swung a little bit more rapidly. Why? During a breakout, we want to see that contemporaneous relationship of expanding vol and price together. So that's not happening here. If that were to continue and we were to see IVRs dip even further, down from the 60s into the 50s, into the 40s, I would not be surprised if that's with a deeper, more significant setback in gold, Thomas. But the line in the sand for us, because we're not going to lose our minds over just a little pullback here. The goal was for a breakout above 40.55. If you're looking at a sideways move, 39.34 up to 40.55, you're talking about 120 points. 120 points on top of that, it's 170. So at 170, this double bottom is perhaps completed it. If we wanted to be a little bit more aggressive on that measurement, we go to the low from the 28th, that's 39.01. Now we're talking about 150 points. 150 points, Thomas, gets you to about 42.50. Where was the high today? 42.50. So now it looks like this is simply a bottoming pattern that completed the measured move. People are selling, and we're at support. The highs up here at 41.50 were resistance on this 4-hour time frame on the 10th and the 11th. This would be a place where people could start to pick up the baton again. So structurally, technically, this still looks very good. It is still a series of higher highs and higher lows in the breakout window.
Yeah, it looks decent here. I mean, to take a shot at it, I'm long a 1 ounce gold future. I'm going to stay long. It's still up a little bit, taking some hurt today, but yeah, technically, this looks like if you wanted to buy, this would be a place where if buyers are waiting for a pullback, you would pull the trigger around here.
Yeah, and just to visualize this a little bit more, right? If we were to take a look at the actual measured move using the Fibonacci retracement tool on the platform, there you go. There's your bottom. You hit your highs right in that neighborhood, and then you since get your pullback. Silver prices, we saw this here too in recent sessions. We talked about the measured move in the inverse head and shoulders pattern brings you to 52 or so. So instead, what do we get? We get our push into the high. Traders who were trapped in there from the 16th, they want to take profit. They want to get out. So what do? They sell. Here we are. There's our former high from the 20th. We're still in this series of higher highs and higher lows. You know what, Thomas? I have a silver position on right now at 40 days. I don't think that's enough. Why not add more? That's exactly what we're going to do here. So recent swing highs are $54.50. 54. Let's go out to the SIH6 contract first on the chart, just to make sure we get the levels right. That's about 55. We'll call it 55 even, just to eyeball it. So long 55, short 55 and a half, 2.5. Yeah, at these levels, yeah, we'll put a new silver position on, because it looks like this is the place where the market would start to find some level of support. Same thing in gold. It really just feels like a flush today, where we flushed out to the significant levels, Thomas. You can go back to the Russell here. We basically got rid of the government reopening bounce, so we're back down to levels where the market has found support before. Same thing in the S&P 500 or the NASDAQ. Gold and silver look no different. Down 2.42%. It is trying to catch a falling knife, but gold and silver have also been in bull mode. And when there have been these sharp pullbacks, even during the bull mode runs, they are pullbacks to be bought. So not going to abandon something that has worked so well repeatedly over the past year.
Yeah, I agree. I've been long on gold and silver all year. There's really not much of a reason for me to change how I'm operating right now. You know, I liked it last week. What's not to like at this price here?
I loved it at 52 last week. I liked it at 54 better yesterday, but it's still a reasonable trade in my view. Thomas, we were talking about copper recently, how this thing was staying range bound and looking at a potential short iron condor trade in here. And that is a position that we're still nursing on this end. Today, it's more chop, maybe a downside swing as people are raising capital off 1%. But this is still very much within the highs and lows that we've seen since the start of October. Do we keep trading this range bound? Because I see no reason not to.
Yeah, I'm still doing that. I have a short put spread. You know, I'm at 5, so I'm going to keep it on. I got 11 days in this, so I'm probably going to just roll this and stay in here. The copper story, I don't think it's changed much. You know, you get a Fed that maybe doesn't cut in December, but I think the supply and demand outlook for next year still holds. Avoiding a catastrophic, collapse in economic sentiment, I think copper will do fine. This is a buying opportunity for copper, in my opinion.
I just don't see a world in which, if Bessent's out there telling people that we're no longer tariffing certain goods because we can't grow them here, copper falls into that category of an item where in the short run, we can't get the mines up and going quickly, and we're going to be in a persistent supply demand deficit for the foreseeable future. It's been several months since we noted this, Thomas, but the U.S., relative to how much we produce compared to our consumption, I think it's about 800,000 tons per year we're in the hole. So will tariffs be re-implemented on copper anytime soon? I would take the under. And I guess that is one of the bets that we're making here, that this is a tariff-free area, because if we thought it was at risk, we wouldn't be saying short iron condor. But for the position that I have on that I still think is worthwhile, we're looking at the 465, 5.40 put and call respectively as the guts, short the guts, and then long the wings at 455 and 5.5. It is a 2.5 to 1 risk to reward, which is always nice in that 60% probability of profit neighborhood. That's kind of bread and butter. Copper is a bigger product, so the buying power is substantial if you're using a smaller account, but it is still something that has worked, in my view, has chopped around very much in this range, and we should bet on the range holding.
Yeah, so there's the copper gold ratio, which, people don't look at as much as gold silver ratio, things like that. But this ratio, if you look at it by a Z-score, and I just sent you this chart, Chris.
Someone just sent me this chart. Maybe I should pull it up on the screen here real quick.
Yeah, we are at, -2 standard deviation moves. So outside of the 98% of all contained, instances. I looked at the data, and what happens after you get below 1.75 negative standard deviations is you really get a rebound in copper over the next 45, 60 days. 60 days out after these 1.75 Z-score events, the average return out of 86 events that have happened since 1989, you get nearly a 10% average return on this. So, gold going up, you assume safe haven, and then you assume copper going down is economic uncertainty, things like that. That's not the way gold and silver or gold and copper are really reacting right now. But nonetheless, if you look back at the historic data, you do get those returns. But gold has went up so much, it's the denominator in this formula, that it's really just driven this ratio down even while copper goes up, just not as fast as gold. So some interesting behavior between the two assets right here.
How would you play that? Take that a step further. There's a world in which gold keeps going up where copper just outperforms it, and that's how the ratio normalizes. Would you just put on a long HG, short GC spread?
I mean, for me, I'm going to stay long gold and copper. But I think if you were expecting the ratio to, retrace back to its mean, that might be the way you play it.
Fascinating. So 5.05 here, 5.0570 here in copper, going sideways. Volatility, like everything else here today, jostling around. It's a 53.8, so a spike earlier has since been obviated. Nevertheless, it is still a high IVR product, and it's something that's on our radar. And one of the few things that's working today, Thomas, alongside energy stuff, because when you're expecting a market to stay range bound and it slinkies back and forth in a range, it tends to do well for those type of positions. We see here after yesterday's sell-off, we're having a bit of a rebound here today, although losing some steam in crude oil prices. U.S. production is going through the roof right now. We're basically sitting near all-time highs, Thomas. What did we learn from the EIA and the various energy agencies this week that reported on production figures now that we've made our way through Thursday?
Yeah, I mean, production is going up. We had the weekly inventory status report today. U.S. commercial crude inventories, excluding the SPR, they increased 5.2 million barrels from the previous week. So that brings us about 4% below the 5-year average for this time of year. Total motor gasoline inventories decreasing 4.7 million barrels. That's down 5% versus the 5-year average. And you got distillate fuels, which diesel decreased 600,000 barrels from last week. They're 9% below the 5-year average, which explains why HO, heating oil, is outperforming recently. It's really driving up the crack spread when you look at that product versus crude oil, perhaps keeping throughput in those refineries higher than where it should be if you had, more normalized diesel stocks. But OPEC also saying supply matching demand for next year. It looks like we are going to go into a surplus market sometime starting 2026. So, my view on crude oil here is I'm going to keep selling call spreads anytime this price pops here, and I think we stay below 60 for now.
Stay below 60. It's 58.72 in the CLZ 5 contract. And when we look out over time, this is not really a market that's in any semblance of contango or backwardation. 58 and change for everything, Thomas. When was the last time that we've seen a futures curve for crude this flat? Does that mean anything to you?
The prompt spread has really dropped off since early October. We were trading around 40 cents. Just 5% or 5 cents of backwardation right now. So really the futures between the current contract and the next contract indicating physical demand or a proxy for it is really showing us that, this market is starting to take into account this expected surplus that we're going into. Crack spread's still holding up pretty well though. So gasoline demand, diesel demand staying pretty solid. I think this weakness in the crude market is really going to come from the supply side.
Talk to me a bit about what's going on in natural gas here. It's another strong day, up 2.58%. It's the strongest it's been now since the middle of July. I was under the impression, Mr. Westwater, that warmer weather was coming around the corner. Of course, natural gas cares about nothing or no one. The heartless villain that it is. Why the rally here?
Yeah, I took off my my short put spread that I've had on for a couple weeks now today. And I think we were talking yesterday about me just rolling that up. I think I'm still going to get into that. Might wait for I might wait for early next week to get back in, because over the weekend a lot of things could change with the weather forecast, things like that. We are expecting warmer weather through the next week or so, but if you look at some of the longer term models that go out to December, we're showing this really I don't know what they call it, this system, this polar vortex that is potentially sweeping down as far as Louisiana, places like there, where the alligators are frozen in the ponds and things like that. That could be a possibility. Also, European gas really depressed right now as far as their inventory goes. So they're going to have to keep on getting U.S. exports. That's going to keep a lot of demand for U.S. product here and keep these prices pretty suspended. I'm looking for above 5 by the end of the month.
Above 5 by the end of the month. Well, that'd be a problem for me. At 43 DTE, we're starting to get close to the upside of this short iron condor position that I amended earlier in the week. It was initially a short put spread, but I wasn't convinced that was a good idea. Obviously, that was the right way to play it and not amend the position. So perhaps a lesson learned, maybe not. We see a rally here up into 5 would get us into the highs that we had from June and May. I'm effectively saying that we're not going to clear out those highs right now. But the way this market's been moving, in a week or two, that could be a different story. Heck, that could be a different story tomorrow.
Oh, yeah.
Thomas.
Yeah.
It is a 54.4 IVR, though. And I think ultimately, if I were thinking about this trade again today, would it be something I'd still be interested in? And I guess the answer is yes, but we'd have to do it with maybe a little bit different bounds here. Quite frankly, given the volatility and given where the 1 standard deviation move is, I might just put on a different position altogether. Thomas, we can go underneath the 50-day average. We can go below 4. This is NGF6. Let me just make sure the chart's correct. You know how it is with natural gas. Okay, so we can still go below 4 on selling puts, and we could sell calls up above 5.8. And still get a 60% probability of profit and risking less than 2 to make 1. There's a lot of vol. Yeah, I think I'm going to have to change this trade, Thomas. Yeah, you know what? That's going to be the plan here. Let's make an adjustment to this because the strikes are better. Let's make an adjustment to this. Where are you, natural gas? Let's get rid of you. Close position. See you later. Thanks for the 20 bones. Let's go back to this. 596. 389. Pull that in a little bit. Yeah, I like this risk to reward better, quite frankly. So hopefully we can get that switched out. The fact that we can sell calls up near 5.6, 5.8, 5.9, $6, and we could sell puts underneath $4 and still get a 2-to-1 risk to reward right now in the market. I will bet that the yearly highs and the yearly lows hold over the next few weeks. That's effectively the trade that you're making here.
Yeah, I like that. We would need a pretty cataclysmic move to get above those highs or those lows. So you got plenty of space to work with the volatility here. It gives you a lot to work with. You got room on both sides. Even if you get these moves that are big down one day, usually, natty gas, you can expect a retracement sometime within the next couple weeks to happen, especially as we go into this, colder months and there's more uncertainty around how weather is going to develop and, everything with Europe. So I like it. I might put that on myself, something very similar to that in 43 days out.
Yeah, and just looking at the prices of the options at the 1 standard deviation move, it seems like the puts are still more expensive than the calls. There's a lot to work with here. Natural gas, we can let the stock market do whatever it's doing and sort out this problem. 2.8% loss for the Russell down at 23.90 right now. Natural gas can sing its own song. Okay, so we've looked at natural gas, looked at crude. We do have a little bit of time here today because of the schedule here. Thomas, let's talk about grains. We haven't done so yet this week. Over the past few weeks, corn has been finding a bit of a bottom, and today it's rallying up into a fresh monthly high. When we take a look at wheat, it's not quite the rally that corn has had, but it's off the lows. And more importantly, it has a 127.1 IVR. That is what stands out to me about the grains right now, is that there's just a ton of volatility between the corn and the wheat. Soybeans are a different story. We're not going to necessarily touch on them, although they've been tearing a hole right now through the top right of the chart themselves. Talk to me about this. What's going on with WASD? Why are the grains all of a sudden so much stronger here as we make our way into November?
Well, I think it's a lot of to do with trade hopes. These trade deals, there's a lot of talk with helping out the farmers. So there's a lot of incentive from the U.S. administration to carve out a section where it really helps farmers in making these deals. And now that we're past harvest season, all the corn is gone if you're driving anywhere across the Midwest. The supply glut is already, it's been priced in. We sold off all the way into August and then, got a little bit upside. Now we're kind of accelerating higher. I think traders are banking on hope for next year, and now we are starting to price that in and hoping that these trade negotiations go well for U.S. farmers. More exports, of course, that would increase demand, help out the price there. Supply is still a problem. I mean, there's a lot of corn in the United States. A lot of it's being stored right now. So these are being driven by hopes of trade deals.
Hopes of trade deals that have yet to materialize, and yet hopes run abound. In corn, I go out to 43 days, just do this typical iron condor, Thomas, at 445.5. 455 is typically how people say that. We could see here, we'll go $30. Let's go $50 wide. on either end. Surely there's got to be something to do. And sure enough, it looks like there is.
Chris, the WASD is tomorrow. It usually comes out in the middle of the week. It'll come out tomorrow, the first one since before the government shut down, so September. So there could be some volatility coming. I think the trade estimates see some trimming to the corn supply due to a couple problems with the crop in a couple states that have to do with disease.
So it's not the greatest setup here. I'm remiss to say that it's not giving us a little bit more, but if we think about recent significant levels, Thomas, 410, and then we'll call it 470. If we wanted to trade right around there and try to get up a short iron condor position, you're going to get something in the neighborhood of a 3-to-1, around a 60% probability of profit, but something about this just doesn't feel good. If we're banking on hopes for trade deals to undo all of this, then I don't know how much this rally lasts, all things considered.
Yeah, trade deals could be a fickle thing. So, I mean, you're banking your hopes on what happens in a meeting room.
What about with wheat, though? Because this is a 127 IVR. Forget what's going on in corn. We're talking about double the volatility profile right now. Surely there's got to be something a little bit more to do here. And I'm just looking at what a simple, we wrap ourselves around the 1 standard deviation move. A lot of downside, not so much to the upside. Market's not really telling us that they think any rally will last in the grains. Is that your read on the situation ahead of tomorrow's WASD report?
Yeah, I don't think this rally really lasts. We got the little sell-off from this rally that happened. We're getting some consolidation. Selling a call spread against the recent high may be a good thing to do here. But again, you have the WASD tomorrow. You have to take that into consideration.
Taking into consideration short call spread in wheat futures, the 43 GTE, 570, 580. Where does that put you? It wouldn't mean you'd have to clear out the high here, Thomas, from early November. And you know what? That is something I'm willing to take a roll of the dice on. Not getting right after hours. Okay, so perhaps to put it into our pocket for tomorrow, 570, 580 short call spread. It gives you an 82% probability of profit and still getting a 3-to-1 risk to reward. So assuming that's valid tomorrow morning, the 127.1 IVR shall not be ignored. We took a brief reprieve off the path of the typical calendar here to talk grains ahead of WASD tomorrow, but we will discuss the dollar here to wrap up the show. And Thomas, I'm under the distinct impression that under normal circumstances, declining Fed cut odds and higher treasury yields should lead to a stronger US dollar. That's not what's on our charts today. Why is the dollar not enjoying life here in a risk-off world?
Yeah, I mean, I was going to get in a short euro position, long dollar yesterday. The trade didn't fill for me, so I'm grateful for that. But selling's a little unusual.
Sometimes you
here.
got to love that futures liquidity.
Yeah, you do.
Futures options liquidity, sometimes it helps.
It does. It doesn't make too much sense to me, I guess. I don't know. I'm going to stay away for right now from another currency trade or trying to put one on. The euro, it's now above its 921-day EMAs, coming for the 50-day SMA. I think once we get to the 50-day, I'll probably try, putting on that short call spread once again.
Dollar index is losing the uptrend off the low that we had in September and October. So this is obviously a warning sign. It's not bouncing at that 1 month, 50-day envelope like it has in the past. Of course, that story's not done being written yet because we're just into that zone here. But whatever rebound we saw is looking worse and worse. I head over to the euro futures and getting through 116.5 or so. The series of lower highs and lower lows remains, but you can see that we're going to turn a corner soon. The British pound looks like it's trying to turn a corner again against that August 1st swing low. And you go to a lower term time frame like the 4-hour, and you can see your semblance of a bottoming pattern coming together, and we're starting to poke through what would be a neckline. The only thing that's really not turning around is the yen, which it's the Japanese yen. We see here the Canadian dollar 48 IVR. It's pulling back here too, which makes me think this is less about the dollar and more about the fact that we have weak US data that is going to have knock-on effects. We'll see if we can get a second half of the day recovery here, though, in stocks. Tomorrow's roll day for me, Thomas. So unfortunately, it means that the short deltas in the euro and the pound going against me today. So not going to be able to roll at quite the place I want to. Is this a good place to even roll is the better question. I have to say no. So if I did this 2 days ago, and this is what I'm rounding out to, 2 days ago, if I had decided, you know what, it's 23 DTE, 24 DTE, right? It's Friday coming up. I'm just going to take my profits now and I'm going to go out to 40 something, 70 something and just forget about it. I would then be kind of stuck in a position perhaps where, okay, you know what, it's turning against me, but I've got time. Once I take these off, I don't want to short the pound if it's trading above the August swing low. If it's above 131.78, then I have no business shorting it again. Instead, it would make more sense to get long and look to the recent lows as something to sell puts against. So at 130, I would go out to 57 days and I would see my 130, 129 short put spread. And I'd start working around there. Maybe it's 130, 131 to get a better risk to reward. But that's really where my head's at now. It's not layering in a new dollar long position. The yen is a different story, but with the euro and the pound turning the corner, I'm more interested in potentially looking short the dollar now, given how the charts are shaking up.
Yeah, the long dollar trade, perhaps not positioning wise, but sentiment wise, it seemed like a few too many people were getting long dollars, myself included. And maybe that's not what's going to unfold here.
It's not dead, but it's certainly looking like it's on life support. I've been watching a lot of House recently, Thomas. We've been looking for a new show to watch, so we just started watching House as our
great show.
Nighttime. Traders should expect a good deal of medical references coming from me over the pipeline as I get more familiar with the jargon. Also, so interesting to see how what was acceptable in culture and media and television 20 years ago. You're like, oh yeah, this show probably wouldn't get made today.
It doesn't seem like it's 20 years old, but yeah.
No, and my wife and I were talking yesterday. She's like, I graduated from high school 20 years ago next year. That doesn't seem right. That doesn't seem right at all. Calendar for tomorrow. Will we have U.S. economic data? Probably not. If we don't, there are still that cavalcade of Fed speakers who are moving the markets here these days. I would point out that we have Schmid, Logan, and Bostic tomorrow. Logan is an alternate member of the Fed committee this year, but Schmid and Bostic, well, Bostic's retiring, and Bostic is not a voting member of the 2025 committee. Schmid, not a voting member of the well, he is. He's a Kansas City Fed president, so he is. So only one of these three. That's the point I'm getting at here. One of these three people are actually deciding to pull the lever for a rate cut in December. A lot of the folks who've been talking the past 2 days, they will not be the voting members for the December cut. Okay, those people are Powell, Williams, Barr, Bowman, Collins, Cook, Goolsbee, Jefferson, Miram, Musalem, Schmid, Waller. If those people aren't telling you that a cut's not coming, it's just noise. Tomorrow, one of them could be giving us some greater insight. So Schmid says cut's coming and the others two don't. Ignore the people who say it's not coming. Schmid is the voting member. We're done here, though, Thomas. My rambling at the end, crash landing of a show. That's fine. We make it up tomorrow. And we'll make it up on overtime today. Ilya, Dylan, and I are back at 4 Eastern, 3 Central, so be sure to tune in for then. Until then, good luck trading. Grab yourself a cup of coffee, some lunch. Dr. Jim's up next. Video on demand, though. So stick around, and we'll see you in a little while.
son, and you know what that means? Time for a little bit more Tasty Live. Well, with confirm and send, but like we always do, we take a look at the market. Let's see what's going on here today. Even the S&Ps down 19. They are red. All four indices are down. All four indices are down around a little over a quarter of a percentage point, third of a percentage point. I guess the Russell is the weakest of the group, down 1460. That's /RTY. NASDAQ down 99. And the Dow down 102. You can see the Dow has been the strongest of the group as of late, as the NASDAQ sells off a little bit. Even the S&Ps strong like the Dow, and the Russell the weakest of the group here, just over this little short period of time that we're looking at, last week or so. Volatility up by 7 cents, 1952, starting to percolate a little bit to the upside, ever so slightly. Nothing that I really see overall in the market itself. Bonds down 13, 117.07. Bitcoin, it gets to Kembe, that 105-ish area. Got only up to 104 and change. But every time Bitcoin gets a little bit of a bid, it definitely can track some sellers. It is up almost 1%, $885 today, but it is around $102 and change, as you can see. Middle to the lowest start of the range for the last week or so. Ethereum doing the same, up 26 cents. It too is a little bit better, faring a little bit better over the last week or so. Oil up 58 cents. Did you do something in oil yesterday? Did you buy a little bit of oil?
I got long on micro crude, MCL.
Yeah.
I got long at 58.60, so I'm up like 40, $50 on it. I probably put in like an order to close it for.
Nice. Got up to 59.15. It's 59.06 right now. It's about as high as it's been for the day.
I was looking at, I wanted to get into a crude position, but volatility just like hasn't really expanded there. So I was hoping we got like a day 2.
Yeah.
And then I could get
It's going to expand to the upside, son. That's the problem with.
We got all the geopolitical stuff. So
Yeah. That can help too. Gold up $20. Gold has been on a tear. You can see here from under 4,000 and flirting with 3,900. to 42 and change without a downtick, up 20 right now. Silver back up, son.
I got my SIL.
Oh, just now.
Yes.
Oh, all right. Beautiful. Yeah.
I don't like it because I'm still, it got up to 54.
It did get up to 54.4. It's 53.5. It did get under 53. Remember, it's a big movement. On silver, $1,000 per point. Big move. Net gas unchanged.
SIL is 100.
SIL is 100. Yeah, I'm talking about the larger future that I had up there. I apologize. For earnings, you had Costco. It's up around 5. Disney down around 4.
Cisco.
What's that?
Said Costco.
Oh, Cisco. Yes, I'm sorry. Cisco up around 5. Disney down around 4, and JD up around 50 cents. Since I mentioned Costco, it is one of the few stocks that looks like it's a little bit higher right now, by about $1.
Should be good for earnings. I think Cisco will probably be like a small win-loss scratch.
Because you're directionally wrong.
Yeah, Disney should be a good one. I did a crab trade on the downside, so I'm long the 115 out in December. I'm short 2 of the 110s. We're hovering right around 110, so those won't really hurt me all that much. So that should be a good one. And then JD, I did a short-term Zebra. I mean, that's one of the China names that really hasn't participated in much of the upside. I did a Zebra there, so I did little 2 contracts there, two lot.
Yeah, not bad. Yes.
So maybe $50, $100 on each, depending on where we open.
Beautiful.
Yeah.
All right, my son, let's go.
Cool. Confirm and send.
Confirm and send. Let's do it. Is it ever worth selling calls in VIX naked or as a spread?
I would not as naked positions. I don't think it's really ever worth that risk. I would certainly always define the risk, just because the tail is so huge, and the real problem with these is not just the risk, but the risk of a move against you. It's volatility of volatility. It explodes against you. And so not only are you short, and leaning into a big up move, but the volatility of those options is going to expand exponentially. So that's really your biggest risk, along with the expansion in buying power. So when volatility expands, buying power is going to expand. And so these positions can get very, very big, very, very quickly. And that's where a lot of people get caught. I think if you want to be short volatility, you could be long something like an SVXY, or sell like wide call spreads in like a UVXY or something like that has like kind of like a beta slippage to it, because the futures roll and those products go to zero. But again, you have to be able to withstand the pain of when it does expand. And the pain is going to be,
when those binary events happen, which, listen, that's why volatility is priced so expensively. They move and move exponentially. I mean, tens of points as opposed to just dollars of points. It goes from 19 to 29 to 49 if you get market really go down like that. I'm going to answer it a little bit differently. You're 100% correct. I would, as a standalone trade, I'm not interested in selling naked VIX calls because you mentioned the amount of skew that's there. It's a huge amount of call skew. We all know that if there's a lot of call skew, call spreads trade very cheaply. So you can use your money a lot more efficiently than selling very cheap. I'm talking about like dollar-wide spreads will be pennies. $5 wide spreads will be 50 cents. I mean, it's not a great product like that. I don't mind buying VIX futures and selling VIX calls against it, like that kind of spread, but you don't get any margin relief between the two. It's not a trade you could put on as one click. I'm going a little bit in the weeds here. Another thing that a lot of people don't understand when you look at VIX, I'll put up on the screen here, it's trading $18 right now, but if you're trading the D17 VIX options, they are tied to the VIX futures, which are trading 19.5, and you can tell it's around 19.5 because the at-the-money calls and puts are going to be trading approximately the same price. And you can see here that the 19 calls and 19 puts are almost the same price. 19.5 calls and the 19 puts are almost the same price here, which makes this VIX view. A lot of people think that it's trading $18 and they're looking at this at the money. They don't even know where the product is. So a long-winded answer to say it's probably not worth selling VIX call. Never something I would do, but you're open to do whatever you want to do.
Yes. And you can't buy long-term calls in VIX because of that dynamic of where volatility is trading. Like it's not.
You go to the 18 puts with it being around 19.5. It's $1. You go to you can go to the 28 calls. They're $1. From 19. I mean, it's there's a reason why there's all that call skew.
Yes.
Next question, please.
Cool. So the other day, I think it was Tony who made a comment about the indicator Nick had on his charts. Okay, essentially Tony said indicators weren't helpful to him. Don't you think with the advancing in technology, indicators are more reliable?
I think they're better. I don't know. I mean, I don't know.
Technology-wise, they're better.
Technology-wise,
you could do a lot more.
You could do a lot more with them. You get a lot granular with them. You can look at the data a lot better. In years past, the data wouldn't be as clean as it is today. You'd get all these little blips in them and stuff. So I think technology has made those indicators better. Now, if you give them some worth, then I guess the next thing you would extrapolate out is say that the indicators are more reliable. But I don't think they were reliable to begin with. So just because the data is cleaner and it's better, I don't think it's. I'm sorry, I'm not a. If indicators worked, we would all have been using them on the.
I know that's the whole, and it's always what I say to people. It's like if there was some.
Do you agree with that? I mean, or
no. I think everything is context, and if it helps to build a story, or if you like visually how it looks and it helps you make a decision on whatever your decision is, I think that's great. But ultimately, if there was something that like I get the emails all the time of like, I found this like free money trade or this, like where is the risk on this trade? And, if you think you just found something while you're poking around somewhere,
probably didn't find.
I promise you, there are a lot. There's technology and firms and teams that are trying to arb out fractions of a penny. You're not finding a free $100 bill on the ground. You know, like there's
especially on what you're looking at here is a 50-50 shot on, or 52-48 if you want to play it.
I just mean in general of like people trying to find things where there's no risk. Like I found this no risk trade.
You know what? I like those people. And I'll tell you why.
Because they're looking for stuff.
They're looking for
they're
stuff.
interested.
And they're doing a complex option strategy, which is not a complex thing. It's just more than one leg to it. And they're finding something that they think they see. I like that. Yeah. The person who has an indicator that says this is, right, 80, 90% of the time, I think has gone into the weeds a little too deep and is found something that's really not there. Yeah. So that's the one that I have a harder issue with, getting behind.
Yes.
Next question, please. Sorry.
That was good.
On Wednesday, the government said it probably won't release October CPI or employment. I was surprised that markets didn't move when the announcement was made. Doesn't the Fed need that data to decide on interest rates?
Yeah, I mean, we discussed this morning with Vanetta, but even it's not something that I look at all the time, but the Fed Watch tool has kind of taken a little bit of the juice out of the rate cut probabilities into December. So, yes, that did happen. Ultimately, I'm sure there's other data points that they're going to use. There's other things that I don't think these are just the only things that they're looking at. But yeah, I mean, it has come out of the rate projections. Even bonds today, have come down, which is telling you rates are going up.
Right, small. Yeah, 117.08.
No, but I mean, it's markets are moving on this. So you saw this, you wrote this email. Markets have moved on this.
Let me use the person who wrote the last email's logic here. So if these numbers didn't come out and the market didn't move much, does that mean the numbers are valuable at all, ever?
Or I love when people say the market was wrong.
I mean, the market's never wrong. I mean, it's never wrong because it is what it is.
Yes.
At that moment, and you have penny-wide markets or one-tick-wide markets, you could do whatever you want. Market's never wrong. Yeah. Things move, but the market's never wrong. But I'm going to go back to, so if it didn't come out and the market didn't move, are those numbers, they always get revised anyway.
Yeah.
I mean, it's such a gray area. Again, I think it's, some things are good to know. Some things make you money. I think this is a good to know thing.
Yes.
Not necessarily a moneymaker. Next one, please.
Do I take off that silver here?
What's that?
I take off that silver.
Oh, you sold it at 53.05, 53.55, 53.505, and you bought it back at 53.285. Very good job out of you.
$200.
Very good job out of you.
Not bad.
Not bad. Gold actually up $12 now at the.
Yeah, I need gold a little bit. I'm right here. This is kind of where my spot is. My net. Because I scalped.
Understood.
A little bit.
I think this is you.
Why does anyone care about the Dow anymore?
Because
it's at new highs.
Yeah, it's new highs. Yeah. Well, yeah, that's why they care about it.
Yeah.
They like to talk about the upside, not the downside or anything else like that.
Yeah.
Pedigree, I guess it has a long-standing name to it.
Yeah.
But you're right. I think the more relevant market is the NASDAQ market these days. The Dow 30 stocks, I don't think really encompasses what the market is. I guess you could say what are the large
Just legacy.
Cap?
It's legacy. I mean, it's the one that has been around the longest, and it's not as volatile typically. Is the other thing is that tech and NASDAQ is thought of as that high vol, high beta index, even though I would consider it like the market. Like that is what the world is right now is tech.
I would agree.
And so I think that's part of it too.
I would agree. I think it's legacy. I think that's what it comes down to. I think it gets a pass just because it's been around for so long.
Yeah.
I agree. I think that's the last one, right?
Yes.
Very good. Very good. You know what? We're going to take a quick 90-second break. Let's just take a look at the market here because we got trades from the research team next. We'll really look at the market before the market opens. Even the S&P is down 27, trading at or near their lows. NASDAQ 138, Russell down 16, the Dow down 120, and volatility up 15 cents to 1960. Bonds are down 11, which Nick just talked about. Bitcoin up around 800, mid-range for the day. Oil up 47 cents. You've been trading a lot of gold and silver. Gold and silver have both been moving, nicely. Bigly. Gold had a $70 move so far. It's about mid-range. Silver, on the other hand, has had a much bigger move. It's been the more volatile of the two. It's had almost $1.50 move. It's trading at the lower end of its range. We're going to take a quick 90-second break and come back. We've got a couple of researchers for you. Trades from the research team next. Tasty Live. We are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with trades from the research team. Who is our first researcher? You ever seen a shark in the wild? Shark?
I've ever seen a shark in the wild?
Yeah, like in the ocean.
I mean,
you're supposed to punch it in the nose.
Yeah.
Yeah, good luck.
I've never gotten close to one.
Look at Kai over here. That's what they say. They teach you that. Punch it in the nose.
No, seriously, have you ever seen a shark?
I've seen it in the ocean.
You have seen it
like
in the
the
ocean?
fin in the ocean.
Oh, you have?
Because it's like sticks out of the water.
Yeah.
I've never gotten near one because that would
You've
be
never
a
been like
bad
in a
time.
cage in one or anything like that? You never done that? Your parents loved you enough that they didn't put you in one of those?
Exactly, yeah.
That's awesome.
Yeah.
That's
My dad realized there's other ways of turning me into a man besides putting me next to a shark. Where the
you went in the cage next to a to a shark in
that was
Mexico.
fun.
Yeah, yeah.
It would be fun though.
Caught one too. They are. You're not a good representation of a shark. Let me put it to you that way. You're a kind, loving human being. You know what I mean? Like a shark is a mean SOB. It's almost like it's
No, sharks are misunderstood. All right.
Yeah, that's what they say. But when you see a shark, even if you're trying to take a hook out of its mouth, they're not misunderstood.
No.
They have an agenda, and they are making it known. There's no gray area with a shark. A shark knows.
Although at some point, some would say, like, Gad, if you provoke me, then I have an agenda.
Yes.
Back
Yeah, you don't want to.
No, I'm not gonna
that's not a thing.
I'm not gonna
That's not a
provoke you.
He's a black belt in jiu-jitsu. Don't mess with him.
Absolutely. There's a lot of things you don't know, Tony.
I bet. Karate man bleed on the inside, don't bleed on the outside.
Yeah, exactly.
I do have, before you get to your trade, and I know obviously your research team, you're instrumental on all the stuff that we present here 2-3 times a day. So thank you for that. On the 0 days, which we do on Thursdays, I have a buddy of mine, not a buddy of mine, person who writes into me, just like anybody can write into me. Tony here says he would like to take a look at 0-day SPX trades. We look at them at the beginning of the days. We've done the research where it's better to put them on the beginning of the days, take them off, more towards the middle of the day. Middle of the day on to the end of the day seems to have a lot more volatility to the P&L to them. Doesn't mean it's not a good trade or a profitable trade, but it has a lot more volatility to them. How about the last half hour of the day? Is there something where we can go around that 20-ish delta and go, $10, $15, $20 wide? So maybe we can take a look at the end of the day too. Got our beginning of the day kind of metric. Maybe we get our end of the day metric.
Collecting enough premium.
So again, is there enough premiums? Another juice for the squeeze, as we had an email earlier this week asking us. We manage these things. If you're selling something, let's say at $3, where we've been doing them $3.50, something like that, and you're taking them off for 20, 30%, 50% if you got a home run type trade, we make that same
You're going to have less premium, less theta.
Yeah.
Off the top of your head, that's what you think.
Right.
That'd be an interesting.
But let's see if you get that same. Let's say we're trying to make a buck on this $3 trade.
I see. Okay.
Can we make that buck or that 80 cents in that half an hour at the end of the day, just as nicely on a win-loss ratio?
All right. Okay.
All right. Cool.
Research request live on the show.
That's right. Why
There
not?
you go.
Why not? All right. What do you got for us? What's your? Otherwise, I forget to send it to you, and then I get in trouble. Bullish and MU.
MU.
Oh
man. A skewed iron condor, a poor man's jade lizard, multiple
There
you
names,
go.
multiple names for this strategy.
Man.
So it ends up being bullish because you are $20 wide on the put side and $10 wide on the call side. It's actually down $3 pre-market, so it's a perfect time to if you want to.
I mean, it is about $10 off its all-time highs,
which is a 3x.
All-time lows this year was $60-ish dollars. Its all-time high was $250-ish dollars. This is not like.
Look, we discussed in the chat, okay, that the true contrarian thinks the market goes up forever. Okay.
Oh, okay. So, there you go. Yeah. There you go. All right. That's what's true. 6 of one, half dozen of another.
No.
Depends how you look at it. What do you think about this, son?
I'm just trying something more interesting than a basic iron contour.
Understood.
Yeah, I like it. I like it. I already have a position on. If I didn't have a position on, this would be. I mean, this is in the wheelhouse. And even though you have more risk on the downside, I mean, your delta on this is very minimal.
Yeah,
like it's not a huge
$5 or $6.
Yes, I know you mentioned it's like the market always goes up, like that's a contrarian lean. This is neutral, slightly bullish. So I'm with you. I have a little bit of short delta here, and that's my position. So and it's a big position. It's
the crash is going to hit me pretty hard.
It's Micron through the years has always been one of those stocks where I look back and I'm like, this stock every year kills me. Every year it costs me money. It's just one of those like.
It does me too.
And I think everybody has those, and and Micron is that for me. So I won't be adding to the position, but if yours works, mine will work.
Okay.
So we're on the same team.
I'll take that.
Mm-hmm. Beautiful. Good job out of you. Who is our next researcher? That smooth talking man, Gad. How are you, my friend?
I'm good. I'm happy.
I got a question for you.
Okay.
Is your name spelled G-A-D or G-H-A-D?
G-A-D.
G-A-D?
Exactly. But sometimes it depends to who I'm talking to, but my legal name is G-A-D. But I'm a social media or social life,
Oh.
It's G-H-A-D-Y.
We'll take this offline, and I'll figure out why you're the Slim Gaddy instead of Slim Shady. What do you got for us?
I got Boeing.
Boeing.
Yeah,
all right.
Boeing.
I haven't looked at Boeing in quite some time. Ooh.
We got long yesterday. What are you thinking here?
It's unchanged, maybe down 30, 40 cents.
Yeah, I'm doing a calendar spread in Boeing, selling December, buying January.
I've got this sort of. I have a diagonal spread, but same thinking up to 210. I like it. I mean, the stock has sold off 20, 30 handles from the top. Volatility super low.
Yeah. I think it's one that I'd be looking to kind of Nike it. You know what I mean? Like kind of buying the dip or trying to see that, it has a decent correlation to the overall market. 0.68, relatively high. I think
if the strike, the strike remains there, you'll be correcting like 90 cents a day.
Mm-hmm. Especially if you're a little bit bearish on the overall market at market highs, if that's what you are, and you're looking for something to buy to give yourself a little beta weighted delta, maybe won't go down as much as the rest of the market. This would be something I would look for a strategic play. Yeah, sure.
I like it. If I didn't have one on, I would definitely be. I mean, this is these stocks where we've had a 10, 15, 20% pullback have been the ones that I've been looking for to get some of that long delta. And on the flip side, some of the stocks that haven't had any sort of downside, like Apple and IBM, those are the ones that I've been trying to take a little bit of a downside directional opinion on. And so I like it.
Good.
All right. Very good. Very good. Next researcher, please.
I got long another.
You got long the micro NASDAQ. Yes. Very nice.
I screwed up your dance, I thought
you screwed up my dance. You screwed up his music. I mean, show some respect to Kai. What's up, my man?
Doing great. How are you?
That's it. You got a very short applause. Very short. Very short. That's all you warrant right now.
That's fine. I was thinking about that. Whoever the guy bring up the last 30 minutes study, the zero DTE study. I was thinking about when does the zero DTE becomes too long for investors?
Right.
We're gonna have minute binary, 10 minutes. They had the Bitcoin perpetuals that I think crypto.com maybe one of them binary like 15 minutes. So will Bitcoin be up from the price right now in the next 15 minutes? Like 15 minutes from now, binary.
Never thought I'd see the day.
I think these ideas are going to be good for CBOE. They're probably going to launch the intraday.
Oh yeah.
Option expiration cycle, right?
For sure.
Every hour.
I bet it'll be like up down though, like a higher lower type bet, like 50-50, where you can only take ones, like no extrinsic value to it. Like, will we be above 6,900? That sort of thing at a given time.
Two days ago, I saw a tweet. There's a guy post some interesting trade ideas from what is that? Polymarket or
Polymarket?
Polymarket. He said, I'm going to bet $2,000 on the Trump is not going to give out the $2,000 bill. If he lose, he will get $2,000 from the government. If he win, he makes $18,000. So he never lose any money.
Oh, that's good. Yeah, I mean,
wow.
Think about it.
Yeah.
If you're willing to.
But if you're betting the 2,000, you're probably outside of the stimmy bracket. So now
he's gonna get double whammy.
See, that's the arb there. You think it's a free money trade, but then you're like, oh shoot,
I don't get the
I'm
money.
not getting the stimmy,
right.
And now I'm out $2,000.
Right.
So now you're in the hole. So you got to be careful there. You got to figure that out. You got to price in the risk of where the line is drawn for the stimmy.
Yeah, just for some fun.
Yeah.
All right, my friend, what do you got for us?
All right, I'm going to do the Meta Ironfly, slightly bullish. So the delta Y is a little bit more aggressive because like a $40, $35 to the upside, but I moved to the change the strategy to an Ironfly, so kind of reduce the risk in certain perspective.
Are you doing so you're doing put because you could do this like this is the same as a butterfly, so you could buy
butterflies too, yeah.
Butterfly. If you might get a little bit better spreads just because you're not selling the in the money put. But same thing, put call parity. But I like this. I'm long Meta. Meta is a freaking dog.
Meta's a dog.
Got killed after earnings.
Yeah, it got killed after earnings. It's almost where it started the year, which it's unheard of in this market to say a stock is almost where it started the year, trading 609 or so. I think it started the year.
Especially as one of the Max 7.
Yeah, around 590-ish or something like that. So, yes. You might have to take it out of the Max 7 if it keeps acting like this. Right?
Yeah. I'm in on all.
What do you think about this?
I'm in on all of these, which I don't know if the people out there will like that, that we're all on the same side here. So, I mean, I have all these positions, so I'm with you guys.
Okay.
Let's hope we're right. I mean, this is all of us in the same boat together.
Mm-hmm.
Spooky.
Very nice. Very nice.
I like it. Yeah, I think Meta is another one where it's if you've been trying to get long something.
I like thinking Boeing, Meta. I mean, Meta's another one that, its correlation you would think is a lot higher than Boeing's, right? Because it's one of the Max 7, as you said.
Yeah.
But it's like 0.3 versus 0.68 to Boeing, just because all year long it has not participated. They're really looking at a yearly correlation here. So that's why. All right. Good job out of you. Good job out of the team. We're going to take a quick 90-second break. We'll come back. We got more Tasty Live immediately following these messages. With the opening bell, we're back in 90 seconds, Tasty Live. Beautiful. Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live at the top of the hour here. Pardon me. Even the S&P's up 44. It's about as much movement as we've had in the market. Two-sided action that we've seen in quite some time. NASDAQ up 220 and change. Down 220 and change. NASDAQ down 24. Dow down 130. Volatility up 13 cents at 19.58.
Yeah.
Gold Down 13, about 20-some dollars, $17 off its lows, well off its highs by about $50. Bitcoin catches a small little bit over 103 to up 1,300.
Yeah, this has been a great market to trade. The last couple months have been, if you're taking stuff off,
just a trader. If you're looking for opportunities, if you're an opportunist, SOB
to both directions.
Yes,
I mean it's been awesome. And I tell people at every event, I'm like, you're gonna miss this volatility because there's gonna be,
it's not really that elevated. I mean, but at least it's 19 and change.
But this is nirvana. Yeah. Like 19 to 22 range is just perfect. Yep. You don't want it to be super, super high because that's when you have, stuff moving too much. You can't, you put on the risk and you get those realized days. When you got a vol that's in, let's say 18 to 22, that's where stuff moves in both directions. You got stuff going, down a couple points to scratching on the day, and you could take stuff off intraday or, after a couple days. When vol gets to 13, 14, you're going to be like, this stinks. Like, I can't do this.
I miss it. I miss it real bad.
Like, this is, I hope volatility stays like this for the foreseeable future.
Totally agree.
Spikes in vol to, low 20s, come back down. Spike to low 20s, come back down. It's beautiful. Perfect.
Totally agree, my son. Totally agree.
Market measure.
0 days. Let's do it. Even the S&P's down 47, 48.
Flexing. You've been flexing.
They've been flexing.
You've been flexing. You look good, Pops.
Thank you. Appreciate it.
Very svelte.
Thank you. Well, thank you. I didn't want to look like some of the other people when I walk out. So I wanted to walk out.
Yeah, you wanted to.
I didn't want to walk out dragging anything.
You wanted to walk out quickly, not slowly.
I had to.
Yeah, didn't want to get stuck here.
Yes. I didn't want my parting picture to be a limp.
Yeah.
Yes. I didn't want to limp out.
A real life bobblehead.
Yeah. Yes, a real life bobblehead. Even the S&P down 48.
Oh.
Volatility up 15 cents.
Oh.
All right, let's go. 0 day.
Do it. 0 day. Flexing 0 day management. So in recent years, 0 day options have seen an explosion in popularity with traders and institutions, resulting in tight liquid markets that are perfect for active trade management. We have had a lot of fun with these SPX trades.
Yes, we have.
They've been good overall. Might even look at one here after the show. After we do this.
Okay.
Because we didn't do one this morning.
No.
We're going to wait.
No.
Delta neutral strategies give traders the ability to look for opportunities in attractive markets such as 0 day without committing to a directional assumption. So we're talking like iron condor type setups here. Typically, such short premium positions will profit if the underlying moves mostly sideways, but when the intraday action goes both ways, the two sides may have each profited at different times. So we're talking about kind of looking at management here based on each of these spreads. So not just looking at the trade as a whole, which is what we typically do.
Yes.
We're going to see if there's some sort of edge of, legging out of the puts, legging out of the call side at X amount of profit and see what that kind of looks like here. So we're going to be changing the approach, looking at profit targets here. Using over 2.5 years of data, we're looking at every 10 minutes, this data being collected. We're considering selling a 0 day iron condor at 9 a.m. Chicago time. We're doing that in a 5-minute window here, plus or minus 5 minutes each day, using a variety of short and long strikes. However, these are conceived or looked at as separate put and call verticals. So we're talking about closing the winning sides. So today, if you put one on in the morning, you'd be closing the call side.
That's correct.
I just bought in the risk on Oklo.
Oh, very nice.
Is that coming down? We did that wide ratio. That was a fast market trade.
Down $4.45.
I have that on for a small debit net. So I have that. I own that butterfly for about a 60-cent debit, but you got 30 some odd days. So it's a cheapie.
It's not moving.
It's not going to move. I put that order in at $2. It's a round number. The markets are 70 cents wide.
Yeah.
I just said, you know what?
I told you when you traded that you have to watch out in there because those markets are quite wide again.
Yeah, but you've had a little bit of a downside move. Vol has come in a little bit. You had earnings. That helps.
Ivy rank of 53 in there. It's
So now I have a 40-point range.
70s, yeah.
That I have for basically free. It's a shot trade. I could have just closed the trade for 50-cent winner. I'm gonna leave it on and give myself the lotto ticket.
Yeah, you've definitely got a lot of movement in there, so you're fine.
You get one day where it's up $20, and
Yes.
that's going to be trading at $2, $3.
Yep.
All right, so we're looking at winning sides, closing them when they got to certain profit targets. So we're looking at 20, 35, and 50% of the max profit. All these trades were assumed to exercise at the mid price, which is sort of generous because a lot of trades you have to move them, but it's as good as we can do, obviously. But we're going to look at managing these trades and what they look like here in the next couple slides.
Let's do it.
So,
a gesundheit.
Thank you. Short strikes, 30 delta, $10 wide. The put side, $5 wide on the call side. So this leans a little bit long. You'd expect this to be a little bit better than being neutral because the market has gone up in the last 2 years. That's why all the put studies have looked good. And so here we're looking at managing the trades separately. So closing at 25% of the max profit. So that's each spread, not the trade as a whole. You're looking at each spread, whatever you sold it for, 20% of that. You can see the win rates across the board here, 25, 35, and 50%. Your win rate goes down as you have to hold the trade longer. That's not a shock because you're looking for higher profit potentials. You will see, however, and this is pretty intuitive, your average P&L, daily P&L is going to be negative because you're taking, a lot of these winning trades are put sides, which means that your call is being tested. And so a lot of these trades where you're taking off the put side, you're taking profits and there's profits left, and those will end up being out of the money because over the last 2 years, the market's gone up. So you're really just losing on the call spread on all these trades. And so as you get to a higher profit potential, your trades get better. And that's because you're selling a meatier put spread, but you're also taking more profit. And in hindsight, you're looking at a market that has done nothing but go straight up. And so, all these are going to look the same. Your CVAR here is relatively flat across the board because these are tight, defined risk positions. But the key here is to understand that anything where you're managing trades on both sides in a roughly one-sided market over the last 2 years.
Yeah, you can't argue that it hasn't been a one-sided market when we're a skosh off of all-time highs. Definitely been a one-sided market.
It's going to skew the results. Yeah. And so here, the point being here is like there's not really much to be had from targeting profits on either side. You got to look at the trade as a whole.
Yes.
And over the data set, it skews very bullish. And so you got to kind of take this with a grain of salt. The next studies that we do are going to be on iron condors, a little bit wider, managed at much less aggressive profit targets. And I think that's going to be the way that has worked in hindsight over the just YOLOing upside, short puts every single time.
Perfect. Good job.
Next slide here. So getting into the short strikes at 20 delta, we're looking at $10 wides on both sides. So $10 wide put spread, $10 wide call spread. So this is your cookie cutter 20 delta iron condor. Again, you can see the data here is kind of skewed. You have your win percentage is what you would expect. When you are managing at higher profit potentials, nothing really changes here. But again, you have to keep in mind that the call spread has a lot more risk now. That's why these numbers are basically the same at 20% and 50% versus the last slide where you only had $5 in risk on the call side, where it gets better. And that it gets better because the market went up.
That's correct.
And so here, obviously managing at a higher profit potential is going to also reduce your daily CVAR. And that's because you're taking more profits on these and specifically more profits on the put side. It basically works out 1-to-1. Like that 70-cent difference in CVAR is because you're taking 70 cents more profit on the put side. Or probably maybe like 40
cents. You're booking a profit, right.
Yeah, you're booking a 50% profit. You sell it at $1.50, you're taking 75 cents versus the 20% where you're taking 30 cents. That's your difference.
Love it.
Next slide here.
You've gone through these very, very nicely. You've explained them well. You're prepared. I
I do look at the slides and I do prepare these things prior.
You're doing an excellent job. I just wanted to quote you.
I'm gonna scoopy one more of those Nasdaqs. We'll let one run just for
Nasdaq only down 180 and change.
I told you it's overdone.
That's what they usually say. As foretold.
That's it.
As foretold.
Did you get filled on that? I didn't get. Did I get low dinged?
No, you didn't. You didn't get filled.
Oh, I didn't get filled.
No, you were out at 39.
Oh my God! They just moved 10 handles.
They are dynamic, and
they're moving all over the place.
Yes, because they're back to 30. They're back to, well, you sold them at 33. They're back to 30 right now.
I had them in at 40.
Yep. So you're completely flat now, right?
I have one left.
Oh, one more.
A little, as the kids would say, a little runner.
A runner.
A little runner.
A little
runner.
runner.
You let that one run.
You just got 20 handles, so that's pretty good.
Yeah, well,
good little
if we get a little bit of, if we get back below 400, we'll look at something there.
All right,
Another 40, 50 handles to the downside. Last one here. Let's do it.
I'm ready.
So here we're looking at the 20 delta strikes with $20 wide put spread and a $20 wide call spread. As you'll see throughout all of these, this one you have further out of the money risk in terms of you're collecting a lot more premium on this trade. So your risk on the upside is a lot further out of the money, which skews the P&L values again here. This is why this one is better than the other two, is because you're selling a bigger spread on both sides. And you'll see all the probabilities and the win rates, they play out as you would expect. It's just that you're realizing a lot of the tail risk here because of how much upside movement we've had here. This has not been a choppy market in the last 2-year data set. So here you can see average daily P&L, and we're talking about like a couple dollars. You're basically flat on this. And you have risk on both sides of the market into what has been just a straight up market. Imagine if you get a little sideways. How nice this would be.
Heaven forbid.
Heaven forbid. It'd be scary. A couple takeaways.
Sure.
We're very early. I went through these two.
You went through them. You went through them.
There's not a lot to, I mean, like, I wish there was like, that's why I need the iron condors managed at smaller profit targets. Cause these are like, it's been all straight up. We did the puts. The puts were like, they're amazing. Obviously.
Yes.
You put that risk on every day. It's
every day, and twice on Sundays, even though we're not open on Sunday.
When it comes to option trading, opening a position is only the beginning. That is profound. I will have to talk to the people about some of the ChatGPT that's been used on the summary there. That sounds like a little bit of vacuum AI.
Does it bark at you?
Yeah, a little bit.
A little bit.
The rest of it is okay. Managing the two sides of the zero-day iron condor as separate verticals was not an overall rewarding approach over the past 2 years, thanks to the persistent upward movement in the S&P 500, the SPX. This is, kind of the problem with zero-day data right now is that the data set just isn't large enough. You have to, take that with a grain of salt with anything that you look at with zero-day stuff because there just isn't, there's not enough data and there's not enough of both directions to really pull a huge conclusion out of it.
You're 100% correct.
So profits from days with significant, doing so profits from days with significant two-sided intraday action, however, such as we have seen recently. So doing it when you have two-sided action, it has been better. Those are the...
But you don't know when you're going to have two-sided action. I mean, you can't cherry pick that though.
Yes. In these cases, it was important to let a larger portion of the credit come in from the winning side than we often do with treating these as one trade. So again, the higher profits with more long delta has been the best way to trade.
It's been a good thing to do.
Using different widths in two directions allows for trading on a mild directional assumption. So, doing the $10 wide, $5 wide on the call side, but exposes one to the larger of the two downsides. So there's always a trade-off to everything. Flexibility from the liquidity of zero-day markets means that you can profit from any kind of action with the right combination of strategy and mechanics. I mean, these have been, even in a persistent bull market and you're two-sided, on these trades, there was no big pain. I mean, you're pretty on an average basis. It was a zero sum for the most part. And I say that with the fact that the market has gone straight up.
Market has gone straight up.
You get some chop and you're golden. The question is, will we ever?
Some chop today for the first time. They are only down 29. I say only down 29 because they were about 30 handles. Excuse me. 30 handles lower just a moment ago. NASDAQ down 155. They were almost 150 handles lower just a moment ago. Russell down 20. Dow down 100. Volatility completely unchanged at 1945. It's now 1942, down small. Bonds down 16 ticks. They haven't really moved. Bitcoin 103, trying to catch a bid, up 1,400. Ethereum up 25. Bitcoin up on a percentage basis a lot more than Ethereum, almost twice as much. Oil up 55 cents. Gold futures down 5. GLD is actually up 70 cents. Gold futures trade 24.5. GLD is set to the close. Silver down 35 cents. Nat gas up 7.5 cents. Nat gas making new highs. Expected move in the E-mini S&Ps now down to 28 from around 35. We're going to take a quick 90-second break. We're going to come back. We got the trade. What you doing now? Oh, Palantir, what'd you do there?
It's like a little 1-by-3 ratio. I took $100 out of it.
You're putting this on as an opening trade.
It's a closing trade.
Palantir. It's on as a closing trade. I saw a credit, so I thought it was a trade.
I know you're not used to the whole credit thing. Like
as a boomer, right?
You make like $2, $3, $4. You know, it's nice. You feel great. You're used to you close it at 40 cents. That's a nickel. Look at you.
You put this on in Palantir. If I remember correctly, it was my suggestion.
Yes, definitely.
Thank you. Thank you for at least.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly.
Hey everybody, well, what a day, huh? You know, there's an old saying, you should never short a boring market. Why? I mean, I've never understood the logic of that. It's just thrown out there. I mean, I guess anything to dissuade shorts is promulgated as like received wisdom. But the market was really boring. I mean, I was struggling on slope to like write about anything, because every day the market's up like 1/5 of a point and it's just like, but I've never believed in never shorted bull market. I will short any market. And so it's a really good day because everything's getting kind of shellacked. And it's particularly cool because it's not like you and I have been in a 3-year bear market and it's just another good day. It was the lifetime high yesterday. The Dow was the highest point in the history of the Milky Way galaxy yesterday, which was like a few trading hours ago. So it's not like, we've been in this multi-year bear market. It's got to bottom at some point. No, we're a few hours into this. And I don't know exactly, not only do I not know what the basis of this is, but it hardly matters. That's, charting, don't overthink things. It's really important not to overthink things. It's just a picture. And I haven't bothered looking at the news. And it really doesn't matter because the news will offer any reason for the market doing what it's doing. Sentiment-wise, of course, it's been crazy bullish out there. Every day, Goldman Sachs is saying buy, 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 because what else are they going to say? Do you really think Goldman Sachs is going to offer you an honest opinion as to what to do? It's like asking Trump, who's the greatest president ever? What do you think he's going to say? Goldman will always say buy. JP Morgan will always say buy. Zero Hedge will always say buy. And just take it with a grain of salt. There's a lot to talk about. I've already gobbled up my time. I could, this is one of those things where it could be like, you have to fill 3 hours, and I could do it. I could fill 24 hours talking about charts and what's going on, but I don't have that. I have 15 minutes, shrinking fast. So we might as well just jump into it and see how far we can get. Here's the spider. I've added another trend line here because this poor fella, our poor wedge, he's so in the rearview mirror, he's sort of losing his utility. So I've added a much more conservative line here. And you know what? It's kind of cool too. Because this line here, we fell on that Friday when Trump was talking about 145% tariffs on China. And then we climbed and climbed and climbed. And look, that acted as support all the way up. Support, support, support. And then we had a very subtle shift right here. And we cracked it. And look at this. This is some magic. Resistance, resistance, resistance. And then today, down we go. So I did like a moment before the camera clicked on, I added that new line, and it works great. So peachy. The cubes are down hard, about 2.25%. And, here too, we might want to just try to toss in another line, if I dare, just to kind of see what happens. Something like that. That works. So you can kind of see the change was right here. Yeah, so that's going nicely. And then semiconductors, SMH, down hard 3.8%. And in this instance, we have cracked below this level that I've been talking about. Remember back here where we were below it last Friday, I guess it was? We jumped above it again. Well, not anymore. We're back below it again. And, I'm here in the middle of the Silicon Valley. I've been here for decades. And basically anything to do with hyperscaling and AI. I mean, if OpenAI was a public company right now, the ticker would be very red at the moment, but it's not. It's private. It's the largest private company in the world. But all that hot stuff, quantum computing, nuclear reactors, all the white hot stuff is falling the fastest right now. It also happens to be what I'm short of in a lot of instances. I haven't even looked at NVIDIA today. I have no idea what it's doing. Okay, it's down 4.37%. It is possible that this price here, it'll never be seen again. It's not out of the question. I don't trade NVIDIA. I consider it an ugly, kind of dull chart. They are reporting, I think, in 6 days, I want to say. I think that's the big event. Let's see, today is the 13th. I think that's right. I think Wednesday afternoon they report, and that'll be kind of a big deal. They're probably still $5 trillion company or so, but the breakdown that we've seen here, subtle as it is still worth noting. As I say, I have how many positions do I have right now? 36. I've got 36 short positions right now, and none of them are NVIDIA, although there are some semiconductors slipped in there. Emerging markets, EEM. This was a really interesting one. You and I have been watching this for a while. Remember this line? That's the gap. It didn't cross it once, not even by a penny. In fact, it may not even matched it, which is best. But I think, 55.74 is the level. And we got, each teasing each time, but falling away. And today in particular, undoing days worth of an attempt to get above that. So I'm still short EEM. I love every one of my charts, but, out of those 36, I can't share all of them. Here's a few. Here's ASTS. We've looked at quite regularly. This is down 5.5%. Here's Caterpillar. Just got into this one yesterday, and we've got a nice tumble in this, 3 1/3% down on Caterpillar. Cognex, again, CGNX down 3 3/4%, getting close to this gap. Maybe it'll provide a little bit of support there. This is the hard part, where to cover. It's very tough to know, because you never know when Besant will come skipping out and make some announcement about, everybody gets $1 million to trade. God knows what. I mean, they're still yapping about this $2,000 tariff dividend joke. God knows what they'll do. I think one day of selling is not going to provoke them into throwing the country a couple of $1 trillion more in debt just so they can keep a price E-trade account a little bit higher. But we'll see. I try to use the charts for important levels of support, or sort of, I mean, like, let's say the VIX goes to 35. That's kind of a good signal right there. Things like that. There's a whole bouleboss of things, but it's tough to know. It really is. What else? Carvana, CVNA, down 3.81%. Dollar Street DLTR, down over 3%. This one kind of deserves a horizontal ray right along there. That's good. Okay, so you can see where that gap is. Over the course of time, I mean, this isn't my regular platform that I use, but over the course of time, I'm adding and augmenting little bits and pieces of the chart. So they'll get a little more rich as time goes on, unlike when I first switched, when it was just like naked charts. Micron MU, this was lifetime high 2 days ago. We're down about 4% right now. This line really has no business being there anymore. What else? AMD, another semiconductor, down almost 5%. And this one peaked a couple of weeks back. But, you know, all these things have had just staggering rallies. We looked at Oracle yesterday. I don't have it in today's list, but, you know, Oracle lost 35% of its value, maybe 40% now, I don't know. So there's this sort of last orgiastic surge that blasted things sky high, and things have peaked at different times. You know, Oracle peaked way back when, you know, it was in the summer or so, whereas other items peaked yesterday or a couple of days ago. So it's a whole gamut of exhaustion points. Moving on, GLW, this is Corning. Oh, this is a good one. Look at that, down 8.5%. And all of these lines are sort of losing their utility because they don't have much meaning anymore. But that's a nice reversal there, and kind of reminds you of back in 2000, you know, things like Nortel and Corning, Cisco, things of that nature, going to crazy valuations and then reversing hard. Here's a new one we haven't talked about, HIMS. This is Hims and Hers, and what I like about this one is this really well-formed head and shoulders pattern right along like so. That's a good one. And this is one of those things in which, you know, well, wait a second, it's already lost 50% of its value. I'm short things that have already lost 70% of their value, 80% of their value. But like I said yesterday, zero. That's support. That's the firm support right there. So in this mega bull market, in this absurdly supported bull market, which $38 trillion of debt have made possible, anything that has had the temerity to go down 70% probably stinks anyway as a company. So, you know, don't let it scare you. Palantir, Alex Karp. The wild hair didn't save him. It's down 6.38%, goofy hair notwithstanding. And what's interesting is, and I think last I checked, it wasn't known if it was true or not. The word is Michael Burry, like a week or two ago, threw up his arms and said, I'm closing the fund. Again, I don't know if that's true. There's a letter circulating around. Maybe it's fake. You never know these days what's real and what's fake. But wouldn't it be something if that was real? Because only days ago it came out that he had taken on a big put position, although not nearly as big as people thought. It's only 1% of the size they thought. But anyway, he had gone bearish on these fellas, and Karp freaked out, and his hair got all curly and wild, and he got upset. So, and he blamed the shorts, of course. You know, any perma bull who encounters trouble blames the bears, both of us. And, you know, like that's the cause of their ills. You know, honest to God. That's pathetic. Just pathetic. And get a haircut. Here's Oracle, ORCL. Oh, I did include this. Well, this is just a nice illustration of just how hard it's getting hit. Look at this. You know, what a tidal wave of selling. Months and months of, this giant burst right here, completely laid waste. Our old friend CoreWeave, doing what it does, falling. This is a honey of a short here. This is down again about 9%. So I'm just tightening up subs along the way. Every day, just tighten those stops up. OCLO, OKLO, also down. All this stuff to do with new power has been really getting hit hard. OCLO's kind of a better known one, but there's others whose ticker symbols evade me right now. But yeah, it's adjunct to the AI mania. And sadly, something I wanted to short like a week ago, but I couldn't because the platform I'm using has bad quotes on it. BST. For those of you with good quotes, congratulations. This is done nicely. And I think it's just the beginning of a much bigger fall. Really dumb reason not to short something, but there you go. I mentioned in passing quantum earlier. Quantum was very hot and not anymore. Here's QUBT, and the charts speak for themselves. They're just getting shellacked. 10.5% today alone. A lot of these are already down 50, 60, 70%. RGTI, I am short this one, down almost 11%. QBTS, down almost 12%. You get the idea. IonQ, gapping down over 11%. You can just see that we had, this nice breakout, and the breakout is completely reversed. It's failed. So I would suspect much lower prices ahead because there ain't no quantum computers out there except in laboratories. Well, wrap it up real quick here. Here's the NQ, and this is the futures. As we had our first break here, and we had an attempt to shake that off. Didn't work. We are probably going to close at a multi-week low, and we're going to challenge last Friday's low, hopefully tomorrow. I would also point out, in terms of just animal spirits and risk on, risk off behavior, if you look at crypto, it's just accelerating the demise. Michael Saylor's strategy down another almost 7%, having lost, I'm losing track at this point, 60% of its value, something like that. And Bitcoin, very important, is no longer a six-figure critter. It has fallen thousands of dollars. It has breached the six-figure support, and it looks likely to stay there this time. Okay, well, anyway, very big day. We'll see if there's any follow-through tomorrow. These things can reverse sometimes. You never know what's going to be announced. But good, solid day, and we'll see if we can get some more flood on Friday. So I'll see you then. Bye-bye.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
tastytrade's Money Match event. Unlock 30 days commission-free trading, plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new tastytrade and tastylive web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
Class is in session. Dr. Jim Schultz is bringing the heat to Options Crash Course Live. This 90-minute show features Dr. Jim in his professional prime. All of the gimmies, none of the gotchas. Come early and grab a drink with Dr. Jim before class and stay for Q&A. The event is free, but space is limited. Register today at tastylive.com/events. It's not a lecture, it's a lifestyle.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Ring the alarm, hey, ring the alarm, boys. Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mikey, we are back, my friend, and boy, let's get back into the markets here because it's a bloodbath here. We've got E-mini S&P 500 futures. They are down 114 right now. The low of the session was just put in about 15 minutes ago. We got to 67.46, about 20-ish handles lower from here. NASDAQ down 530. It's been the weakest of the group, or the weakest of the group, along with the Russell as well, down 72. But it's been a bloodbath across the board. The Dow down 791, reversing pretty much the entire move it's had. That big move higher into new highs. It's been kind of the talk of the town here. Oil catching a little bit of a bid, 58.63, still below that 60 mark. Volatility futures up to 2065. It wasn't a ton of volatility this morning. It's been kind of percolating higher throughout the session here. Bonds on the lows here at 117.01. They're down 19 ticks. They bounced from the 117 handle. That was the low of the session here. Rates moving a little bit higher here. The rate projection via the CME Fed Watch tool has kind of split 50-50 in terms of cut or no cut here. Gold had a huge move in the middle of the day, bailed me out on some shorts here. 41.70 down $43, about 1% to the downside. Silver as well. Silver got into, I think, the 51 handle. 51.98 was the low of the session, down $1.10. It too had a huge move, caught some of that. And Bitcoin has looked like death, down 3,000 on the future, spot down 4,000, 99,000 on the dot here in the spot market here. It's been quite the bloodbath today across the board. Even when you think about some of the big name tech stocks, Meta has looked like a sick puppy here. It's down to 606. Nvidia is down in the 180 handle again, down $7 and change. Amazon is back down to like kind of where it was on the initial pop on earnings. Tesla got below 400 today, got to 396. That gave up a lot of its rally. Apple has really been the only savings grace here. It's the only one that's kind of remained high.
Yeah, it's been a crazy day for sure. You have some tech stock earnings after the close today. AMAT has been sliding throughout the day. Mm-hmm. This would mark the 6th losing session in a row if it stays down here, at least for today. But we'll see what happens there. Yeah, it seems and feels like just a liquidation event across the board. We are seeing vol flatten out a little bit here. We've talked about this time and time again. When we see volatility in contango, it tells us markets are complacent. When we see volatility in backwardation, where the near-term contract is higher than the next one, that's when true fear is in the market. And we are seeing just that right now. 2065 in the X contract, 2063 in the Z contract, just slightly tiptoeing into backwardation. Kind of a crazy move there. But yeah, it feels like not many people or institutions want to have risk on into this weekend here.
We still got another day left. I mean, I will say, volatility at 2055, it's certainly elevated. It doesn't spook me as like a cascading liquidation, so to speak. I mean, obviously it's a painful day, especially if you've been leaning long and I've scalped around NASDAQ pretty much all day. I got a couple bucks back on the gold position, being short gold, short silver as well. That helped as well. I had some leftover put diagonal spreads that helped bail me out and get me a couple bucks back from the pain here. But it doesn't, vol's not exploding here, which kind of tells me, or at least gives me the feeling, I'm just scalping another one of these NASDAQ contracts out. I'm just trading the micros here. I've scalped my way to basically, I need 100 points to the upside-ish to kind of break even on my day. But overall, it's felt pretty orderly. It's not, I'm not spooked.
Yeah.
I feel the pain.
Sure.
The pain is there, is present. It is in the room with me right now. I can feel its presence. But it's not shaking. I'm not shaking in my boots here.
Yeah, I mean, it's a 1% move, 1.5%.
I know, but it feels...
That's just because it's so inflated. The price is so inflated that 110-point sell-off, you're like, oh, look at this.
It's 100 points.
If we get a 300-point sell-off on Monday, I think the tone might change.
We still got tomorrow. Yeah.
Oh, yeah, I keep thinking it's not. No.
We still got 24 hours of trading.
Someone in the YouTube chat, do you guys remember how giddy you were last Friday? I do, actually.
Yes.
That was more of that was a comedic event where it was down 100 and then back to flat.
Yeah, we watched that on
this is
I don't think you're getting that today. I mean, you are getting a little bit of a bounce here, which is nice. I mean, the NASDAQ just rallied about 100 handles from the lows. E-mini is about 20 handles from the lows. So that is
tiny bounce.
That is a tiny bounce. Yes, I would agree.
But yeah, now is an interesting time, especially for SPX positions. I put on some SPX positions. We were on the SIBO floor earlier today.
It's actually a good call. What'd you do? You do something longer duration?
Yes. So I did a iron condor for the end of the year.
Oh, wow.
Yeah.
Okay.
Into this move. I think it's like the perfect timing with the little vol pop.
Yeah.
I did the 6450, 7100 short options, and then I went 15 points wide. Okay. So 6450, 7100 for the December 31st expiration.
Mm-hmm.
And collected $520 for that with 980 in risk. And that's trading for the same price right now. And then I did a end of the month expiration. I did the Super Bowl. I sold a 10-point wide put spread, the 6,700, 6,690, and then I bought a 5-point wide call spread, the 6,850, 6,855, and I did that for a 30-cent credit. So just a way to shift risk and reward to the upside with a small little credit here.
I think I'm going to do like a $25 wide SPX. It's really not even that wide in SPX because SPX is so big. But I'm going to do kind of a longer duration iron condor, we'll call it a core position. All right, so I'm short this 70-25, 70-50 call spread. So that's roughly the 20 delta for the short option. On the downside, I'm doing the 6,400, 63.75. It's about the 20 delta for the shorts, going 25 points wide. I was actually looking at doing it 50 points wide, but figured I would lay off a little bit here. And if we do see more downside and more of a pop in volatility, I'll look to just do a wide put spread instead of both sides. My thinking here is that you've got a little bit of a sell-off. Volatility has not exploded, so I'm just going to go neutral and try and capture the vol more so than the directional move, where if we get a big down move, and by big down move, let's call it, another couple hundred points, 100, 200 points, and a pop in volatility, I'll look to get a little bit wider, put on a little bit more risk. This one, probably not going to move all that much in the short term, so I will post that one to the follow page shortly.
Lovely. Yeah. But yeah, anytime the market gives us a little boost in implied volatility, we'll look to trade those events in the major products like SPX, SPY, QQQ, just going back to the ETF and indices there.
Yes.
We do have a new referral program if you want to invite your friends to join us on this wild Thursday afternoon. You both get $100 when one of your friends or family members opens an account. So check that out. Pinned it to the top of the YouTube chat, tastytrade.com/referral, or you can scan that QR code on the image you see here. You can invite up to 24 people a year. Pretty sweet.
Awesome.
Yeah.
2 a month.
It is. The math does math out to that number. And then we also
match,
the money match promo. This is one for new account holders as well. 30-day commission-free trading and a 1% cash match on any and all deposits in that 30-day window. So if you are not using Tasty, this is a cool promo, especially if you're doing really active stuff like 0-day or 1-day or weekly stuff, because you get those commissions back.
I love it.
Yeah.
I love it.
Yeah. But yeah, what else is on your radar here?
I think I'm going to get long some AVGO.
Okay.
With the call diagonal spread. It's kind of down to the lower end of where it's been trading. The 300-ish was kind of where it burst out onto the scene here. But it's down about $15 today, about 4.5%. So underperforming, or I should say, a bigger move relative to what the NASDAQ is doing here. I also put on a strangle in SMH. SMH is one that we traded a lot before this run up, but you really haven't had any two-sided action there. And SMH right now trading at about 344. It's obviously heavily weighted towards NVIDIA, which reports earnings next week. AVGO is another big part of the ETF there. But it's got some pretty juicy premium. I sold the 300, 390 strangle here. It's past a 1 standard deviation, so you can see it's about 13, 14-ish delta on either side. Put it on the chart. It's about where the lows are and past the recent highs up here. So I took the opportunity today, the pop in volatility in single name equities. I did a strangle in Palantir. I put on a short put in Shopify. I also had some people saying, bro, you're doing great with your crab trades and diagonal trades, but I just don't get them. And so we got a couple calls today wanting some more just short puts, strangles, just kind of the cookie cutter stuff. So I put some of those on. Palantir was one of them that I did that in. I sold a put in Robinhood. Robinhood is the weakest stock in the S&P 500 today, down about 9%. So I sold the 100 strike puts in December there. I did the strangle in SMH. You can see all these on the follow page as well with a couple comments from me. SMH there. I even noted the move in Robinhood. You know, it's the weakest in the S&P 500 today. I sold a put in Shopify. I did all sorts of stuff with a bunch of my positions that I already had on. We got on a bunch of sold a put in Coinbase, you know, into this down move. Yeah, big move in crypto, and obviously Coinbase, one of the higher levered of the group there. So I hear you, peeps. You want some more short premium? I've been waiting for some pop and volatility, some moves. Here we go.
Yeah. You're getting the moves.
Yeah.
Getting the moves.
Yes.
I thought someone was looking at something in the YouTube here. CMG is the only green on my list. Are you kidding me?
Well,
on a day like today,
I'm long it at 39,
Thank God.
so I need even more of that move. I sold a put into earnings, took assignment on that. I was going to wheel it, assuming that it stayed kind of close to the lows. I was not anticipating it to be down 20 or 30% from that low, which was lows. So things can go down.
True.
That's the moral of the story. I'm just a bag holder of a place that I think stinks.
Speaking of, someone in the YouTube chat talking about UNH.
Yes.
I have a 40% gain. Should I close it on the premium sold? Should I close it now and lock in profit, or wait further gains? So covered put, covered call. You don't have risk on that side. So if you wanted to wait and hold it for more, you can. It's up to you.
Yeah. I would probably take the position off as a whole, unless it's a longer duration trade. Like if you're poor man's covered call and you're buying a call that's, 90 to 120 days out, something like that, then maybe you can scalp out of that short call. But if you're doing like a 60-30 type thing, I would probably just close the whole trade.
Yeah. If it's 40% overall on the max profit, then yeah, I totally agree with Nick. If it's just 40% on the short option, then maybe you're not net profitable. But I mean, if you have a covered put where you're short shares of UNH, you might. I'm sure you are. But who knows? They do have a DOJ hearing, I believe, on the 19th, so that could create some volatility in this hog. You're actually seeing it priced into the market. 42% implied volatility for next week, which would include that, and then 36% the next 3 cycles out. So seeing a little bump there in implied volatility. Interesting.
Yeah. Funny. The chat's great. The chat is just
Baba's up today.
Yeah, Baba was up. Some of the China stocks have been mixed today. You had JD earnings this morning. Stock is basically unchanged, but near the lows. I had a zebra into earnings. I closed at the middle of the day today. Took a small loss on it, but took a shot there. Baba, on the flip side, is up a couple bucks. It was up higher than this at 164, so about $4 or $5 from here. Baidu as well, getting killed today, down to $8 and change, about 6.5%. That might be something that we look at here.
Yeah, E-mini selling off back to lows.
What do we think here in Baba? Do we play into the China stocks?
I can't.
Buy it.
I can't do it.
You can't do Baidu?
Can't do it.
I know.
I have to keep my streak going. I haven't traded the Chinese names in quite some time.
They really are. They're tough. They're a tough cookie.
Yeah. But volatile.
Yeah.
That's what you're looking for.
Maybe I'll save that for tomorrow.
E-mini futures are 13 points off the low of the session.
Ooh.
Hurts.
Volatility, it's not crazy high. 2051, we're up a point, about 5%.
I think what's funny, not funny and funny, funny and not funny.
Funny how? Like a clown?
Yeah. I think what's interesting about this is someone in the YouTube chat said, so tomorrow we rip higher, right? This is how this works. I mean, it could, the market could literally be pricing in that every dip we've seen has been bought over the next couple of days, which kills the volatility, which is why you don't see the pop. But I think tomorrow, if you get another 120 point sell off tomorrow, I think that's when you get the vol reaction.
Oh, for sure. Yeah. You get
because we haven't had a continuation in I don't know how long.
Yes. And we'll use the NASDAQ here down about 2%. You get another 2% move tomorrow, and you're talking about like a 5% 2-day move into a weekend.
Yeah.
You definitely, I would expect volatility to be a lot higher. I think that's why volatility isn't expanding that much today, because even though, with the VIX prior to today was at about 17-ish, 17.5, 18, which is about a 1% move, expected move day to day, up or down. You're certainly getting it outside the expected move today, but it's not a huge outside move. Talking about, one standard deviation, past the one standard deviation. I think I agree. If you get another move like this, now you got some vol.
Yeah.
But you think that's what's in store for us? We're still up on the week, which is a shock.
That's interesting.
Friday we closed.
Yeah.
So Friday the E-mini close was 67.53. We're at 67.60. So if you closed your eyes and went to sleep on Friday, you woke up and the market has done nothing this week.
It's all just a mirage.
It's all just a mirage. Wow.
Yeah, I mean, I think this
has kind of been the spot though.
Yeah.
6,700 has kind of been our kind of buy spot. 66 to 67 for the past 2 months, 3 months.
Yeah, I mean, they are juicing up implied volatility a little bit for tomorrow. You've got 56 point move for tomorrow. There used to be times where we would looking at Friday into next Friday, it would be 56 points for the whole week. So you're still getting some nice range implications here for SPX. Now the question is, does 56 points feel light to you on a 120 point sell-off day?
Yes, it does. It does. But it's recency bias because you're watching 120 points today. But yeah, I mean, it does seem light. I agree. I think it seems light.
Heading into the lows of the session here, down 120.
Pain. NASDAQ got to like 25. Did we get below 25? 25,002 was the low. Is that our spot, Mikey?
25 is the bounce spot?
25 is the bounce spot.
Could be.
I bought a couple there. I put that like 25.20.
Your micro NASDAQ?
Micro NASDAQ. I'm like a junkie.
Yeah. It's fun.
Yeah.
Luckily, AMAT's right at the close, 3 o'clock. So we can actually see a little bit of movement. I've got a downside put calendar there.
In AMAT?
In AMAT at 210.
AMAT's had a hell of a run here. They're taking out some of the juice on some of these stocks. Micron, another one that's down to $8 and change. AMD as well. Some of the secondary chip names, LRCX is in that. I don't know if you've looked at SanDisk.
I have.
I think I brought that to your attention at one point. That one's down 14%, $40, but
big. Obviously
still well above where they were trading.
Yeah.
Just recently here. So a little bit of, I think this goes to what Chris and I were kind of discussing on first call. Of like, it's good to see a little bit of a rotation. It can't be the same names every single day forever.
Yeah.
So I think that's why you're seeing kind of the healthcare names. If you look at the healthcare sector here on our market indices, I can pull this up and just give you a second here. Sectors. So you go to sectors, you go to healthcare here, you can pull these up. You can see in terms of like the batch of stocks here, it's pretty 50-50, but these have had some nice moves to the upside. Regeneron, Biogen is in there, MRK. I mean, Eli Lilly, if you look at Eli Lilly, it's another one that's, been kind of a top name here. That's kind of where the rotation has been recently.
Yeah.
And then some of the froth from like the high flyers, your INQs, Rigetti getting killed today. It's at 25 and change. I mean, this is the sort of stuff like you want to see this. This is kind of healthy, I think.
I mean, yeah. If you've gotten the blowout top.
Yes.
It's happens a lot.
Yes.
But yeah, MU has been the most wild iron condor I've been in quite some time.
Tested on both sides day to day.
Yeah, like it would be 20 points in the money, and then the next day it's 10 points out of the money, and now I've got 14 points. I'm 14 points out of the money, but it's only up $19, 19 whole dollars. I collected $300 for this iron condor, and I've held it for 20 days. And you might ask yourself, how could it only be up $19 if you've held it 20 days and it's completely between the strikes, basically? Well, if you look at a chart of IV rank in MU, that will answer your question. So I did.
You could chart this if you type in IVR, or you can add this as a indicator here. Go to the indicator section, you type in IVR, it'll be right there. You can
add that
as well.
So yeah, I did the on October 24th. That's when I put this iron condor on. So that's at the bottom of the barrel of IV rank.
Yeah,
you should be able to see it right there. So I put this on when IV rank is at 40, and ever since it's been elevating to 55, 60. So my expected theta decay is completely erased because this implied volatility increase basically exceeds and offsets all of my expected theta decay in this scenario. But now I've got a very volatile iron condor with 8 days to go, 14 points out of the money that has $250 to decay in 8 days. So
there's not much to do with that position.
No.
You gotta just kind of sit.
I'm just holding it. Yeah. You could exit if you want to book a small win, but these are the times where I like to press offensively.
Oh.
Because if I really need to, I could roll the short call out if we get tested up there, but this thing's just been so insane in the market's weak, and I need a little more downside movement in MU. So we'll see if we can get it.
As we limp into the close here, E-minis 57 or 67.58, I should say here, down 118, about 1 and 2, about 3/4% here You got the NASDAQ down 539, a little over 2%. The Dow down 836. You got the Russell down 71. The Russell and the NASDAQ, the weakest of the group today. Oil has been choppy for most of the session here. It had its kind of low move yesterday. Volatility futures 2065 up $1.20 here, about 6%. You have bonds pinned at 117. Rates moving a little bit higher today. Gold and silver both off the highs. They had a pretty big range today. $46 to the downside on gold. Silver down $1.30 here, putting in lower end of the range for the session. Bitcoin down $3,600 on the futures spot, down 4,700. It looks like doo D.
Yeah, sub 100K in the Bitcoin futures. Ooh. Interesting price point.
About 100 shares more.
I mean, what do you do?
IBIT and ETH.
You haven't had this opportunity since what?
Last week.
Well, no. In IBIT, you haven't had this. You haven't had this price point since May.
Sure, because I think when we got to below 100, it was in the overnight session, so you weren't trading the IBIT share.
Yeah. But yeah, if you're trading IBIT in standard sessions, you have not gotten this sub 56 level in
since May. Yeah.
These are how markets work, people.
Yes. Any other earnings? We have AMAT. That's really it.
Yeah.
You know what else? Spice.
Ooh.
SPCE.
Wow.
What do you think that's?
Virgin Galactic. That used to be our like.
What do you think that's trading at right now?
5.
331. Pretty close. It's a good guess.
There's the bell. But yeah, we have new holdings, NU, kind of another spot, another SoFi, but Latin America, I believe. AMAT, Spice. That's pretty much it. Yeah, for today, after the close, that's pretty much it.
E-minis down 110, NASDAQ down 500. They bounced a little bit. They goosed them into the close, as they said. Is this day one, Mikey?
I don't think so.
I don't think so either.
I think
we have a little bit of a choppy update tomorrow. Everything's fine. We go into the weekend.
Especially if New England beats the Jets tonight.
That's true. We'll take those profits.
Much to Chris Vecchio's chagrin.
Sorry to Vecchio. There's no shot. 12. We're going to take a quick little 90-second break, come back with more Tasty Live content. We got the Overtime Boys coming up next, so stay tuned. AMAT up about 50 cents from the close. Peace.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
It was a great show. It was very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math was really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Tasty Trade has crypto, and you can trade with 0 commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Sell everything. It's Thursday, November 13th, 2025. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan as we take you through this 30-minute block as we wind down the futures trading day. Bad day for stocks, led lower by the Russell. Fed rate cut odds dip below 50%, and we see the rug gets pulled on, well, anything that's rallied over the last few months. If it was stocks or gold, silver, those also got rug pulled this afternoon. Crypto is not able to hold out itself. Perhaps the only bright spot is that bonds weren't smacked around, despite the fact that you had another weak auction on the 30-year side today.
Mm-hmm.
The U.S. dollar is a mess too. Where's the safe haven bid? We look to the energy sector, and it's not like there's much better news there because natural gas prices are screaming to the upside. Dylan, today seems like it was a good day for the thinkers among us. For those
what I was thinking, not to use a dirty was, I was about the comment I made yesterday that where do I want to start this? My first thought was your comment about the absurdity of waiving the October data because of whatever the sequencing or whatever excuse they had was. And then my initial reaction, as you know, Ilya, was, okay, well, what surprises me is not that they would, try to blunder their way out of the data reporting, especially if they're concerned the inflation number is hot, because I think there's sort of speculation it was a hot CPI hiding in there somewhere. But rather that the markets are tolerant of this. And so I looked at the sell-off today as it's one day. So it doesn't mean that much, but I just do wonder the degree to which, whether it's a potential tariff reversal, the sort of absurdity of the shutdown and the sort of waiver of economic data. I mean, just the self-evidently preposterous nature of so many of the decisions that are made at the level of the U.S. federal government right now, and the market's ability to tolerate it. And I just, it does not surprise me that there would be some negative momentum across the board, basically risk off. But the interesting thing, to your point in the narrative, risk off usually is dollar positive, or like that there's some safe haven out there. I guess maybe it was a bond, but I think that in the era when the referendum is on the quality of the U.S. leadership in general, I do think that it's not just a referendum on the value of U.S. equities, or certainly on the speculative end of U.S. interests, meaning obviously tech or crypto or whatever, but it also does come back to a referendum on the dollar. And I think that where you've seen the biggest internalization or expression of lost value in the context of the current federal government infrastructure or current federal government decision-making process has been in the decline of the dollar over the last 6 months, which is not to, flip over the can here on the dollar, but again, it was going better, and it's not going that way at the moment. So I'm loath to get too invested in my own thoughts, but where I would take this is the markets are getting tired of incompetent leadership at the federal level. You do get a sense of the dollar being a haven when you look at it against sort of obvious risk-on currencies. So like the Aussie is down, for example, and that's despite the fact that it had a good jobs report overnight and was actually up significantly overnight until all of these shenanigans. So it's sort of finding some semblance of that. It's holding up pretty well against the yen. It's getting shellacked against the euro and the pound.
It's actually up a little bit against the Canadian dollar, around the same kind of thought process, I would think, as the Aussie, where those are just risk-on currencies, and the risk-off nature of what's going on is just overwhelming anything dollar-related. And I think that kind of paints an interesting story in the sense that you don't really have a kind of debasement or a sell America idea here. And if you did, the bonds would be crashing, the dollar would be uniformly sold, and gold would be scorching hot, none of which is true. So with that in mind, I think the 50-50 spread that we now have on Fed funds futures for the probability of a December cut, because the market is literally at 50-50. It assumes the Fed has no idea. I think that really says everything about what we need to be knowing today, which is to say the markets are doing as the Fed. They think the Fed has no idea what's going on for all the many reasons, Dylan, that you've just listed. They don't know what's going on, and they're not prepared to give it the benefit of doubt, so they're just reducing exposure. They're reducing exposure to everything. They're reducing exposure to the dollar, and to gold, and to stocks, and to crypto.
But where is it going? Into cash?
It might be staying in the bond.
Cash, why is the dollar getting weaker?
Well, it seems to be going into, well, it's not getting uniformly weaker, but it seems to be going to European currencies more than anything. And to my mind, that's because none of those central banks have anything to do. There's really no meaningful likelihood, for example, that the ECB is going to move rates not only for the rest of this year, but all of next year. So maybe in a world where you have no idea what the Fed's going to do next, and don't expect the Fed to have any idea of what to do next, maybe you're just going to a place of cash where nobody's going to do anything for a while.
Is it deleveraging ahead of NVIDIA next week? Because it looks like everything was sold today. Gold was sold, silver was sold.
Everything got sold today.
Yeah, I mean, if we think back about the themes that we've discussed over the course of this year, there have been dynamics like buy America, sell America. You have bonds, the dollar, and stocks on one side and gold on the other. So you look at first blush, dollars down, bonds are down, stocks are down. Okay. Maybe it's sell America, but gold's not there. Gold's off as well.
Bitcoin's not there. Gold's not there. Bonds are only down a little bit. It's tempting, but it doesn't quite line up.
No, the glove doesn't fit necessarily. And then you think about risk on, risk off, and, you know, stocks up, dollar up, treasuries off, gold off. That's not the case.
No, treasuries are not up, and the dollar is anything but uniform. So that's not really
do you
working.
read anything? Do you read anything into this, Chris?
I'm not sure that I read much into this beyond it's a market that perhaps arrived at the buy the rumor, sell the news, buy the government reopening, sell it when it officially goes into effect. You know, we got a bounce last Friday when the news started to trickle out that negotiations would take place over the weekend and perhaps the government would be reopened, and it was realized. And then today after the vote, everything sells down. So we've basically gotten back to where we were prior to the rumors last Friday about a
kind of takes you back
reopening.
to the Fed meeting on the 29th, which was the top on this whole thing, really across markets, and back to the idea that the markets were going into that Fed meeting priced for perfection on earnings, on China, on the shutdown, on whatever you want. And what they didn't get was that, because the one piece of perfection they didn't get was autopilot rate cuts in both October and December. And so that's really the only piece of the puzzle. I mean, the markets were not afraid of the shutdown. They didn't sell off on the shutdown. They knew that that was eventually going to end with some amount of time elapsed. So, okay, they were happy on Monday, and we talked about this on Monday, and I was arguing, and I even wrote a whole blog about this might be a flash in the pan, this rally, because everything that the markets cared about going into this rally was, holy moly, the Fed may not cut. And what happened when we got the deal on Monday and the markets rallied was Fed rate cut odds went down. Because, of course, you remove a fiscal headwind, the Fed has less impetus to cut, especially if it doesn't have data to look at. And the White House is saying, and you're not going to get it.
Well, I mean, so yesterday we did the whole dog ate our homework thing. Part of the reason why they can't give us a full data series is because they didn't conduct the household employment survey for October because the government was shut down. There was no one to conduct the survey. So we can't get an unemployment rate, right?
We should get a payrolls number.
We'll get an
The shutdown. The shutdown happened at the end of the month. We should have 90+% of the data.
No, we'll get the NFP number because those are figures that are submitted by businesses themselves.
Right.
But the government does the survey, whereas like it's an open portal for businesses to send the government figures, right? And so part of the reason why the data has become less reliable over the years is because reporting rates have dropped. Businesses have been less timely and frequent with when they've submitted the data to the government.
And more of it's imputed now. Yeah.
The household employment survey, they actually reach out to people. So it's not like individual workers are telling the government if they had a job or not. They're only reporting that if they're contacted. So if there's no people to collect that data, then it just doesn't exist, right? So I'm a little less harsh on that today than I am yesterday, but also the government was able to keep various things open. The administration was able to keep various things open as on a whim, and it chose not to collect the data.
Well, and BLS too.
Well, BLS Trump could have ordered the BLS workers to continue to work as furloughed workers or workers not collecting.
I mean, they got the CPI out because they had to make the cost of living adjustment. So, and now for some reason, Carolyn Levitt is telling us that October CPI isn't coming out. It's like, well, weren't the workers back already? What are you talking about?
Either way, Dylan, now that the government's reopened, it seems like the focus in the media in DC has shifted away from the shutdown and towards other things.
Are you talking about Epstein or tariffs?
Epstein, right? But I'm like, I want to discuss this in a way that's not, we're not just like,
piling on the salacious.
Yeah, like full TDS kind of commentary, right? Like, is it possible that the market now feels with the cut odds declining and Trump and DC being distracted by this new episode in the news that, Trump's going to do something to distract that may be outside of the box, an orthodox fiscal policy, a new round of tariffs, something new with China? I mean, maybe it's a coincidence that the market's reacting this way so negatively towards all dollar-denominated assets, the greenback treasuries, stocks themselves, after the government reopens and we go into a different sort of news cycle.
I think it's a stretch to say that the Epstein stuff is making the market sell off. Although I guess you could make a case, that something that destabilizes or diminishes Trump's influence or compromises the integrity of the president of the United States is inherently bad for the U.S. economy and certainly bad for the U.S. reputation as it relates to the economy.
I only asked because I saw
it thickens the fog as well. The problem is the fog. It thickens the fog.
I only asked because I saw several people tweeting out last night, like at the margin, JD Vance wouldn't be able to keep together the Republican coalition and push forward the agenda that Trump has, right? Because he doesn't have the credibility with the base the way that he does, or that Trump does. And so anything that destabilizes Trump's position as the person with his hands on the levers is bad for the stock market, is basically the angle that people were working with. I don't have this in my calculus today. I saw it come up in the chat a few times as well here over the course of the day, which is why I think it's worth addressing. Generally speaking, trading because of your politics is a very dumb idea.
Horrible idea.
The only thing that matters long-term as it pertains to the politics of the market are interest rates going up and down. What's the cost of money? And is the government going to be spending more or less? Deficits up or down? Everything else is just window dressing, okay, and noise. So I don't want to go into those kind of political weeds here. I I've seen some people who I respect tweet about this and discuss it. I saw it come up in the YouTube chat here a few times today.
What was the most memorable? Like, what was the most compelling thought? I guess. What was the clearest and most compelling thought that would connect this to anything outside of Trump's in trouble?
When the Republican Party, when the Epstein bill goes to the floor next week, the Republican Party is going to see 50 to 100 members defect and break party lines to support the release of all the files. And it's going to mean that effectively
the Republican policy agenda is doomed now. That the policy agenda of the Republican Party is now gone.
Yes. And then we think about that being compromised going into January, because the 4-month continuing resolution is really from October 1st onwards. We're going to have to pass a new continuing resolution in January, right? And all of a sudden, if the Republican caucus is broken up, we just had the longest shutdown in U.S. history. Who's to say that the next one in January won't be even longer? And we already know that the economy and the labor markets is standing on stilts. And if we get another government shutdown that goes on for 30, 40, 50 days, you're sucking aggregate demand out of a system and reducing momentum at a time when everything is already constrained.
And so you need data. So if you get a shutdown in January, you disrupt data flow again. Now the Fed doesn't know what to do in December, maybe doesn't know what to do in January. Now you're just, again, you're thickening the fog.
That's really where this all comes. Like, it's a sequencing, right? It's not that there's anything immediate happening, but now we think about the next shutdown and what that resolution looks like to get funding through. And if the Republican Party isn't together and unified the way that it just was through the most recent one, then what type of concessions will they have to make to Democrats in order to get the bill through? And I think the number one would be the ACA subsidies that clearly have been the point of focus in at least the media that I follow. But how do you get there then, right? So what does this mean for the start of next year? I guess is the direction and line of thought as it pertains to the fiscal impulse. And right, if the government's closed and they can't agree on the spending, then the deficits that have been powering all of this asset inflation are just not going to be coming into play the way that we thought they were. Isn't that the ultimate factor throughout all of this?
I mean, for sure. I mean, I think, listen, again, you can layer into this. I think everything you're saying is true. I'll lay on top of that. The rate cuts are uncertain and unclear in terms of timing and how many and how soon and all that. And lay onto it the possibility of a legitimate reversal of the tariffs, which may be good or bad relative to the economics of the tariffs, but that reversal is obviously going to be bad in terms of any stability or clarity or certainty to do anything with anything, because it's just going to throw that much more chaos and fog, to use to Ilya's word. With all of that said, every single time the market gets spun up on thought, anxiety, logical fear, rational fear, all the list of things that you can get spun up on, and the market sells off as a result of it, it's an opportunity to buy the Mag 7 and ride them back up. I mean, every single time it's an opportunity. It's not a liability.
Oh yeah, I did something good and something bad yesterday. The good thing is I didn't get long the NASDAQ because we never got through 25,850, right? We never got through the downtrend off the recent highs, so I never got triggered long here. But the bad thing is that I would have saved myself a little bit more pain today, because the ES position I have went from being a nice winner to back to being just slightly in the money now at the close. We were talking the last few days about potentially short deltas in the Russell at that 2375, 2400 put spread. And I never took advantage of it because I was waiting to use it as a leg in to offset the NASDAQ exposure. So it would have been a wash, but that does feel like a miss here. I guess now the question is, Ilya, right? You lean short into this. It gets off short. I'm looking at the Russell right now. Risk to reward is the bet now being long stocks or a bounce, like Dylan's saying, because we do have this return into the 2150 envelope, which if a week ago here. Yeah, like a week ago, I was saying, oh, we're back to the 2150. Like, hasn't this been the place to turn? I'll buy against here. So this is where we should be buying.
I think you have to be really, really careful here. because we arrive at this location having shrugged off tech earnings, having shrugged off de-escalation between the US and China, having shrugged off the end of the shutdown. The markets, again, they came into that Fed meeting seemingly priced for perfection. They opened that week with a gap higher because the US and China were not going to have a serious kerfuffle, because over that weekend, they basically hashed out everything that needed to get hashed out, at least near term, to wind back the clock on the sell-off, which you see there, the horrible red candle on October 10th. That was the first time that the markets got thrown for a loop recently and got out of their kind of more, let's call it, more of a placid swim higher. I mean, just look at the size of those candles. They're small, they're pointed higher, the pullbacks are shallow. It's all very, very nice. And then on October 10th, all of a sudden, whoa, wait, what? You see the week of October the 29th, that week where you get that Fed meeting, you take that worry off the table. Then you get a bunch of good tech earnings. Now you have the end of the shutdown. Everything has gone this market's way, and it's down. What's the only thing that hasn't gone its way? The Fed. Why is it so desperate for this rate cut if everything is fine? So when you look at this, you compound it with the fog you now see in Fed funds futures, which is to say that the markets don't think the Fed has any idea what to do, and they, by extension, don't have any idea what to do, because that's been their main concern. To be a buyer here, you have to, at the very least, say, okay, but yes, they're concerned about uncertainty, they're concerned about this and that and blah, 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 but. Well, what's the but? Everything is already good and the markets have already ignored it. So, from my perspective, you have to be very careful about a sentiment shift, about a market that just doesn't care and is no longer doing what it's been doing since the lows in April. That now is the reckoning. It's possible. I don't think it's confirmed. We are at meaningful range supports to your point on the NASDAQ, on the Russell. So you could take a flyer if you wanted. But if I was going to look for some sort of long risk exposure here, I would want this thing to actually bottom. I would want to see some sort of a reaction candle, even on a 4-hour basis, on NASDAQ, on S&P, on Russell, to tell us that it's at least respecting these levels. And it's not going to slice through them in the next few hours.
Elliot, but like sentiment already shifted. The AAII survey that was conducted for this week shows now 49.1% of market participants view the next 6 months as producing negative stock returns.
Mm-hmm.
That's not the 1-year high, but that's the highest that we've seen in several weeks.
Yes.
So sentiment's pretty crappy already. Also, today was Thursday.
It's not that crappy. It's about 50-50 bearish versus bullish or neutral, which, I mean, makes sense.
Well, okay. Thursday's been coming into today. Annualized returns per day for the S&P 500 in 2025. If you only got long on Mondays, you'd be up 53.3%. Only long on Tuesdays, up 5%. What about Wednesdays? Higher by 93.2%. What if you got long on Thursdays? You'd be down 39.3% this year. So you're only long on Thursdays. Thursday's been the worst day of the week in 2025.
By Thursdays, I guess.
I don't know.
But
day after Fed meetings.
Well, you know what that is, right? Fed meetings are on Wednesdays. So
Fridays also haven't been good for what it's worth. They've been producing annualized return of
so
minus
Fed
15.4%.
meetings are on Wednesdays. The reaction, and they're late in the day, relatively speaking, on Wednesdays. So the reaction is Thursdays. So why are Thursdays bad? Because they are the day after Fed meetings? Is that what we're saying here?
It's possible. And we got another one coming up here in a few weeks, December 10th. Those odds again below 50%. CME FedWatch tool. A better show than tell. Let's just pull it up here.
I think it's just over back to 50
Did it
now.
recover over the course? Oh,
yeah. But I mean, it's a coin toss. It's still a coin toss.
Below 55% for people that are just tuning in. You go back nearly 30 years now. Above 55% day of the Fed meeting. The Fed has delivered in that direction 100% of the time, cuts or hikes. So this is, yes, favored, but by no means is the market of a mindset that it's more than likely to happen, if I were to use my enterprising mind here. Dylan, we don't have overtime tomorrow because tomorrow's Friday. Going into tomorrow and really thinking about markets until our next show on Monday, what's the number one concern for traders? Is it just to do the old Sosnofian look at volatility? It's spiked, it's pulling off, it's a very round 20 number, fade pops and vol, and don't think about it.
I mean, I think it's for sure fade pops and vol, but I also just think I believe you're better to nibble on the weakest of the Mag 7 every time the market gets soft. I believe that the most reliable thing to do has been to look at the Mag 7, look at the weakest hand in the Mag 7. I still think it's Microsoft and Meta right now. And if you're not going to buy them, at least sell put spreads, because eventually, pretty quickly, the market solidifies, and the weak hand of the Mag 7 comes back around the horn.
Ilya, you and I will be on last.
My point is just this is always this is an opportunity. Excuse me.
Ilya, you and I will be on last call tomorrow, so kind of like a mini overtime on Fridays now. That's nice. But until we get there, overtime is out of time for today and this week. So for Ilya Spivak and Dylan Radigan, I've been Chris Vecchio. Good luck trading. We'll be back in a few minutes because Ilya's sticking around. He's here for Macro Money. You're watching Tasty Live.
See you there, everybody.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Okay, cowboy, here's an earnings event. Keep an eye out for them when you open your trade. They're fast, they're loose, and they can take you for a wild ride. But that's no reason to steer clear, because you can be your own personal earnings event if you take the bull by the horns. What makes earnings events so special? Before the event, people will start guessing how the stock will move once the earnings report is released. That, in turn, makes the options IV rank higher. Like way, way higher. The nearer the event, the more the speculation, the higher the IV rank. Then right after the event, IVR goes the way of the buffalo. If you sell high premium options right before the event, when IVR is really high, you can take advantage of inflated prices and lock your profits when volatility disappears. Only if, and this is a big if, the stock doesn't move against you. If it does, well, sometimes you eat the bear and sometimes the bear eats you. Earnings events can hit you hard. They can also pay off big and fast if you play your cards right. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
The markets are in panic mode. Stocks are down. The dollar is down. Bonds are down. Crypto's down. It is a bloodbath out here today as the U.S. government reopens from its longest shutdown on record. So, what in the world is going on here? And which thing is the haven if everything is getting sold? That's what we're going to ask here on Macro Money. I'm Ilya Spivak, head of Global Macro here on Tasty Live. And we're going to try to make sense of what in the world seems to be going on here. And it is confounding, if nothing else, because typically you get a sense that this or that asset has emerged as a defensive kind of a venue amid whatever sell-off, but that isn't exactly obvious here. So let's take a look first at the way the markets performed today. And I took these values a little bit ahead of the close, so don't hold me to a few decimal points here or there, but you certainly get the thrust here. S&P down 1.7%, NASDAQ down over 2%. The 10-year up, the 2-year up, the rates there. So bonds are a little bit lower. Crude oil idling, gold down in this environment, off 0.7%. The dollar down, euro is up, yen is up. Bitcoin doing its amplified risk sentiment thing, albeit with less aggression that you might expect. If the NASDAQ is down 2%, you might have expected Bitcoin to be down more than just 3%, but nevertheless, there it is, also down. So as we look at all of this, it's perhaps telling to tell a story of two movements this week. The first is Monday, and the second is everything else. So obviously, we had a wonderfully rosy day on Monday. Stocks were up. Yields were up. Crude was up. Gold was up. Dollar wasn't going anywhere, and Bitcoin was enjoying a rise of over 2%. Again, not as violent of an outperformance as you might expect, Bitcoin versus NASDAQ, but nevertheless, there it is. And this was all around optimism that the Senate had struck a deal that would reopen the U.S. government, that that deal would get passed and sent to the House, that the House, with some grumbling to be sure, passed that along, the president would sign it, and then we'd get the end of the shutdown. So, woo-ha, everybody thought the risk is done with this part of the story. Now let's see what's happened in the 3 days since. And clearly we can see that rally was something of a one-off. S&P down, NASDAQ down, Bitcoin looking much more like its normal self here, whereas the NASDAQ is down over, or let's call it almost 2.5% over these 3 days. Bitcoin is down more than twice that. That seems to be more like it. Yields are up a touch. Crude oil is down a bit, but not a whole lot. Gold is still up on net, but clearly soggy today. Euro is up. Yen is not quite there. In fact, the dollar is probably holding up better today against the yen than most everything else in the currency space, barring for maybe the Aussie dollar, where it's actually up a little bit, because, of course, the Aussie tends to be very risk-sensitive. Risk appetite, obviously, is on the chopping block today. Just look at the S&P or for that matter, Bitcoin. And you see how the Aussie ends up rallying overnight with a relatively good jobs report locally, then getting sold off in the risk aversion. And so that's one of the few spots here, that and the Canadian dollar, where the greenback is actually managing to advance a little bit. So what does all of this mean, actually? Well, we spoke at the beginning of the week when all of this hand-wringing enjoyment was going on, and said, well, look, hold on a minute. Everybody is happy about this U.S. government shutdown ending, but we came into this week worried not about the shutdown. In fact, when the shutdown occurred, nobody really seemed to care very much as far as the markets were concerned. We came into this week worried about the Fed and the possibility that we're not going to get a December rate cut after Fed Chair Jerome Powell hit the press conference like a bulldozer after the October 29th meeting and said, hey, just in case you all thought that December is on autopilot, let me set you straight. Not only is it not a foregone conclusion, it's far from it. And going into this week, the reckoning on all of that was very clearly on display. Stocks were down, Bitcoin was down, yields were nursing aggressive gains from the prior week. So you can see the 2-year was digesting, but that's after a 2.8% rise. The 10-year was digesting, that's after a 2% rise. Gold rose, but that's after a massive 3.4% sell-off. The euro and the yen held up, but that's after taking big haircuts against the dollar. And risk seemed to be just catching up to what bonds and currencies had already done. Now, with that in mind, here's the new math from Fed Funds Futures on policy expectations for this Fed meeting that's now just about a month away. It's a 50-50 coin toss. The markets don't think the Fed has any idea what it's going to do, and perhaps the markets are, as ever, doing as the Fed, hence the sell-off. So the likelihood that we get the cut now just a hair over 50%, the likelihood that we don't get the cut, 48.5%. So this is ambiguity and confusion. And if we can see here, a month ago, the likelihood of the cut was 95%. A week ago, it was 70%. Yesterday, it was mid-60s, call it 63, 64. So we've had this relentless decline in the likelihood that the Fed is going to do anything this meeting. Now let's consider what the end of this shutdown means for how much the Fed has become better equipped to act. The administration is telling us, well, we didn't have anybody working at the BLS but for that one September CPI report, so I guess you're not getting October CPI report, maybe. I guess you're not getting an unemployment rate reading for October. Maybe you'll get an NFP reading. That's a different survey, but no unemployment rate. Who knows about PPI? Who knows about a lot of these numbers? And so the Fed is going into this meeting with a tremendous amount of fog. They were already bemoaning that fog in October, saying, and this was really Powell's sort of thrust as he spoke, this is what freaked markets out. And we can see here exactly what happened. We went into that Fed announcement with an upside gap because Treasury Secretary Scott Bessent met with Chinese counterparts over the weekend and basically said that when Trump and Xi were going to meet later that week, everything was going to be simpatico. That they were going to walk back whatever kerfuffle was behind this move right here. where China moved to restrict rare earth exports, and the president on this side came out and said, yeah, okay, 100% tariffs on China as of November 1st. So this was the walking back of that. And not surprisingly, it basically erases this sell-off and lands us right there going into that weekend, and then we gap higher because the thing gets done. In fact, at that point, nobody's really paying attention to Trump or Xi. Here's the Fed meeting. This is where the Fed takes markets that were ostensibly priced for perfection, or certainly looked that way, and says, actually, no. If your narrative was the shutdown doesn't matter, because of course by then it's already active, the shutdown happens right here. The Xi-Trump thing is not a thing. We found that out here. The third quarter earnings report for tech is going to be fine. It was more than that. It was quite good, but we still got this sell-off, suggesting the markets already had that much benchmarked in the price. So what went wrong? It was that the markets had benchmarked an autopilot Fed that was going to cut in October and in December, and Powell said no. And what we have today is more in that direction. And so perhaps it is then tempting to look at this and say, well, this ought to be some kind of a yields up, risk off kind of a thing. But that's not really what's going on either. If we take a look at what's happening with the dollar here, and again, we're looking at the euro as a stand-in for the dollar's overall direction, because if we look at the dollar index, the kind of go-to basket, it is overwhelmingly tilted to the euro. It was created before there was a euro, and so tons of its legacy currencies are now just euro, and so that basket is basically just the euro upside down. So here's what we see from the dollar today. It's clearly not benefiting from a sense that there is less scope for rate cuts, as one might expect. It's also clearly not benefiting from the risk aversion that you might expect would be supporting the world's most liquid currency, and usually does, especially when the violence in stock markets is this extensive. So this doesn't look like the market's going, oh no, monetary conditions are going to be tighter than we want them for risk taking, sell risk, go to cash. It also doesn't seem to be one of these debasement trade ideas or whatever else of that ilk, because if that were the case, we would be selling bonds and gold would be soaring. If in fact there was a loss of confidence in the U.S. sovereign, if there was a loss of confidence in the dollar as the global reserve currency, or as the currency of commercial transaction global belief, if those things were back as they were in late March, early April, there was very much a kind of sell America vibe out there around Liberation Day and the foam board and the ambiguity that it represented when the president pulled it out with all those tariff rates on it. If that were back, bonds would be sinking. They are not. They are still well within the ranges, narrow though they are, that we carved out since the beginning of this month. And gold, it isn't doing its anti-dollar, anti-U.S. assets, anti-government fiat thing. It's down. It's not down a lot, but it is down. And so that's clearly not what's going on here. So if it's not a pure, oh no, the Fed is going to over tighten kind of a thing, if it's not sell America, well, what is it? What is it that we're looking at here? And it seems like It's just a reflection of the fog that then ends up in Fed policy expectations looking like a 50-50 coin toss. The markets are apparently channeling what they think Fed officials think, which is not much of anything apparently, because they don't know what to do. And they don't know what to do because they don't have economic data to know what to do. And so, as this shutdown ends, the hope was there would be this flood of economic data that would come out. And suddenly the Fed would know things and would have the benefit of a month's time between now and the announcement to distill those things into policy expectations and to give us an updated summary of economic projections in December, which it is due to deliver, and that this will have some sort of insight in it. Well, the probability that any of that is happening is diminished today because the administration is telling us that there isn't going to be robust economic data. The Fed is having to parse conflicting forces. We heard from Powell that they don't know what to do with those conflicting forces, having given the softening labor market a little bit of a fillip in September and in October with those rate cuts. And it's perhaps less about the Fed knowing that it's going to or not going to cut at this meeting and disappointing or encouraging markets with whatever decision it makes. It's more about the Fed doesn't really know what it's going to do because the outlook is so clouded. And so in that context, perhaps what we're looking at is just speculative appetite hitting a wall, where anything that's done anything that looked like gains, be it stocks, be it bonds, be it the dollar, be it gold for that matter, over the past 3 months or so, all of it is getting sold. And so the markets aren't so much making a decision that this or that pocket of the asset universe is going to outperform so much as they're saying, you know what, we're not comfortable making a bet here. And so we're just going to retrench. We're going to back away from a lot of the exposure that we had on. Here's what the Fed has in its summary of economic projections as of September. They had 3 cuts for this year, narrowly. Thank you, ... from newly minted Governor Stephen Miron, who still comically is technically employed as the chair of the Council of Economic Advisors at the White House, though he is ostensibly on leave there, and will return to that position at the start of the next calendar year again, maybe. And so he, of course, sort of earnestly believes in what the administration is saying. Not surprising, he's a part of it, and a big part of their economic thinking. And his perspective, as we just heard again yesterday, is overwhelmingly dovish. So not surprising that his dot in the forecast here is going to tilt the overall average. So we're very narrowly calling for that third cut, where really most Fed policymakers are really looking for 2, or were looking for 2 when this September forecast came out. We only have 1 cut on the menu for next year. If we look at what the markets themselves have baked in, obviously this year has become, or the rest of this year, this one meeting has become a coin toss. But for next year, the markets are at 66 basis points. That's still at least 2 cuts for 50 basis points and 16 out of 25 basis points in the direction of a third, so better than 50-50 odds. So the markets are already saying the Fed's going to have to do a lot more. And if they are already of that mindset, and there's a continuing resolution here that's very short term to reopen the government that might well give us another shutdown in January and might derail economic data even beyond this hiccup here, well, then the resolution of what the Fed is able to do versus what the markets think it should do, that doesn't get any more clarity. In fact, ambiguity and confusion may well persist well into next year. And obviously, that is not what the markets want to see. And so, as we look at how this has panned out, here is that Fed meeting in October where Jay Powell gives that explosive press conference. We can see stock markets haven't gone up since then. They've basically topped, cooled down, and are now waiting for next steps, but whatever rally this was has been arrested. For the dollar, we were rallying even as the rate cuts were occurring, but sentiment now seems to have turned, again, around ambiguity more than conviction. And the dollar is selling off because, of course, it was going into this ambiguity in a trend that was pointing higher off those lows in mid-September. And, of course, those were just a retest of the lows that we set even earlier in July. So the dollar here had a bit of a run behind it before it got sold off. Gold obviously had a bit of a run behind it before it stalled. Stocks had a run behind them. Bonds, too, over the past several months. We can see that right here. Even though we've pulled off since that late October meeting, the trend in bonds has favored gains. So as we look at all of this together, it really does look like the markets are just saying, well, look, if the Fed doesn't know, then we don't know. And if we don't know, we're just going to back it up here and have less exposure. And that seems to be what is occurring really across markets here today. So from an exposure perspective, I've done a bunch of adjusting here. I took profits on silver earlier this morning. That seemed to run into a wall, and the speculative dynamics seem to have suggested it's time to back it up there. I flipped over the last remaining bit of my long dollar exposure. Of course, as we've been talking about on the show, I started to peel off that exposure on Friday, getting out of my dollar long against the Canadian dollar. At the start of this week, I peeled off the Aussie dollar. And now, not only have I taken off the shorts on the pound and the euro, I flipped them over, though not fully. I was short 3 contracts each going into this market. Today, I am now long 1, as we can see, a piece. It looks like maybe there's more room for the dollar to weaken, at least in that space, although I am still short the yen on the spot side. The yen has not made the kind of move that these other ones have today, so I'm still sitting on dollar longs in that space, and so I'm kind of evened out on my dollar exposure. Still very much short risk, which seems to be working today. I had these puts in Bitcoin, the puts in S&P. These were largely put on in late October, but basically with the Fed announcement. It looked like that was going to be a big risk-off catalyst. We've talked about it extensively here, and so that's still very much in play. In fact, I've held this Bitcoin spread now for almost a month and a half, 2 months, whereas SPY I've held now for about 2 weeks, and so we're looking at that exposure here still kind of starting to work, and so I'm going to hang on. Still holding the long end of the bonds. They're not exactly working today, but they're also not falling apart, so we'll see how this goes. And short a little bit of crude oil, which manages a very narrow bounce today, but of course yesterday had a massive sell-off, so this is overall working, and see how it goes from here. And that is macro money for today. As ever, we are here right after overtime, Monday through Thursday. That's a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things might go therefrom. I'm also writing for the News and Insights portion of tastylive.com. I'll have a piece out there later today talking about all of this mess that happened. And I'm also commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Macro Money is back next week, but I'll be on air on Tasty Live all day tomorrow. Futures Power Hour with Chris, then Last Call with Chris. So come see as we try to make sense of how this week is going to end. In the meantime, happy trading.